Good morning. All right, futures are off again this morning. A lot of negative gamma below, which means support isn't down until we get down to about 6,300. Okay, a lot of red down here. 6,400 below us right now. Potentially a bounce area. That's longer dated calls. We'll wait for 0 day to come in after the open. Good morning. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Friday, March 27th. Coming into the end of the month, JP Morgan collar next week on the 31st. Rolls out to the next quarter. There is a possibility of a pretty decent bounce here. Make sure you read through the notes this morning. Potential for a 2 to 3% move lower being figured in. Yeah, that 6,400 is still there. All right, we're getting ready to open. Got about 6 minutes to go. I'm gonna grab my coffee and I'll be right back.
like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Marley Caden, live from Chicago. We're tracking market movers, earnings reactions, and what traders are watching next. Stream Schwab Network, live at schwabnetwork.com.
Trading with Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library full of online videos, webcasts, and e-course courses, all crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Good morning. Happy Friday to you. This is Opening Bell. We'll count you down for chart trading. U.S. stock index futures are looking to the downside. We've had the pushback on the deadline date on this Iran war to April 6th. In the meantime, oil is higher. West Texas and Brent crude, and Sam Bonus is with me now, watching a bit of everything as well. Good morning, Sam. Bit of this, bit of that for this Friday. Obviously, we typically see a lot of de-risking going into the weekend. Nicole, we've seen that since the Iran war has obviously started. So waiting to watch to see if that certainly is the case today, as we are on the back foot this morning with higher oil. Brent at 110 right now, WTI at 96, the dollar pushing higher as well. You've got the 10-year yield sitting at 4.47. This has been a global story. Obviously, we saw those European government bond yields pushing higher overnight as well. You had over in Germany the 10-year hitting its highest since 2011. So this is a global repricing of the rate story as well. A lot of this has to do with expectations of fiscal support for the long-term inflation.
All right, Netflix is on the move. Netflix.
Overnight, and I mentioned that obviously because, Nicole, yesterday just after the Wall Street close, we did get that Trump Truth Social post extending that Iran deadline.
We got about 2 minutes to go. 2 minutes to go.
Headed into the weekend because there had been so much discussion around the fact that obviously this would be the end of the 5 days that he had initially given. He's now pushed that out to April 6th. But at the same time, you have these headlines, Nicole, about the Pentagon potentially sending an additional 10,000 troops to the Middle East. So we continue to deal with these conflicting headlines, not to mention, obviously, then you've got Iran blocking 2 Chinese ships from the Strait of Hormuz. That's very rare because a lot of the ships that have managed to get through that waterway have had Chinese flags on the back of them. So there's so much to take in right now, as I mentioned, but no doubt.
All right.
Higher yields, higher oil, pressuring stocks as we head into the weekend. We're coming off the worst day of the S&P, I believe, since the start of this conflict. Obviously, looking at the flow of funds, it's been a tough 60-40 portfolio, you could say, this month. So we've seen equity funds, the biggest outflow in 13 weeks, according to some of the data this week. Long-term bonds have had their biggest ever outflow since March 2020. So we're seeing this degree of rotation. And obviously, some of that has been happening under the surface with some of the bifurcation we've seen in technology, for instance, between the hardwares and the softwares. And then obviously you have these S&P sectors also in correction territory. Like
All right, let's get ready.
Like communication services and technology as well. So everybody is just really headline driven at the moment. Obviously we've got
Okay, Netflix coming into the open. Netflix.
feeling about kitchen table issues with the potential for higher prices down the road. Yeah, I was looking forward to that since Monday. I just really, okay. I want to see that number for some reason. You know, next Friday we'll have non-farm payrolls, so I'm looking forward to that as well. But sometimes I think these can be very telling. Yeah, and I know you're focusing on some of the tech chip stuff. Yeah, as I mentioned, we continue to just see this rotation. Yeah, I mean, we're seeing the SMH, we're seeing the IGV down at a pre-market right now. Obviously, it's been a case of, you know, one day, one.
Okay, we're about to open here. Seconds away.
See this sort of ping-pong match playing out between the softwares and the semis. We continue to watch that software B semis
Okay, we're open.
about with this short-term oriented money that's sort of seeing these sort of fits and starts.
Okay, watch for shorts to cover just to get started.
Extreme low tick alert. Low tick alert minus 800.
Okay, it goes Apple. Apple popping. Whoa, there goes Apple. Apple on the move. Apple with a bounce. A little late there, Schwab. A minute and a half. Schwab is really delayed. Let's see. 280. Apple, the call wall's at 280. Put wall, we're right at the put wall right now. Just above it, 250. Okay, we're rolling over now. S&P futures.
The Dow is down 288 points, and the Russell is losing more than 0.5%. And you're seeing, as far as the sectors are going, mostly down arrows. Just a couple of sectors trying to squeeze out the green here. Utilities and consumer staples are the only ones with green arrows today. Surprisingly, energy just sort of sitting on the unchanged line.
Okay, Netflix looking strong.
Extreme low tick alert.
Okay, Netflix on the move. Netflix had trouble here yesterday. Netflix had trouble at 96 yesterday.
About 40% upside here. Bottom line, they see Google emerging as the true AI winner, and that's something that we talked a lot about last year. It's kind of taking a backseat this year amid the political risks that are driving down the market. But they think that Alphabet Google could emerge as the AI winner. The key argument, Google has
Futures backing off again. We're down 44 handles on the futures. If you're just joining us, I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Friday, March 27th, coming into the end of the month. Next week, we got the JP Morgan collar roll and April Fool's Day. New York Fangs. Apple did pop there for a second. Starting to see some profit taking. Tesla pulling back.
Low tick alert minus 800.
Okay, let's take a look at VIX. VIX is at 30. VIX is 30.
Government shutdown. Now, the deal does exclude immigration enforcement, so it breaks that deadlock after Democrats have been pushing for reforms to ICE. The shutdown has strained airport operations, thousands of TSA workers working without pay, hundreds quitting.
VIX is at highs.
The funding package now heads to the House of Representatives, where lawmakers are certainly hoping to restore obviously, the next step is the House, and the expectation is that there will be swift approval, and the hope is that there's swift restoration of
Okay, all the New York Fangs are pulling back.
Goes to the House today, as you said, today, Friday. The bill that came from the Senate was approved no roll call even, but it moved through the Senate, and part of that was because it did not support the immigration enforcement, right? So it was really just saying the TSA, and that's what moved it through more swiftly. I think they also
Okay, so the number of stocks moving higher this morning.
the TSA agents in order to address this emergency situation. It does feel like between this and that, by the end of the
Low
day
ticker at
today,
-800.
today must be better than yesterday, right? And tomorrow will be better than today if you are going to the airport.
Okay, we continue to move lower at the moment. 142 stocks advancing out of 500, 27 on the Qs, 300 on the IWM. Okay, let's see what stocks are moving here. Roblox. RBLX Roblox. No, that's lower. Let's see what's working today on this down day. Dow Jones, Walmart. Still in this descending pattern. Walmart needs to get back above the 50-day. Getting close. Basically a descending channel. This tends to break to the upside. RSI is rising. Walmart. Micron bouncing. Micron's bouncing. Thanks, Frano. Micron looking good here. Netflix just hanging here. They're raising rates. Subscription rates being raised. Prices said funds will be reinvested in content and experience.
That is a little bit disappointing. It's a cautious signal. Is it really going to be anchors away here right now? It looks like there is some caution here. Now, in terms of the most recent quarter, the strength was driven by higher ticket prices.
Netflix still fading now. Netflix fading.
Passengers and consumers are on the ships. They are paying more to be on them, and they're increasing their spending while on them. Margins did improve this most recent quarter despite some cost pressure here for CCL. Now, again, for the Q2 guide, it looks like there's some grace right now in terms of investor reaction. There's a stock ticking a little bit higher, but it is a meaningful miss, right? There is still some cost pressure that is lingering here, possibly more normalized demand. One of the things they did call out is macro factors, saying we can't control this, they can't control the geopolitical risk, and we know, the airlines, the cruise lines have been under some pressure amid these higher oil prices. That's a pain point for the industry as well. So it's something that people watch on. The macro sensitivity, fuel cost volatility, Nicole. All right, well, thank you for that. I mean, and look, Carnival's a great performer. It's up 21% in 1 year. I know it's but versus Norwegian, which is down 2% 1 year, and the Elliott story was that they are moving forward with the board changes because of their agreement with Elliott Management. Thank you for that. You brought us the one up arrow in all the stories, Diane. Thank you. And also, I know you know this, that we're down again. Will be because of our protein quickly looking. Longest losing streak. Ford stock, say
NYS,
2022.
RZLT,
We close to the downside today. Pressure
AXTI,
is on and
VSA.
continues, so watch for that. Simeon
TURB.
Hyman is standing by, talking about the current market. He has some ETF stock picks for you. Much
GCTK.
more to come. We'll be right back.
GCTK. CDT may rise in 10 seconds.
ATV.
ONG halted down. SNXX. SNTK.
VSA.
AXTI. MUU.
TURB. GCTK.
GCTK. CRCD. ADMA.
While others
SOXL.
recap the news, I help you read between the lines from what's moving markets to
AXTI.
what's next. With
MUU.
short takes and market
KOPN.
know-how. Follow me on all social media platforms at
ARTL may
Diane
resume in
King
less than a
and
minute.
connect with me on
IZM.
LinkedIn for more.
LTRN.
If I'm last year, my dad had a stroke, big shock. Didn't see this person that I've always seen as core for my
CRCD.
family.
Low tick alert -800.
Had a stroke. Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time. Family
KOPN.
life, financial consultant.
VSA.
There
GCTK.
to answer any questions I ever have.
NCO may resume in less than a minute.
EIQ.
Actually cares.
GCTK.
Live insights, actionable data, and market-moving analysis. Schwab Network connects the headlines to the why in real time. Watch
CRCD.
free 24/7 at
ARTL may rise
schwabnetwork.com.
in 10 seconds.
All right, folks, Friday here, and we're seeing stocks to the downside with the Dow down nearly 400 points, 45,577.
VSA.
And we're talking about the
ARTL.
longest losing streak since
ARTL.
2022 for the S&P
RDC.
500. Simeon Hyman follows
KOPN.
that. Global
BLIB may resume in
Investment
less than a
Pro
minute.
shares, and historically, we're seeing obviously a notable losing streak, consecutive weeks of losses, 5 of them. What do you think about this war in the market?
IZM.
You know, I had one guest who said, "Oh, I'm not
ASTO
doing
may
anything
rise in
until
10
the war
seconds.
ends, and then I'm gonna be
ARTL
fine."
halted to the
What do you
upside.
say?
We know what the history is. And let's park last year because that was a very short
ARTL.
conflict. But Gulf
VSA.
War 1 and Gulf War 2
ARTL.
were protracted. And the market within a year was up 30%.
FED.
Not from where it ended the war, but from the beginning of those wars. So
ONC.
we know that markets recover very nicely after military conflict. It doesn't, number one, necessarily make it any easier to get through. Number two, there are no guarantees. But also, number three, it doesn't
BLIB
mean
may
that
rise
you
in
don't
10
want to
seconds.
do anything to manage through it because we know the rules of compounding. If you
ARTL.
make those losses a little bit smaller, that rebound is even more
ARTL.
valuable.
So you're buying on the dips.
CRCD.
Netflix still not following through.
Been buying in these 5 weeks, right?
I think
We got rejected yesterday, same level
says it is very
as we did last week. Need to get through this level. It's obviously pretty
some of the safe havens that people count on.
pretty important. There's people there at 96.
RGTZ.
Apple looks like it might keep going. Apple, thank you, dollar. I'll take a look at that as well. Junk bonds,
What would you recommend? I know you have some ETF picks for us as well, but just in the diversification, what would you have allocated in certain ways?
okay, junk bonds down here at the lower Bollinger Band.
But here we mean very specifically the companies that own infrastructure assets, not the people that build them. That's a real cyclical thing.
RGTZ.
We need to see investors coming in and buying junk bonds. Doesn't look like they're interested at the present time.
And the companies own the assets. They own oil and gas, transportation, cell towers, airports.
Back in March
This year,
2025, we had that pullback, pretty significant pullback in junk bonds due to tariffs. Scared the market. Junk bond traders stepped away, and consequently, junk bonds dropped off. This is a measure of risk on, risk off. Currently, they are risk off. so many signals telling us to just sit back and wait, collect cash where you can.
The durability is important. Price is important. You saw half the price to book to the S&P 500. Distinction.
GLND.
Might get a bid,
SNDK.
but these are the owners who are more
SLND.
stable. So
MUU.
even if there's gridlock in
GCTK.
London, then you're in a good spot.
SOXL.
Interesting. Let's talk about the
UGR.
Coindesk ProShares Coindesk 20
VSA.
crypto ETF. Tell me about that.
Look, in this environment, we know that gold has not done its job in this military conflict. But meanwhile, yes, Bitcoin is off a couple of percent this morning, but since the beginning of the conflict, well into the green. Our suggestion is take a look at KRYP Crypt. That's a diversified approach to the crypto space, and it follows the CoinDesk 20 index, which is 20 of the largest cryptocurrencies. So it's an opportunity to have a one-stop shopping, diversified approach to crypto. By the way, it reconstitutes rebalances every quarter to that space that changes, and you want that dynamic.
Understood.
GCTK.
And last but not least, ProShares Genius Money Market
MUU.
ETF. How does that work?
SOXL.
If folks want to have some dry powder, or they want to keep some cash at work while it's staying safe for near-term needs, you want to put it to work, IQMF is our Genius Money Market ETF. It's the largest money market ETF, and it complies with the Genius Act, which means the stablecoin guys can use it for reserves. But listen, if you're not a stablecoin issuer, it tighter rules around
SLND.
market, more conservative, no agencies and shorter maturities, so it can be a very nice place to keep your cash at work.
I
ARTR
mean,
magazine in less than a
ETFs
minute.
have gained so much in popularity. U.S. record year of inflows for ETFs last year. Up to a few weeks ago, some of the conversations that I was having was record inflows again. I know the war has now sort of changed things maybe, but do you expect by the end of the year it'll be another record year of inflows into ETFs? I mean, you clearly love them and think they're a great way to go.
Well, folks will put their money back to work.
Right.
And there's still cash on the sidelines. There was cash on the sidelines before the military conflict. So I think those flows will continue. And it's a very effective mousetrap to be able to trade.
Okay, wait until around 10 o'clock to see if the markets are going to find a bid or not,
Really has become
or if we're going to continue to plunge lower.
vehicle for most of us.
The diversification strategy is the way to go. It's what we've always learned to try and navigate through volatility. But the big picture, do you feel, I've seen several year-end targets, 7,600, 7,700. A lot of the banks have come out with a lot of year-end targets at or around those levels. How do you feel the year might be ending? Is it going to be higher than where we are today?
Well, that's where I go back to that history of Gulf War and Gulf
Yeah,
II.
yeah.
I mean, within a year, both instances, the equity markets were 30% higher. What we like about the equity markets coming out of this military conflict,
Apple pushing a bit higher. Apple.
if you look at, yes, it's true, back in Q1 last year,
Right.
the
Apple's on the move.
4% earnings growth, and that was down from 12 in Q4. But guess what? Other sectors have picked up, such that S&P 500 earnings growth has maintained low teens the whole way. That's a pretty good.
Okay, Apple looking really good here.
Quickly, the Nasdaq is now in correction territory. It's more than 10% off of its high. Your opportunity in tech. Do you believe quickly?
This is not the same tech of 2000. The fundamentals are stronger, the earnings growth are stronger, and the comparative earnings growth still stays.
Okay, so we're risk off at the moment. So if you're doing anything, right now I wouldn't be buying puts at the low of the day. What I'd be looking for is a bounce. If you're thinking about puts, let's see if we can get a bounce first, enter at a higher level. I'm looking for a reversal. Looking for a bounce. What's AMD doing? AMD sitting on the 20-day. Looked really good on Wednesday. What happened? What happened? Everything got sold yesterday. People just got out of semiconductors. Didn't make a whole lot of sense. but it is a risk off market. People are collecting cash where they have it.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that can shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network. Welcome back to Opening Bell. Stocks are to the downside.
Okay, AMD continues to look weak. Apple looking for a follow through. Apple building plants here in the U.S. Trading at the mid 20s multiple.
We're not in correction territory yet for the S&P, 8% off the high. You can see there up at the top. From the lows of last year, which were exactly a year ago, we're 33% higher still. And over the last 1 year of trading, we're still a nice move as well. Now, the one thing I would say when you're looking at this particular chart is I've set it up.
$600 billion investment plan with Apple building facilities here in the U.S. for production. Partners, Cirrus Logic, Bosch, Quinity Electronics, and TDK. All right. Apple's still looking pretty good here.
Again, that we're working our way down. We're almost oversold in the RSI. The next real significant level of resistance that I see on this chart is around 6,300. So I don't anticipate that will be in play today, but if this continues into next week, Nicole, we could be looking at that 10% mark or even more.
Yeah, 8.2% off the high.
S&P very weak. People are probably very nervous, I would think, most people. Okay, pharmaceuticals had some sort of bounce yesterday, right? Okay, Merck continues to rally. Merck. Okay, Merck continues to rally, trying to get back up to the highs here. Pharmaceuticals, defensive. I do have 125, 135 call spreads on Merck that expire in June. Okay, Micron did rally a bit there, but still a doji on the daily. Oracle lower again today. Oracle just can't get out of its own way. Merck. Okay, Apple, a little profit taking at 255. Apple. Netflix, sell the news.
Now, though, has a 3.3% gain. Some other winners in the S&P 500. Brown Forman, of course, with that deal happening there. That's up
Low ticker minus 800.
week and still up here today. Entergy, the best performer. Halliburton also.
Okay, S&P 500.
You're watching, I mean, the 10-year bond yield, the Dow
Okay, we got some support at 6,400, potentially. A target for now, 6,400. S&P cash.
As a business, but looking ahead to next week, what I would say, Nicole, if you were seeing, hey, Good Friday, market holiday, only 4 days, maybe it'll be a quieter week. I don't see that coming with all that's going on in the Middle East. You also have jobs data throughout the week. You'll get consumer confidence, ISM manufacturing. It's a lot of stuff next week that can really move this market.
Yeah, look, I was just looking at some of the upgrades today. We're looking at Pinduoduo with an upgrade. You have Nokia and Ericsson with some downgrades. We're waiting on the number at 10 a.m. And President Trump on social said there's a pause here and push back to the April 6th date was by the request of Iran, and that talks are going very well. So he put that out, and I saw that transferring here. Yes, it's going right on the headlines here on the main board right now. We'll stop some of that pause period of energy plant construction by 10 days to Monday, April 6th. And he was saying that that was April 6th at 8 p.m. and that was by the request of Iran. All right, thank you both, Jenny Horn, Alex Scott, great to see you, and thank you, friends, for being with me here.
Okay, futures. A lot of fear in the markets, people selling.
Join me then right now down there, 432. What do you trade last night?
Crude oil.
Low tick alert minus 800.
RCD. Energy may rise in 10 seconds. RKLZ may rise in 10 seconds.
Okay, S&P still lower. Crude oil. CL crude oil. Crude oil futures edging up near $100.
No overdraft fees and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location.
VCS may rise in 10 seconds.
Accounts is easy. Cash flow to your brokerage account is built in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account
NXTT.
built for investors.
SOXS.
VSA. GCTK.
SST.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered.
ELTZ.
Get inside the minds of pro traders.
But one is that they're getting a higher rate of change.
Find it really interesting that back in
NXTT.
the Obama years, they spent 45 months above, Brent spent 45 months above the $100 a barrel mark.
I think one of the most important
Brent.
things is you're making a play a risk-defined way here going into earnings. So that would be a further downside.
Just sitting there waiting for the markets to continue to move lower.
And trusted financial journalists streaming live on demand. Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
NXTT. SOXS.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 20
Crude
years.
oil continues.
Houses,
We need to get that to back off.
children, they've always been there for us.
What's VIX doing? VIX at closing in on 31.
Stay connected to what moves the market.
If you don't already have puts, I wouldn't be buying puts down here. If you got to buy puts, do it the cheapest way possible. Do like butterflies, something like that. JP Morgan collar 64.75. We're well past that now. Okay, University of Michigan sentiment coming out at 53.3. 53.3. It's still pretty low.
Welcome to Morning Trade Live. Happy Friday, everybody. I'm Sam Barnes, the line from the floor of the New York Stock Exchange. We have plenty to hit on both here and abroad over the next hour. So here's a look at what is coming up. We will examine the impact of increased volatility due to the Iran war and the impact that's had on markets and where to find pockets of opportunity in the current environment. So over the next hour, we'll have example trades for Netflix and Costco. Netflix announced its first price hike
may
since
rest in 10
February of
seconds.
2025, and Costco shares are up more than 15% in the last 3 months. Let's take a look at where markets are trading around half an hour into the session, because obviously we're seeing continued de-risking going into the weekend, even though President Trump announced on Truth Social just after the Wall Street closed yesterday that he would be
VIX still pushing higher. VIX.
deadline now for 10 days, taking us to April 6th. That is failing to spark some optimism here as we continue to hear lines coming from the Iranians as well, and of course this expectation that we could see
Low tick alert minus 800.
So for the S&P 500 now distancing itself from 6,500, we're at 64.13 now, or down around 1%. The Nasdaq 100 losing altitude as well, 1.3% lower. The Dow shed almost 500 points this morning to Russell 2000, losing 1.2. So we are on track for a 50-weekly loss here as we continue to lose some.
Okay, we still got 136 stocks advancing. Let's see what those are.
Let's also take a look at the European session as we obviously approach the close out in that part of the world. We've got some caution there. The FTSE just down fractionally. Not as big losses as we're seeing in markets like Germany for us today. The Nasdaq is down 1.5%. We've been keeping an eye on some of those European government bonds, which continue to sell off as well. You've got the German 10-year, its highest yield.
Okay, so stocks that are advancing on the S&P 500. Molson Coors. Okay, nice looking turn here. Molson Coors, nice long setup. Molson Coors, nice long setup. Stop underneath 41.
Right now, we've got Brent at 110. So that is very much putting the pressure, not helping stocks today as well. Bitcoin losing a lot of steam there, down 3.5%, 66,000 and change. So that's the setup for this Friday as we approach the weekend. Of course, anything can happen while the markets are closed, and that's why we've typically seen this performance on a Friday, despite the fact that President Trump seemingly tried to calm market jitters with that extension of that deadline yesterday.
Molson Coors coming off the low. RSI overbought right now. Molson is on the move.
Particularly because of how people are feeling at the pump about some of these kitchen table issues. We've just got the survey out from UMich. Walk us through what you're seeing.
Well, I mean, this is soft data, so you can see that the adverse impact is going on since the end of February.
All right, I bought some Molson Coors shares here.
Published 53.3. That was down relative to the previous month at 56.6, but also missing the consensus estimates, which were already expected to be down to around 55.5. But you can see also that in inflation expectations, they've jumped about 40 basis points to 3.8% from 3.4%. Again, they were forecasted to be
Additional stocks.
relative to the previous month at 3.4.
Constellation Energy. Constellation Energy. Nice move on Constellation.
Everyone seems to be in line with what's going on with oil prices moving higher, and it's also again reflective of what's going on in the bond market. You mentioned the 10-year yield. The 2-year yields are softening just slightly today, but around
Constellation Energy moving back above
increase as a result of what
the 50-day.
inflation push standpoint.
Campbell's Soup, CPB. Campbell's Soup turning off the low.
So that really gives you an idea of that end of the curve, as you say. I mean, obviously we've seen that as a global story that's been playing out everywhere from Germany to the UK to Australia as well. Much more sort of hawkish sounding central banks with some of these inflationary pressures. I suppose the big question is, what we're going to see on the fiscal side, as far as, government stepping in to support what is now looking like potentially shaky growth forecasts with some of these stagflationary signals we're getting.
Campbell's Soup, nice defensive play. CPB, CPB. Coming off the low, Campbell's Soup.
After what had been a pretty tough day for markets, it seems to have failed to spark some optimism now as we go into the weekend. Just walk us through what you think that means and some of the other headlines which may be weighing on sentiment today.
So, I think, let's look at some things from a half question standpoint, at least from a sentiment standpoint. You go back to April of last year, sentiment was actually quite a bit lower. So we're not actually at that level as of the tariff scare last year, April, as we are now. So that's positive. So it looks like to me, at the very least, that consumers expect this to pass. But if you look at the markets, interesting enough this week, the S&P is now, at least right now, trading below last Friday's low. So again, if you look at the 50-week moving average, it's trading below that level. And that could, again, add some more pressure into the next coming couple of weeks. But the challenge really lies, and I think this is the consensus out there, that everyone expects this to pass. That actually might be a little bit dangerous in this environment. In other words, everyone is ready and not selling as much as they would like to or you would expect them to. It seems like there's a institutional support of this market, but again, everyone's on one side of the trade. There doesn't seem to be a aggressive selling going on. So we're in a rolling correction, is how I describe it. So it's a really bad correction because it's just slowly grinding to the downside with volatility upside. The challenge really lies is going into the weekend, position traders probably don't want to hold positions unless things change, which they can on a dime, because we know a tweet or some sort of comment from the White House.
Campbell's Soup, turning the corner.
Some more clarity on the war, but also it could come about from
Apache continuation. Apache continuation. The energy stocks doing well. If you're still in ExxonMobil, wow, these stocks are just going crazy, crazy. CVX, Chevron, ExxonMobil, ConocoPhillips.
Attacks on oil infrastructure in Iran.
Right, and after that, I mean, we broke that on Market on Close just before we wrapped things up yesterday. And I've been looking at a lot of the commentary following that, saying, is this a taco trade? Because they have been good for the markets, but that doesn't seem to be the case so much. And, maybe it's because of some of the conflicting headlines, the expectation of more troops heading, obviously, to the Middle East as well. Fascinating journal report on Iran actually blocking 2 Chinese ships from Hormuz, which is pretty rare, given that if you've had a Chinese flag on your ship, you've actually been, for the most part, allowed through. But yeah, it's an interesting market given what you've just laid out. Binary risk, isn't it, George? I mean, it can de-escalate as quickly as it can re-escalate. You mentioned corrections in that territory. You've got S&P sectors like financial.
Low tick alert -800.
Okay, looks like we're going to continue to move lower. All the energy stocks are doing well.
Well, I mean, if you look, I'm just looking at the term structure right now. The term structure is relatively flat, looking at 9 to 30-day to 90-day volatility. So again, that speaks to potentially some sort of a pivot back to the upside in very short order. So that's the challenge of saying, hey, I'm going to attack to the downside and be a bear, because any tweak can change the outcome of this market. But again, the market rolling over, at least right now, as of things are trading so far, there's a possibility we end up near the February levels. Again, prior to the
VIX still showing strength. VIX.
that's a technical shelf, at least on the market. But again, unless there's some reprieve, this market's still going to be relatively challenged.
3 weeks ago, we hit 35. That's possible again today.
Compared to last week, that the markets have not been, receptive. Plus, I think the endogenous factors are still out there, and that includes, the private credit risk, which I've talked about quite a bit. That there's no such thing as sequestration of private credit. It's baked into the banking system, it's tied to the banking system. That you can create an asset liability mismatch. Plus, looking at the memory manufacturers, Micron and Sandisk, they're up a little bit today, but they've been down significantly over the last couple of weeks, and the big mega cap names like Microsoft and Oracle have been really rolling over.
Bitcoin not getting any kind of follow through, just moving lower. Bitcoin. Campbell's soup.
That's endogenous, but again, you throw the exogenous factors, tariffs, war, it's just too much. And I think right now the market is telling us this, but again, it's tough to be short because any outcome could be positive to reverse this market higher.
I was speaking to some of my guests about that as well. I mean, being capex up to the eyeball in a market like this, when you have a potential for an
Energy transfer. Entergy ETR. That continues. Nice bounce. Top of the S&P 500. Albemarle trying to break higher. Halliburton, another one of those energy names. Halliburton breaking higher. Halliburton. Halliburton continuation. This looks like ExxonMobil a week or so ago. ExxonMobil looked very similar coming out of a squeeze. A week ago. 1, 2, 3 weeks ago, we started to come out of the squeeze.
I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
NXTT.
Okay. Firefly, that one tried to break out. It's still trending back to the 9 EMA, looking for a bounce. Stocks on the watch list: Apache, Chevron, Devon Energy, all of those following through this week. Vistra Energy, ExxonMobil. Let's see what Vistra looks like. Vistra Energy. Okay, Applied Materials. Back down to the 50-day with Micron. Inside day, Micron looking for it to get back above 400. Look at the 50-day, looking for a move back above the 50-day eventually. The banks, Morgan Stanley, back to the 200-day. Goldman Sachs. All right, Goldman Sachs back to the 200-day. Netflix announcing they're going to raise rates for subscribers.
theme here, but Datadog is down about 8%. Some of these cybersecurity names, software names are getting hit today. It seems to be perhaps around the Anthropic headlines with the release of new models there. So Palo Alto, CrowdStrike down in the vicinity of around 7.5%. And you've got Coinbase, which is getting hit hard today. And that is, of course, as we track crypto prices lower as well. Remember, Bitcoin was trading well below that 70.
Okay, Oracle squeezing. Really need Oracle to get this stuff together. Lower again today, Oracle.
Happy Friday. Long time no speak. It's nice to have you on the show. Look, you say it's a tough market to trade in right now. Pretty confusing for investors. So what do you do?
Hey, I'm great to see you. It took too long. It is a very confusing time for investors. With all the headlines, and I think that it's kind of a risk off, for everything, really. As George was saying previously, your previous guest, that not only will oil prices,
Apple looking for a bounce. Follow through on Apple.
other things that are out there, such as the AI scare and also, private credit. And so I think a lot of investors are being cautious right now. Now, that being said, I'm fairly bullish.
Yeah, and speaking of investing time frames, let's go take a look at TRBCX. Okay, so we're down more now, 15% or so.
I think there's still an opportunity for that to happen, but the fear now is that the Fed's not going to cut or cut much, and with inflation scares again, so it's a little bit like the playbook from a few.
Okay, we're getting close. I would think we're getting close. Just hold on to your cash. I know that doesn't help short term. If you're experiencing pain from some bad trades, perhaps, just know things are going to get better. They always get better. Okay. Reducing exposure back here in February, late January, early February. Relieved us from about a 10% drawdown of the gains that we've made since the 2022 bear market was over with. So we made 176% total. Gave back about 5%. Right now, the markets are back 15%. So exiting when prices lost the 10 EMA was a wise decision. Okay, let's see what's going on here. Okay, we got 180 stocks advancing. So we have stocks being bought. Stocks are being bought right now. Be aware of it. Stocks are being bought. More stocks being bought off the low.
So far, I think if you're diversified and you've been active, you're holding up much better. And that's what I would recommend, that investors really need to look underneath the hood. If you own that S&P 500, you're not really that diversified. Having other, asset classes within your total asset allocation is important, such as smaller cap stocks that I mentioned, maybe overseas equities as well. And then also there's fixed income. I do expect interest rates to come down, so right now it's probably not a bad time to leg into fixed income also if you're sitting in cash.
Okay, so it feels like capitulation. People throwing away shares, scared. Okay, looking for a bounce. I'm contemplating putting some money to work, back to work. Might do it on Monday. Probably going to do it on Monday.
If we get interest rates coming down, so that's really what's been hurting that trade. And then people kind of think both areas have been overdone a little bit. So I think investors really need to go back to their original game plans in terms of what the asset allocation should be from a long-term perspective. Try to, zoom out of the short term here, noise that we've got.
HYMC.
The S&P 500 is not down, to correction levels yet. Remember last year how scary a lot of investors, or a lot of scary, scary the times might have seen for a lot of investors
AG.
after the Liberation Day and S&P 500 almost closed, at 20%, like a real bear market. And then how we ended up. Again, I think there's an opportunity for something like that to happen again. Certainly, I would say that we're definitely going to see new highs in equity markets this year. So even if you only just get that, that's not a bad little recovery. And for people to think about that psychologically, I actually believe that we have a chance for highs to get much higher than that. So that's what we're hoping for.
Yeah, and I mean, you've got some of the banks with some pretty bullish targets. I know that.
All right. So we'll be looking at TRBCX for investing. These pullbacks are what make you money. Waiting for the pullback, exiting when we lose the 10 EMA. Looking for support. We got to see at least one bullish week, I would think. So we can put money to work for the long term. For people that are in their 20s, 30s, at your first job, make sure you open a 401k. If you can get a 50% match, most companies will do a 50% match. It's one of the things I would check when you're interviewing. Don't be so overzealous to get a job. I mean, if you get one, then start to look for a second one. If the first job doesn't offer a 401k match, or if the company doesn't offer some sort of investment ideas. So watching the S&P right now, we just got a little bounce there. Most companies will give you a 50% match on like $5,000 or $10,000 invested. Some are a little bit lower than that, but if you can make a 50% right off the bat, start investing now while you're young. Campbell's Soup still going. Campbell's Soup coming off the low. Looking for a multi-day rally in Campbell's Soup.
ATW may resume in less than a minute.
On the floor, I bring you real-time sentiment.
Can't Apple pulling back a bit.
And in Chicago, we break down the data, technicals, and trades you need to see.
I wouldn't make too much out of the price action the last few days. There's a lot of extremes. People are throwing shares away. That usually precedes a buying opportunity. Just to have patience. Number of stocks above the 20-day, doing a dip again like it did over here back in April. Okay, number of stocks above the 20-day, like April over here. We did a double dip, triple dip. That's what it looks like right now. Number of stocks above the 50-day, same thing. Sitting on the 200-day, the equal weight index. We're close. Barring a violent dip or sell-off, we're pretty close to washout levels. Advanced decline percent most likely lower. Yeah, they're all lower.
that is the August low.
And
That's
XTT.
also kind of the intersection of some Fibonacci levels that some traders might be looking at for a short-term bounce. But yeah, I mean, it's crazy to think we've basically
ITRM may rise in 10 seconds.
7% of gains just in the last couple of weeks. So yeah, investors are frustrated. I get that. I think that, you know, from what we're seeing in terms of equity trading, we haven't seen a ton of outflows, or we have seen a little bit more kind of a build up in, you know, maybe some of the unloved stocks before. We're seeing buying in Nvidia, we're seeing some buying in Microsoft, and we're actually seeing some selling, which is interesting in some of maybe the oil names, where the services companies right now, they're moving out of those, seeing a little bit more ETF buying, a little bit more diversification from investors. And I think what's interesting about that is that kind of brings that correlation trade back into play, because for the longest time we've been talking about, hey, there's a group of winners, and what happens a lot of times is during sell-offs, you see those correlations start to go up as investors look for more diversified type products.
Yeah, I mean, I was just looking at that chart that we had up alongside you, and it looks like we've just been taking the stairs slowly down this week, Joe. I'm just wondering, you know, as we're on track for a fifth weekly low here, in correction territory now on the S&P, you've got financial, discretionary, communication services, and tech. Utilities and energy obviously continue to outperform here as far as the sector.
Molson Coors, TAP, looking for a follow through. Campbell Soup looking good off the lows. Apache, all of the energy stocks still working very well.
You're right, Tim. It's been this kind of slow stair-step approach down. It may not feel that way, but it's kind of been that way, which is interesting to kind of see that we haven't had a flush. I look at that two ways, right? The bearish side of that is you don't really get capitulation until you see that flush. Now, from a technical standpoint, the RSI is down around 30 right now. We're definitely getting close to that oversold, or maybe at that oversold territory in terms of maybe how some technicians would look at it. But we just haven't seen that one day.
Future's still weak.
Percentage flush where traders just kind of throw their hands up in the air and say, I've had it. Or, you start seeing just a mass amount of margin calls and people are selling maybe not what they want to sell, but selling what they have to sell. It hasn't really felt that way yet. It's not to say that it can't happen, but right now oil's driving the market, and a couple things that you need to pay attention to is WTI hasn't shown any.
I wouldn't put too much weight on whatever you're trading doing what you think it's going to do today. The markets are lower. A lot of cross currents. Selling that doesn't make any sense. Any bounces getting sold, people taking profits off, collecting cash, getting ready for next week. Hopefully we'll get some more capitulation maybe and an opportunity. Oh, let's go see what the New York Stock Exchange looks like. NYSE. Okay, capitulation volume. Capitulation selling. We've been seeing capitulation selling as this nears the green zone. That's why it's colored green, because after capitulation selling, we start to see buying. It presents opportunities. Stocks like Campbell's Soup, stocks like Molson Coors, those coming off the lows. In addition, the energy stocks continue their run that started back in January. 3 months later into April. What's gold doing? Speaking of hiding, gold hanging out near 400. Silver. Silver hanging out near recent lows. Copper just above the 200-day copper. Weekly time frame on copper. This is a leading economic indicator, copper. We're looking for copper to bounce and to start trending, continue this trend that started back in 25. A lot of volatility in copper. Okay, number of new highs, subtracting the number of new lows. When this is below the zero line, you want to be risk off or cautious. Advanced decline, more stocks declining than advancing. So this line will drop. You want to see that. You want to start getting long when that turns up, not when it's moving lower. We're sitting on the 200-day moving average. Blue elder sticks telling us those no capitulation selling or rampant selling like we had 3 weeks ago. We're starting to pause with the potential for this to bounce. The potential for the bounce is much greater, getting much greater now after 3 to 4 weeks of this.
Giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Schwab Network delivers real-time market insights.
Copac cycle is starting to look more bullish.
From earnings to economic data, we cover what
This could turn further before price action actually bounces.
free on schwabnetwork.com.
Transports.
Experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value,
Okay, I'm looking for a bounce.
best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand.
ARTL
Head
may
over to
resume in less than a minute.
schwab.com/coaching and start learning today.
Market institutional index. This continues to show institutions have been sellers. Institutions have been sellers. We had this rounding top we identified several weeks ago. These 75 stocks most commonly held in institutions' core portfolios. That's the XII. Rounding top lost the support levels about the same time S&P did. Let's look at the New York Stock Exchange. Let's see what that looks like. Okay, we're going to double tap the 200-day. Rolled over. Not quite there yet. Not quite there yet. Intraday hedge flows are just chopping around. They're not dropping off dramatically, so that's giving us a little bit of a reprieve. And with that, I'm going to take a couple minute break. I'm going to go fill my coffee, freshen it up, and I'll be right back. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Friday the 27th, 10:34 a.m. Give me 2 minutes. I just need to go freshen up my coffee.
May resume in
What
less
they're
than a minute.
saying, how they've upped the prices ahead of what we're going to hear this quarter with these earnings. Yeah, a little bit of commentary this morning as you mentioned, they raised their price for all three of its plans. The second time in a little over a year for Netflix. So clearly, Netflix feels it has the pricing power relative to the other streamers for this move to have happened. That's pretty much mentioned in every note across the board. They also say in pretty much all of the notes that have been put out this morning that while some customers could potentially cancel over the higher fees, the company has presumably calculated in that increased revenue per sub will offset any resulting churn that they might see. As in their latest update, they had more than 325 million subscribers at the end of 2025. Now, that new pricing represents an increase of about 11% on average across their product suite. those new prices, TD Cowen estimates that their average revenue per subscriber in the U.S. and Canada region will rise 6% year over year in 2026. TD Cowen maintained their buy rating, $112 price target for Netflix, which right now is trading at $93.77. In Citi's note that they put out this morning, they said Netflix will likely raise its 2026 outlook because of these higher prices. Also mentioning my favorite story, as you just said, there's less acquisition expenses as they're no longer a part of this Warner Brothers Discovery tie-up. Citi says they do expect Netflix to report what they call a modest beat and raise quarter on April 16th due to help from currency moves. They also keep a buy rating at $115 price target. Over at Oppenheimer, they raised their price target to $135 from $125, keep an outperform rating, saying that the higher revenue from the price increases is the full driver behind that. They say Netflix is showcasing why it remains a top internet platform with those price increases, and the company's ability to retain customers drives industry low churn and builds its competitive content moat. The last one out of JP Morgan was interesting. They said that they believe the price increases announced yesterday could translate into an additional $1.7 billion in annualized revenue off the 2025 base. But while the price increases came earlier than expected, they believe that much of the increase is already factored into their 2026 guidance. So that was the only note that sort of struck me as didn't see a lot of upside, although they did say they do expect to see another $1.7 billion in terms of their annualized revenue. However, noting they think it's already priced in, so they're looking for a bit lower on the forecasting front there for Netflix when they report on April 16th. Okay, good stuff, and obviously trading higher, 0.4% in what is otherwise a mostly down market today. So a little bright spot. Thanks so much, Marley. Let's trade Netflix now with Dan Deming, managing partner KKM Financial. Hi, Dan. Happy Friday. How would you approach an example trade for this, given obviously this overhang seems to have been lifted now?
A little bit, but the reaction isn't, I think, as robust as what market participants had anticipated. Certainly, we were higher initially, but we're slightly higher on the day, holding just below that 94 level, 93.75. But overall, the reaction to me is not something that I think is going to break the current downtrend in the next few weeks as we continue to see pressure on the overall markets. And I think there's a potential here for a little further weakness before Netflix finally finds its footing. And so the trade example today is to capture potential for further downside, but with the opportunity to get put in the stock at a better level. So the trade example is just April put spread here. It's just 21 days out. Buying the 94 puts, selling the 2 of the 90 puts. You can do that for $1.10 credit here, Sam. So that basically gives you a range of capture down. Break even is 85 on this, but below the current price action of the stock. But we can put in the stock just below $89 if we traded below 90 at expiration. So again, that's an entry level. To me, that looks a little more compelling longer term. And
yeah, energy stocks continue to hold a bid. S&P looking weak.
The reaction today has not really been that significant.
Okay, sure. Yeah, I mean, it is just a little bright spot in, as I said, what is otherwise a down market today.
S&P is oversold, looking for more upside. The Dow Industrials, the Diamonds, the Qs, IWM. Apple rolling over. Not much is working on the long side right now. VST. Vistra Corp, continuation. All these energy stocks look good. VST, Valero. Valero's up as well. Valero. Continuation. These energy stocks are the place to be for now. Halliburton. Halliburton.
FED.
That's the wrong HAL. That's a India stock. Halliburton at the highs. Halliburton following through. EOG Resources. Diamondback Energy. Holy Lord, these are all doing so well. Third month in a row. Oh boy.
FED.
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures focus,
LABD.
technical analysis.
CHSA may resume in less than a
Covers
minute.
it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network. Stay connected to what moves the market. Download the Schwab Network app and stream anytime wherever you are.
BUR may resume in less than a minute.
Live from Chicago, this is Trading 360. I'm Marley Hayden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
CHSA may rise in 10 seconds.
Welcome back to Morning Trade Live. I'm Sam Barnes coming to you live from the New York Stock Exchange.
RGTZ.
It's time now to take a look at the sectors that are moving markets this morning. Alex Coffey joins us now to break down what you're seeing there, Alex. What's
BUR may
some
rise
of
in
your
10 seconds.
takeaways in the first hour of trade here?
Yeah, kind of an interesting price action so far, Sam. About a third the names are still higher, a little bit less now. Let's call it 30% of the S&P 500 names are higher. But you have a mix of sectors that are doing okay. You see energy outperforming once again, utilities doing okay. Consumer staples, the more defensive sector in terms of low beta, a little bit more stable in terms of performance is sort of the idea. A little bit more income generating. That's doing okay as
TGW
well.
may resume in
Now,
less than a minute.
interestingly enough,
CGE.
those are three of the best four sectors from a performance standpoint year to date as well. Real estate is just above the unchanged line, despite the fact that yields have moved a little bit higher on today's session. All in all, though, a lot of weakness here to end out the week. Perhaps on track for the longest streak of weekly losses since 2022 if we continue on this trajectory.
This
ASTM.
weekly loss we're on track for right now as we do see some of that
RGTZ.
selling going into the weekend because anything can happen. And a big chunk of that red, Alex, seems to be emanating from the MAX 7. I see all but Apple, which is only just holding its head above water right now. Walk us through some of the price action you're seeing there.
Yeah, the Magnificent Seven is
TGW may rise in 10 seconds.
certainly providing a drag for index level performance, particularly the NASDAQ as well. A name like NVIDIA continues to plunge. It's down below 170, trading around 168. Another almost 2% decline. Tesla down to 364, once near 500 a share. Certainly
ASTM.
dramatic pullback there. Apple now has turned red. So you have 7 for 7 to the downside today, Sam. So a lot of pressure from some of the world's biggest companies that have an outsized effect as it is. They're also outperforming to the downside as a group with that index down about 1.8%. So you're not only getting the pressure, it's really the primary driver of the pressure here today.
Seem to not be able to catch a break, certainly in the last couple of weeks as well.
ASTM.
Alex, really appreciate it. Thanks for breaking down some of the price action heading to surface for us today. Let's check out what's going on overseas right now. Trump's Iran deadline extension failing to calm market jitters out in Asia overnight. It was a mixed session as investors in the region remain cautious. The energy shock caused by the Iran war clouds the outlook there. Data from Bloomberg now showing global investors are on track to withdraw a record amount from Asian emerging market stocks ex-China amid a lot of uncertainties for the region. Foreigners have reportedly already dumped about $52 billion since the conflict started, led by oil import-dependent markets like Taiwan, India, and South Korea. In other headlines, China opened a pair of trade probes into U.S. practices today. The investigations hit back at new probes opened by the U.S. side, which could increase China tariffs. Analysts say both Was the law that the big box retailers say the consumer when we trade like this?
You are.
Hey, investors, you know the market moves. And Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
TZA.
I'm Alex Toppy.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level.
CRCD.
That could certainly be short to near-term catalyst. Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
IBRX.
MKDW.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
IBRX.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
SHES.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered. Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, not the same rate of change on EPS.
Follow the biggest headlines, live analysis,
CGD.
breaking news, and sharp trade ideas minute by minute. With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of
All right, futures just sitting here at the low, threatening to do
Find way here going into earnings. So that would be a further downside area to watch.
more damage. So I'm just sitting here waiting. Need to see a significant rally. It'll be pretty obvious. Until we see that, I'm not going to do much on the long side.
Here's where some big box retail names are trading going into the weekend, mostly higher. Walmart up 1.3%, Costco up 0.6, Target up 2.5%. But Home Depot is on the back foot for us this morning, so it's a bit of a mixed picture. Let's go inside out on what's going on here on the consumer and big box retailers. So joining us now is Sarah Henry, Managing Director, Portfolio Manager over at Logan Capital Management. Sarah, we started the show with a pretty sort of sobering consumer sentiment survey from Umich. People are worried about things right now.
No kidding.
So in that environment, when you look across retailers, obviously so exposed to the consumer, who stands to benefit from that and who stands to lose out?
Yeah, you have it absolutely right. The consumer's been really actually resilient this far. Enduring peakish interest rates, tariffs, a government shutdown, some really hard weather conditions over the winter. There's no question incremental rising input costs are going to take money out of budgets. Now with
Microsoft coming off the low, a little short covering. The last couple of times we've seen Microsoft rally off the low was just short covering and rolled right over, gave everything back. Even lower today. Oracle continues to rally. Oracle. Watch list this week. You can see all of these energy names doing very well. Apache, Venture Global, Devon Energy, Exxon, the energy sector, Diamondback Energy, Chevron, Vistra Energy, all of these doing really well. Diamondback up over 10% for the week. These will probably keep moving next week as well, I would imagine. Tech, easy to see what's not working. What's Caterpillar doing? Caterpillar back below the 50-day. Okay.
There's a little bit of a renaissance in goods that we're seeing. Some of the other things, these business models are very much rhyming in a way. They're all different, but I think one of the ways they become defensive is that they offer products at rock bottom prices, and they embellish on their profitability, on their own profitability with ancillary income streams. So both Walmart and Costco do this, and it's been a successful model for both of them.
Okay, so that's kind of what Walmart and Costco are doing right. Who else is getting things right in this environment, and who's not?
Okay, well, I think in terms of getting things right, I mean, I think Amazon obviously is also capturing way more market share than its existing share. Together, Walmart, Costco, and Amazon are getting about 50% of each incremental dollar spent at retail. So clearly that company is a pace setter in the business, and I think you really need to have a big budget to be able to offer everything a consumer demands now, because the way of the world is omni-channel assets. So you've heard of Amazon looking into building their own big box stores. That's been incremental, and Walmart and Costco have also had to build out their own e-commerce business that they use in different ways, and it's been clearly, Walmart in particular has taken a lot of criticism over a number of years for investing so heavily in technology, but it's really bearing fruit. They are at the right place with the right business model at this moment.
And yeah, I mean, you can see it reflected in the stock. I mean, year to date up in double digits for some of these names, and very much benefiting from capturing some of that market share, as you say. So we have to leave it there, but thanks so much for the broad overview of what's happening in big box retail at the moment. The same for consumers. Sarah Henry, their managing director of portfolio manager over at Logan Capital Management. Appreciate it. Let's trade Costco now with Tom White, host of Fast Market. So you heard what Sarah had to say there, and obviously we've seen Costco gaining, what is it, like 15% off that December low. Just walk us through an example trade for this name, Tom.
Yeah, it's outperformed so far.
ARTL.
Resurgence here.
And said, look, if the Democrats aren't going to have an agreement here, I'm just going to fund the TSA members myself, most likely using unallocated funds from the One Big Beautiful Bill to do that. Now, there's some legality questions over this. He did this in the past with the military, but there's a political angle as well, because why would the Democrats want to sue President Trump on something like this? So, it's always in President Trump's hip pocket, but, for members of the legislative branch, they're the ones that control the power of the purse here, and so both sides of the aisle, they don't want presidents coming in here and saying we're going to fund things on our own. They want to do it through the appropriations process, so that's why I think we saw the Senate this morning move forward and fund most of DHS minus ICE and Border Patrol.
I was going to say, what are the details of this bill and its ability to get through the Senate? Because that's obviously something the Democrats are pushing through. ICE is already funded for some time to come, but removing the extra funding, it seems like the Senate Republicans agreed on that. What does its fate look like in the House?
So this bill essentially funds the bulk of the DHS minus ICE, like you mentioned. It's funded through the One Big Beautiful Bill. The Democrat ask over the last couple of weeks has all been about ICE tactics, not ICE funding. They recognized that the funding was somewhat irrelevant here. It was just out of their hands. And neither side really got what they wanted, but both sides can go back and say, look, we didn't really bulge on things either. So I think going forward, what will happen is this will go to the House. You will see the House Freedom Caucus raise a little bit of a ruckus, saying, look, the Save America Act isn't in here, etc. But, you know, there was a political decision made by the White House earlier this week to move forward because this was the point where Americans waiting in long lines said, look, I've had enough. And Republicans took much of the blame of the shutdown last year. I think there was probably some consideration that they could potentially get some of the blame again this year. And they just decided, you know what, let's just get a punt on this fight. We'll have other political fights ahead of the
Nathan, thank you so much for joining us on this Friday. And always check out Nathan's newsletter, Nathan of Bloomberg Intelligence. As we head to the end of the hour, stocks still negative off of the lows, but still down more than 1% from NASDAQ, down 10% from its high. A couple things going on. For one, at the top of the hour, we learned from an Iranian news agency that Israel and the U.S. had hit an Iranian steel producer in the region. President Trump also extending his deadline by 10 days in order to strike a deal with Iran. There's also been reports of container ships from China being forced to reach U-turns in the Strait of Hormuz. And oil prices now at $110 a barrel, almost at 111. Yields move higher off of the lows, but that's pressuring this market on a day where we're heading for another weekly loss of 5 consecutive weekly loss. Coming up on Monday, Chris Barone of Strategist, EU competition chief Teresa Rivera, and Katerina Simonetti, and Ken Kinsell of Churchill.
DRTL can be achievable together. Deloitte, together makes progress.
At Par Physical Therapy, our goal is to get you back into activity faster. Whether you're recovering from surgery, dealing with a sports injury, or managing chronic pain, we're here to help. With personalized care and hands-on treatment, we work directly with you to reach your goals. Whether that's getting you back to your favorite activities or keeping up with your family. And now, the new location in Merle's Inlet, expert care is closer than ever. Call today to get your complimentary screen at Par Physical Therapy. Par Physical Therapy, getting you back into the swing of things.
CDE.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about. For years, powerful PBMs have driven up costs for patients at the pharmacy counter, pocketing savings meant for you. That's why Congressman Russell Fry took on the PBM middleman and won. He passed a new law that forces PBMs to pass discounts to patients, ends middlemen incentives to drive up prices, and protects our local pharmacies. Call Congressman Fry and thank him for standing up to the PBMs and lowering healthcare costs for you.
Nissan. Correct.
AGQ. SHNY.
You gotta put it through its paces.
GTXU.
He can take it.
Hurry into the Nissan Now sales event featuring both Nissan, number one in new vehicle quality. Now give to 1,000 customer cash on Kicks, or get up to $1,750 total bonus cash on Sentra.
Behind the bright lights and adrenaline of pro sports is an equally exciting world of negotiations and deal making. That's what we cover each week on our podcast, The Deal. I'm Alex Rodriguez, former baseball player turned
Campbell's Soup still going?
Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Jay Williams, I want to be an owner one day, Billie Jean King,
Learn the business.
Paul Rabel, don't choose trends, get ahead of them, and so many more.
Is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year have to build a new plan from scratch.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Tamara Section Davos Times, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with them.
Campbell's Soup rising.
Top stories. Insight with Haslinda Ahmed. Only on Bloomberg.
Bloomberg Tech is live from coast to coast. Caroline Hyde in New York and Ed Lovo in San Francisco.
This is Bloomberg Tech. Coming up, the NASDAQ 100 falls into
Hedge flows starting to turn up. Looks like the support is going to hold for now.
rattling investor confidence. Plus, Meta is set to fund the construction of 7 new natural gas-fired energy plants to fuel its Hyperion data center in Louisiana. And now Anthropic is said to be looking to IPO as soon as October. This is the AI company wins a court order blocking a Trump ban on government use of its AI tool. Welcome to the program. Happy Friday, but less happy in financial markets where technology stocks have entered correction territory. Look at how the NASDAQ 100 is traded over the last 6 months or so. And you can see that as we kind of got into the beginning of 2026, we've gone from those highs down to a bit of a trough. That's been driven by partly the war in Iran and geopolitics, but also a very deep assessment of AI spending, capital expenditures, and cash flows relating to AI. Case in point and a case study is Microsoft. Microsoft is on track to have its worst quarter since 2008, the worst quarter since the financial crisis, and a big part of that, including the activity we're seeing in this session, is the commitment to AI infrastructure build out. The finance
Oracle's still hanging in there. Oracle looks like it wants to turn back up. It is lower for the week, but it is turning up as well. So watching Oracle. Nothing compelling here at the moment. Campbell Soup continues to rally. Campbell Soup.
which is in Louisiana. The project is expected to deliver 5.2 gigawatts of electricity, which is a lot. Bloomberg's Riley Griffin joins us on set. This is a big project. So, you kind of talk about 7 natural gas-fired sources of energy for a specific project, but give us the sum total of the reporting and a bit more about Hyperion.
Yeah, so Hyperion is the crown jewel of Meta's data center fleet. They have in development more than 30 data centers, and this is the biggest. It's in rural Louisiana, and with today's announcement, we are actually going to see a total of 10 natural gas plants serving this one single data center. It's a massive amount of energy from fossil fuels, and it is just another push forward in this expansion of a major project.
There isn't a particular figure attached to this. It's the gigawatt figure. And, over the course of the war in Iran in particular, we've been very focused on the movement in oil prices. But actually, natural gas is much more relevant to how a data
Consumer staples coming off the low. Consumer staples.
to the other big data center operators around the world.
Yeah, I mean, this is
I'm surprised the defensive stocks haven't performed better. Kimberly Clark. These are all lower. You would think with the markets moving lower, that defensive stocks would be catching a bid over the last several weeks instead of moving to the lows.
There's an interesting part of your reporting about Hyperion, Louisiana in particular, which is Meta.
Biotech's trying to make a higher low. Real estate at recent lows that we saw late 2025 into January of 26. Looking for real estate stocks to turn up. Transports trying to hold the 200-day. Semiconductors actually not as bad as you would think with the S&P 500 at lows. Down what, 10%? Oil and equipment services and energy, those are doing the best. Materials doing okay. Communications at the lows thanks to Meta. Energy, of course. Financials trying to bounce. Industrials trying to bounce. Tech at the lows. Consumer staples trying to bounce right here at the 100 period moving average. Utilities bouncing, that looks good. So defensive stocks are catching a bid now after pulling back. Healthcare could catch a bid next week. Not much to do today. Consumer discretionary at lows. The XLY XLP ratio, which gave us a sell signal back in late January, still pointing lower.
the economic narrative, and we're seeing that in oil prices in real time. Monday alone, Brent crude fell 10-14% in a matter of 5 hours. I mean, it's back up as of today. Now, if you are at all in an industry that has energy sensitivity, this environment feels almost impossible to plan in.
One industry that is sensitive to that, Riley Griffin was just talking about it. Meta committing to invest in 7 LNG powered plants for one specific data center. You've been looking at the data of how the war in Iran is impacting LNG. What are you seeing?
Yeah, I mean, just relative to pre-conflict, LNG prices have swung 60 to 80%. Even if part of the impact is transitory, say we get a best case scenario and the Strait of Hormuz reopens tomorrow, we still have a structural component we have to account for. What really comes to mind is the fact that 17% of Qatar's LNG production is offline for 3 to 5 years. So this really has an implication on the cost side of the balance sheet for these companies.
The other side of the conflict in Iran, and something specific to that region, is the production of helium and sulfur-based compounds, critical components or materials in chip fabrication. Both they provide stabilization in the etching process and the deposition process. A lot of that happens in Qatar. Again, are you seeing data that suggests some kind of long-term impact, or indeed in the short term a crisis of supply in those markets?
Yes, absolutely. So let's take helium, for example. 34% of global supply comes from one facility in Qatar that has been affected by the strikes. It's anticipated to be offline in some regard for 4 to 6 months. Industry estimates are that we have about 3 months of inventory, right? So you do some back of the napkin math and you realize that the question really isn't, will there be an impact? There will be an impact. When will it hit? Very likely Q2, and to what extent? That really depends on the continued path that this conflict takes and if there is future escalation or hopefully de-escalation.
Away from, I guess, the short term in the war in Iran, there probably still is a debate around the health of the global economy, which in the technology context has just been underpinned by massive commitments to spend, the impact on raw materials, labor. How closely are you tracking right now the consistency of capital expenditures that relate to data center in particular?
You know, I would say, right, the question we have to ask ourselves is what is being impacted by this conflict? The cost side of the balance sheet is what's being impacted. The cost to power these AI data centers, for example, the cost to produce these chips. Now, the second question is, will these hyperscalers continue to meet demand? The answer, in my opinion, absolutely yes. So where do we see the impact? We see the impact on margin compression. That seems like almost a given. And when do we see it? We see it in Q2.
Natalie, people, at least on this program, have been split on drawing parallels between this economic shock that is a war in Iran and some of what we saw in the early part of the COVID era, in its impact in supply chain, shipping.
Looking for a bounce.
Are you seeing any similarities or parallels?
Kimberly Clark, S&P. S&P just sitting here consolidating.
It's different because we aren't seeing a total shutdown of our supply chain network, right? We are seeing a very large impact in the Strait of Hormuz. We have an ongoing impact in the Red Sea. But the good news is, right, we can still get goods from A to B. The bad news is that to do that, we add 3,500 to 4,000 nautical miles and about $1 to $2.5 million in excess fuel costs, depending on vessel size. And so we can continue to meet demand. It's just the fact that the supply chain environment is quite stressed, and we're very likely to see an elevated cost implication. Whereas in COVID, right, even the ability to meet demand was quite questionable due to the broad-based shutdown.
Natalie Gallagher aboard. It's great to have you back on the show, and it's difficult to look at the impact of what's happening from the technology sector to the technology sector with everything happening with the war in Iran. Come out on the show and Anthropic buys an October IPO with Bloomberg.
Looking for S&P to move off the low, making higher lows now.
Meals, non-negotiable. That's where Omaha Steaks comes in. Their individually wrapped quick-thaw meats make meal prep a breeze. The taste, unmatched. They guarantee 100% satisfaction. With Omaha Steaks, everyone eats well, even when dinner time is crazy time.
She's right. And to prove it, you'll get 8 Omaha Steaks.
Okay. Again, looking at the S&P 500, the top 10, still looking very strong. Coming into just a little bit after 11 o'clock, ETR, Entergy, big move today in Entergy, ETR, top of the S&P 500. Campbell's Soup, CPB. Campbell's Soup is number 2 on the S&P 500. It's up 5%.
T-Mobile's network adapts. Put your business connection first. Supermobile, the best business plan on the best network.
Payrolls running, state registration added, team's growing. Hi there. Hi. I'm new. Up with more gusto. You look so relaxed. Benefits, payroll, done. And we signed up with New Jersey.
Am I seeing double?
Just me. Us. But with teams in 2 states.
Okay, Brown and Foreman.
Yeah, check your
Brown and Foreman. That's had a big bounce too. Looking for some of these stocks like Campbell's, Molson Coors to do something similar here. Brown and Foreman, big reversal. If we can get Campbell's Soup to do something like that, get a nice bounce, that'd be great. Energy stocks still obviously number 1. I've never seen Apache APA, never seen Apache do this. This is so unusual. Doesn't happen very often, but when it does, it gets going. Look at this is the closest you could see a move from 30 to 40. In this case, into the new year, 25 to 45, up 13% on the week alone. Apache, APA, all of these energy stocks looking good. Chevron, ConocoPhillips, Eiffel Tower, maybe. These could get hit next week. Who the hell knows? If for some reason Iran gives up, I don't see it happening, but if it were to happen, I would think that crude oil stocks would come back down. USO been hanging out in this level. What's pretty interesting is that during the Obama years, Brent crude was above $100 a barrel for 45 months. Not 13 days like currently. Currently, Brent crude's above 13 days. This is end of day. So tomorrow we'll get another tonight we'll get another candle. 45 months during the Obama administration. 5 months or 7 months 5 months during the Biden administration was above $100 a barrel. Bush, 7 months above the $100 a barrel back at the end of his term. Trump in his first term, crude oil never got above $100 a barrel. And here we are 12 days, 13 days later, and everybody's losing their mind. More about the war, I guess, but yeah, we're looking for a bounce. Looking for a bounce in the markets. Hasn't happened yet. Number of stocks trading above the 20-day. These things get extreme like this. Doesn't mean immediately start buying. You can see the number of stocks above the 50. Back in 2025, we got down to 10%. About 8%, 5 to 8% of stocks were above the 50-day. In this case, this is the 50-day. And the lower panel is the 200-day. Back in April, we got that sell-off in 2025 from the tariffs. We still got a ways to go. We could get down here.
If and when that confidential filing happens, we had reported it could take place as soon as March or just a few days.
Stocks below the 20-day at extremes, similar to what we saw back in April. Is that going to be enough?
With investors, just maybe providing a bit more detail and a bit more context about some of the numbers that could have been submitted to the SEC. Thank you very much. Now, coming up, President Trump announces a new Council of Advisors on Science and Technology. We speak with David Sachs, who is tapped to serve as co-chair. What's next?
Advanced decline percent still showing mostly selling.
Your daughter's turning 9, and your company's at a turning point. Who's helping tackle data, strategy, finance?
The dream team.
We, GVH.
Today, business happens virtually everywhere. That's why you need Supermobile from T-Mobile. In moments of high demand, T-Mobile's network adapts. Put your business connection first.
Supermobile, the best business plan on the best network.
SST. SST.
I wanted to move in with my girl. Help my girl get her spot. You know, because I have a kid on the way. Good credit is the key to those things. My name is DeMonte. I had a credit score below 500, so I used Kickoff to help me build it to over 700. Growing up is about elevating. Kickoff helped me get there faster. I got approved for a $3,500 Kickoff trade line that's just used for building credit. That's without a credit check. And plans start at just $5 a month. Get your first month for just $1 at getkickoff.com/try.
When news breaks,
The redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity we need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg.
CRCD. BCIC halted to the upside.
President Trump has tapped tech industry titans, including Mark Zuckerberg, Larry Ellison, and Jensen Huang, to a new presidential council that will focus on AI policy and other science-related.
All right, New York Fangs, a little bit of short covering off the lows, but not much more. Apple backed off. Disappointing again, Apple. Thought for sure we're going to get some sort of follow through. But the overall market is bearish at the moment. There's no support. 6,400, then 6,300. We got Gamma here, right around 6,400. We're right in between these two strikes. A little bit more at 6,385. Hedge flows just keep moving back and forth.
The framework contains things like child safety. That's a very salient issue right now, is how do you protect kids online, and so we want to take care of that. There's things like the Ratepayer Protection Pledge, which the president's already announced. We want to make sure that these new AI data centers don't increase the cost of electricity for residential consumers. At the same time, we want to make it easier for those AI companies to bring their own power. So this is, I think, a much better approach than effectively the ban on new data centers that you're seeing from Bernie Sanders and others. There's principles and provisions related to content creators and how do you protect their new content while allowing for AI models to be trained. So there's a lot of different areas here that we've covered, and I think you're seeing a very good reception to this from Capitol Hill. Even the criticism I thought from Democrats was pretty muted. There's some Democrats who've already reached out to us. They want to work with us to see if we can do something in a bipartisan way. And so I think there's actually a very good chance that you'll see Congress now act on this framework and we'll get some meaningful AI legislation again. The one rule book that President Trump's talking about in the next few months.
Before November, David, a bipartisan AI framework before November.
I think it could happen in the next few months. I mean, again, we've got a very good reception from Capitol Hill. This is an area where I think we're willing and happy to work with Democrats, and I think there's a lot of Democrats who would like to see a single national framework as well. I think they understand that it's not feasible or practical to have 50 states running in 50 different directions, and I think if we can work something out, I think we can get to the one rule book that the president's talking about.
David, looking at the composition of the council, you and I have spoken in the past that the definition of a China hawk, for example, in the context of exporting technology, it needs some discussion. But on the chip side, the infrastructure side, those are a group of CEOs that want to sell their technology around the world. Do you see that changing the president's current thinking on exporting cutting edge or lead edge chips to China, or more generally in different jurisdictions around the world?
Well, I think this administration already has a pro-export mindset because we understand that the way that American technology wins and dominates the globe is through market share. You want to have the most market share all over the world. You want the American tech stack to become the global standard. That's good for us economically. I think it's also good in terms of national security and spreading our influence. Now, whenever you're talking about countries of concern, China, potential adversaries, you have to be more careful and you need a more nuanced policy. And I think the administration has supported that. But I think that in general, we want the world to be a place where American technology wins, as it did with the internet.
CYAB may rest in 10 seconds.
That was David Sachs, co-chair of the President's Council of Advisors on Science and Technology and partner at Craft Ventures. The Sachs calls for clearer rules around artificial intelligence. There's also a growing push to modernize how those rules are written and implemented within governments. Joe Scheidler is the CEO of Helios, an AI platform designed to help track and navigate legislation in real time. Joe was a former advisor at the White House and U.S. State Department under President Biden and joins us now. Just interested in your thoughts in the first instance on what Mr. Sachs was saying, you know, the trajectory and timeline for a federal level set of rules on AI.
It's great to be with you, Ed. Yeah, I think what David had kind of stated yesterday makes a lot of sense. A patchwork of
More chop.
across 50 states is not a sustainable structure in a global competitive technology race. I think as a
We could get a rally any moment, so just be ready.
I can confidently say what we need right now is a single national framework.
High tech alert plus 800.
High tech alert.
Technology in one of the most consequential times we're seeing in modern history.
So what everyday Americans may be confused by is the distinction between either there not being enough regulation, in other words, we do not have a federal level framework, but there is a lot of state-by-state regulation, the point that Mr. Sachs was making. What is the real risk? Over-regulation or under-regulation in this context?
Yeah, I think there is a fundamental mismatch between the pace of this technology and the rate at which we're trying to regulate this across different states, localities, cities. And the issue is this is still a very emerging technology in many respects. It's a horizontal technology that cuts across every sector, vertical industry. You know, there's a question that I think is persisting throughout circles in DC and the Valley, America, than we. We are at a moment right now where we're seeing massive productivity gains in key sectors of the economy, to include government itself. And I think it's far too early to be taking an over-regulatory approach to a technology we're still learning a great deal about.
There's two specific areas I want to talk to you about. The first is the use of
Okay, no follow through, just a little short covering, probably.
Is the biggest case study of late, right? And just having returned from DC, the position of many was it is not up to the companies how.
Okay, I need to take about a 5-minute break, folks. Need to take about a 5-minute break. I need to make a couple of phone calls. Market's not doing much of anything right now. Give me about 5 minutes.
say is these technologies aren't anything new to the U.S. military or defense circles in general. We've been using machine learning and AI capabilities for decades, and for now, it's starting to get a lot of attention in the media, particularly because of, I think, adjacent stories that have a tendency to get a dialogue moving. For instance, the patchwork of regulatory frameworks and many hyperscalers being caught in that as well. I would say, in general, there's a dangerous notion of allowing boardrooms and private executives asserting too much influence in systems of government that have clear processes for change.
Joe, we just have 30 seconds, but the pace of innovation in AI agents, genuinely autonomous AI agents, how do you regulate for that?
I mean, I think right now we need to be thinking through a verticalized mindset. There are a lot of platforms, ours included, that are trying to close the delta between generic models trained on mixed quality data and very sensitive enterprise workflows across private industry and government itself. I would say applying an over-regulatory approach to agentic workflows could be short-sighted in the grand scheme of the global competitive race.
Joe Scheidler, the CEO, great to have you on the show. Thank you very much. Coming up, Apple opens its doors to outside AI systems like Google Gemini, Anthropic's Claude. We've got the Bloomberg reporting next. It is halftime, and this is Bloomberg Tech.
Hi, my name is Wally, and this is my wife Becky. We are standing in our new remodeled showroom at Sunspace in Myrtle Beach.
We're a veteran-owned company, and we've been building custom submarines for over a decade.
Our dedicated team ensures high-quality official work on every project. No subcontractors involved.
With free custom designs to on-site project reviews and permit assistance, we make the process stress-free and easy for you.
Our goal is to bring your vision to life. Come see us at our showroom and let us build the perfect submarine for you.
For years, powerful PBMs have driven up costs for patients at the pharmacy counter, pocketing savings meant for you. That's why Congressman Russell Fry took on the PBM middlemen and won. He passed a new law that forces PBMs to pass discounts to patients, ends middlemen incentives to drive up prices, and protects our local pharmacies. Call Congressman Fry and thank him for standing up to the PBMs and lowering healthcare costs for you.
Relief was founded in New York City. This is our home. We care deeply about the city. We are very active in the affordable housing community as developers of new affordable housing and preservationists of existing affordable housing. It's critical for our company. It's critical for cities. Wells Fargo, their DNA is very similar. They're community-driven, community-minded. Wells Fargo goes above and beyond and partners with us to make a difference. We're really building for the future across the country.
Every love story deserves the perfect ring. Let's design yours together. At Jacob the Jeweler, we guide you through every detail, from selecting the perfect diamond to creating a custom piece that tells your story. The moment he takes a knee, the walk down the aisle, it all begins here. Visit Jacob the Jeweler at Market Common, where jewelry comes to life.
IZM. SST.
SST. Need funds? Get up to $100 with Super.com cash. No interest, no credit check, no stress.
What's the last thing you treated yourself to?
Oh, I came and got the new Apple AirPods.
Nice. Do you remember how much you paid for those?
I think like $130.
Okay, well, I have this app that price compares all the different stores, and I can see if we got you the best deal. Looks like you could have got them for $119.
What? Dang, what's that app called?
It's called Sezzle.
Isn't that the buy now, pay later app?
It is. They also have price comparison features, which is my personal favorite touch.
Dang, I'll have to give it a download.
Nice.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Haslin Amin in Dublin, Switzerland, and this is Bloomberg.
IZM.
Welcome back to Bloomberg Tech. It's Friday, but it's the end of a difficult week for technology stocks. The Nasdaq 100 has fallen into correction territory. On a technical basis, it has fallen 10% from a recent high. Then there's some movement as well in cybersecurity stocks. This one is a little less straightforward. Cybersecurity stocks fell after a report that Anthropic is testing an AI model that has very advanced cyber capabilities, and it sparked some fears that actually this model could go on the offense. It could present a cyber threat to some of those names that are down you see on your screen that would provide the defense. Go out and read about it. It's complicated, but I'm sure we'll be speaking about it again. Then there's the big news from Bloomberg. Apple plans to open Siri to outside AI assistants, allowing users to choose their own chatbot. The Siri overhaul is set to be incorporated in the company's upcoming iOS 27 update. Bloomberg's Apple Consumer Tech editor Mark Gurman once again broke the story. This is strategy all over the place. Right, as you know, I just upgraded to iPhone 17 Pro, got the latest iOS. I've gone back to using Siri. I'm reading your reporting, and it seems like Apple's latest strategy is to say, whichever chatbot the consumer wants, we'll find a way to integrate it. Give us the details.
Yeah, they're going a bit agnostic here. The idea is they want all the different AI platforms to be easily accessible from their devices. And what that would allow them to do is tap into a new app store section they're building. And then that would allow them to take 30% or whatever the slice is that they agreed to with that AI provider to up their subscriptions to the higher end tiers on those devices. So they're going to make money there. And so this is them doubling down on their hardware as a platform, doubling down on their services strategy, really slightly bowing out of the AI race here as they continue to see how this is going to end up developing. And as I reported earlier this week, they're also working on some new first-party features like that Siri app, the ability to access Siri from the keyboard more easily. And so they are continuing to push forward there. And as we've talked about numerous times, they are already building their underlying models using technology from Gemini.
You broke another story about Apple, but what's happening internally with Comp, super interesting. There seems to be a return to a sort of bonus or incentive structure for the teams that work on design. What do we need to know here, and what are the kind of numbers involved?
Yeah, one of the biggest issues Apple is grappling with are companies sort of circling it like sharks, given the AI situation there and the AI crisis they've really been facing. And different companies, OpenAI in particular, wanting to poach their best hardware engineering talent. And so what Apple is doing is trying to respond to that by giving one-time bonuses, RSUs, these vests over 4 years to some of the key talent. Particularly this week, it was the iPhone product design team within the hardware engineering group, incentivizing them to stay and not jump ship to OpenAI.
It's difficult to tie those two stories together because, as you just outlined, the bonuses are going to the iPhone design team, but the bigger environmental picture is AI talent. What about those
AI talent per se? So what OpenAI is doing, they are building hardware, they are building devices, and as you know, Apple has some of the best hardware engineering talent in the world for building devices. And so what OpenAI wants to do is they want to marry that fit and finish of Apple. They want to marry that hardware engineering capability of Apple with their own AI models that they consider industry leading. And so bringing the two together would be extremely powerful. And so they are going after Apple talent. They've been poaching several dozen people, I would say even a month over the last half a year. And don't forget, the hardware engineering group at OpenAI is run, two of the people running it used to run hardware at Apple. So it is a pretty interesting situation right now.
There's actually a third story out at night from Mark about Apple discontinuing the Mac Pro desktop, but you have to go and read that one. Bloomberg's Mark Gurman, terrific stuff. Thank you very much. It's been a roller coaster week for memory and storage stocks after Google unveiled an AI breakthrough that can cut the memory requirement to run an LLM by a factor of 6. The market reaction came in waves. First, everything in memory sold off around the world. Then investors started to realize this might not be doomsday for all of them. Let's refresh your memories for a moment. If storage for AI data is like a warehouse, NAND and flash are the long-term holding area. But high bandwidth memory, on the other hand, is the workbench, the loading dock.
IZM.
This is how it was summed up by Bloomberg's Mandeep Singh of Bloomberg Intelligence of how the market is digesting this breakthrough in memory.
Typically, when something like this happens, everyone would implement those sort of efficiencies. Remember DeepSeek? Everyone pivoted to a reasoning model within the next 6 months, and guess what? The demand actually took off because everyone implemented that, and it helped drive more usage. So if anything, I think it should drive more usage, and the effect of that will be more memory demand.
So this isn't the AI trade breaking. It's investors getting much more informed, but more selective about where the demand actually is. Worth going back and reading that on the Bloomberg terminal. Coming up, we're going to hear from Khosla Ventures co-founder Vinod Khosla on his take on the AI race between US and China. So that conversation next. This is Bloomberg Tech.
Pocketing savings meant for you. That's why Congressman Russell Fry took on the PBM middleman and won. He passed a new law that forces PBMs to pass discounts for patients, ends middlemen incentives to drive up prices, and protects our local pharmacies. Call Congressman Fry and thank him for standing up to the PBMs and lowering healthcare costs for you.
If you're up thinking, we're up helping. Deloitte, together makes progress.
Every love story deserves the perfect ring. Let's design yours together. At Jacob the Jeweler, we guide you through every detail, from selecting the perfect diamond to creating a custom piece that tells your story. The moment he takes a knee, the walk down the aisle, it all begins here. Visit Jacob the Jeweler at Market Common, where jewelry comes to life.
Satellite internet that's fast, reliable, and installed by professionals. For work, for play, for every day. Available anywhere you call home. Visit Viasat.com/internet now or call 833-8-Viasat to sign up today.
Small business owners are do-it-yourselfers. In my business was new. I couldn't afford an attorney, but I needed a contract written. So I wrote my own 5th grade version of a contract. I wouldn't recommend doing this because, yes, you guessed it, my contract actually got tested in court. Federal court. Surprisingly, the judge literally said my 5th grade contract was the best contract he had ever seen. And I got an amen and hallelujah. Trust me, contract writing is not a do-it-yourself task. Running payroll, however, is. Mike Campbell here, serial entrepreneur. My 5th successful company, Patriot Software, helps small business do-it-yourselfers run payroll without needing to be a payroll expert, whether you have 1 or 500 employees. Go to patriotsoftware.com. That's patriotsoftware.com.
GCPatriotsoftware.com. Accounting and payroll. Keep your time and money.
Su silencio tiene derechos de autor. Sigue siendo el hombre más interesante del mundo.
Business Joe Matthew and Kayla Hunt deliver news, insight, and analysis live 2 times a day, every trading day. Bound to power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world, right here on Bloomberg. Context changes everything.
President Trump is set to travel to China in May to meet with the country's leader, Xi Jinping. The AI race, conflict in the Middle East, and trade tension are likely to be top of the agenda, especially as China launched a pair of investigations into US trade practices, retaliating against Trump's tariffs. Let's get the broader picture with Michelle Guida, CEO of the Crack Institute for Tech Diplomacy, Purdue. She also served as Assistant Secretary of State for Global Public Affairs under the first Trump administration. Off camera, we were talking, I tried to make sense this week of where the United States currently stands as it relates to China in the context of technology. Earlier in the program, we spoke with David Sachs about just that. Your sense of the balance right now in closer economic cooperation with China, while considering them in the technology context to continue to be an economic adversary?
Yeah, there's a lot going on when it comes to conversations in DC and in Silicon Valley about the United States leading in technology. And you're right, all of that is within the context of making sure that we're winning this so-called technology race with regard to China. And I think that's really important. And I think it's important also we have a common picture and an understanding of what winning means. You referenced your interview with David Sachs yesterday, and I think he put it really well. It's market share for American technology or allied technology, ultimately trusted technology, and I think that's really important. However, the big challenge there that I think isn't talked about enough is that if you look at market share of artificial intelligence, there's a concerning trend growing with Chinese models, and specifically their open weight and their open source models, which are cheap, they're good enough. And if you look at the trend just about a year ago, 15 months ago, Chinese open source models were essentially a negligible part of world AI usage. Fast forward to 15 months later, end of 2025, all of a sudden they're going from 1% to almost 30% of global token usage, world AI usage all of a sudden. And so they're cheaper, they're good enough, and the Chinese are very focused, not necessarily on having the best models, but on having the most used. And so I think the United States, when we're talking about Silicon Valley and Washington, D.C. connecting, need to make sure that not only do we have an innovation strategy, we've also got a really big distribution strategy.
We're going to hear later in the program from someone who is a China hawk, but maybe a different definition of a China hawk. That's Vinod Khosla. The reason I wanted to talk to David Sachs about the Presidential Council of Advisors for Science and Tech is look at who's on it. Those are companies that either at one time had a big market share in China or would love to export their technology to China. With something like PCAST, is it realistic that a sitting president's thinking or the policy of the administration of the day actually gets influenced by those that are a part of it?
Yeah, I think the bridge in the conversation between those tech leaders and Silicon Valley leaders in general in Washington, D.C. has increasingly been fortified. And those conversations are happening anyway. I think PCAST and that group of advisors is now going to accelerate that. But it's not new. And that conversation and the back and forth on policy has already been taking place. And I think that's really important, and that bridge is really important. At the same time, let's not forget that we also have to keep in mind every American in between Silicon Valley and Washington, D.C. when it comes to technology. They're focused on jobs, they're focused on the energy requirements.
All right, trying to move a little bit higher, not much follow through.
As are our allies, because AI ultimately is borderless, and the only way that the United States is going to lead is by working hand in hand with our allies as well.
Let's go back to Iran. We said that when the president travels to China, depending on where we are in that process, they will likely discuss the war in Iran. Why does it matter quickly that the US get China's view on this?
Well, I think, look, they're one of the leading economies. They have a lot to do with our own economy, oil prices and things like that. And so, making sure that we're on the same page is good for American strategy. And I'd say, we're seeing a big role that technology is playing in Iran as well. And so all of that is part of American technological leadership and dominance and ultimately bringing this war to a victorious end as soon as possible.
Michelle Guida, CEO of the Crack Institute for Tech Diplomacy. It's great to have you back on the show. Thank you very much. Sticking with China, we discussed the AI race between the two world powers. With Khosla Ventures co-founder Vinod Khosla, this week that was on the sidelines of the Hill Valley Forum. And here's what he had to say about NVIDIA CEO Jensen Huang celebrating the company's approval to sell AI accelerators to China.
He's celebrating that. It's in his short-term economic interest.
believe it's in the interest of the country as a whole to do that. Of course, he's got whatever deals he can. He's a great guy. He's a very visionary guy. But it's good for his business, and that's his responsibility as CEO. That doesn't mean everything he does is good for America. It's good for his global business.
Do you think there's a chance that we change policy, change tack, decide to cut off?
I think we absolutely should. And I'm in the camp of being as hawkish as possible. And it's the right policy for America, and I thought this administration was on that bandwagon, but they seem to have changed course. Don't know what the influences were. There probably some.
Hedge flows pushing a bit higher. There just doesn't seem to be anybody interested in buying right now. There's no flow coming in on the bullish side for the most part. We're moving back above this strike right here. 64.25. We're at 64.33. Trying to turn the corner.
There's no clear answers to all these questions. That's a place where if we don't fill the vacuum, they will. China will. Yeah. And I think it's important to have global use of our technologies, so it's a balancing act.
I would like to talk a little bit about OpenAI, but in a slightly different context. You wrote the first real institutional check into OpenAI, if you will. You are not an investor in Anthropic, that's right.
You're not an investor.
The conversation here at Hill and Valley, in part, has been, of course, Anthropic's relationship with the Pentagon. And what I heard from a number of Anthropic investors is that they actually cheered Dario Amodei taking not a moral high ground per se, but basically saying having that niche of having red lines.
Oracle's still pushing a bit higher.
Now, the consequence of that action is that OpenAI came in and had an opportunity to do business with the Pentagon. And I would be grateful,
Okay. The stocks that are showing up on the NASDAQ 100 at the top of the list, AstraZeneca gapping up, not following through, nothing really major there. Micron's number 3 on the NASDAQ 100. Trying to bounce Micron. Lam Research, looking for the follow through in Lam. That depends on Micron, it looks like, and Applied Materials. All three of these tied together. Applied Materials trying to get back above the 50-day. American Electric Power utilities are up today. AEP looks pretty good, coming off the 50-day, day 6. American Electric Power.
I don't think Dario is in a position to do that or judge that. And I think so the principle of sticking to principles is great. He just happened to have the wrong principles. And it's reasonable for him to explain what the technology is capable of or not capable of. The capabilities which he's qualified to do. Qualified to then judge how that technology is used. That's just being arrogant.
I was Coastal Ventures co-founder Vinod Khosla. Anthropic has won a key court order pausing a ban on government use of the company's AI tools. It follows the dispute between Anthropic and the Pentagon over the use of its AI. Bloomberg's Katrina Manson covers defense technology and has the details. This was a moment in time this week, but what do we need to know about it?
Well, the judge is saying this looks like illegal retaliation, putting a 7-day an injunction saying that the Pentagon cannot declare Anthropic, in fact, a supply chain risk. Now, the judge put a stay on that injunction, so for 7 days, the Pentagon now has a chance to appeal. So we're really still in this increment.
There's just absolutely no one trading, it seems, today.
Between whether the Pentagon can claim
I don't see much flow.
essentially usurping chain of commands, the president
Bitcoin trying to turn the corner. truly disappointing. Bitcoin never followed through this week. Instead, it just continued to test these lows again, down to 65,000.
A lot of people weighed in on this. Palantir has been one of the winners of the
Coinbase.
towards
All right.
with the private sector and opined on it. It's been a big week for you as well.
TAP.
The new book, Project Maven, out in the world. Thread that together where Palantir
Molson Coors, TAP, and Campbell's Soup. Those are active today. Campbell's Soup up. Campbell's Soup up almost 5% on the day.
To me, this Cold War between East and West Coast, between Silicon Valley and Washington, goes back to Project Maven. The moment that Google workers protested, discovering they were involved in what they called the business of war, their cutting-edge AI tech being used to
ARM Holdings trying to turn back up. ARM.
identify potential targets in U.S. battle zones. Now, today we see it playing out slightly differently, but nonetheless, we are in this key moment where Anthropic and the Pentagon are now at war again, and AI is at the heart of another fracture between Silicon Valley and what the Pentagon wants to do with AI.
Bloomberg's Katrina Manson, author of that new book, Project Maven, hits the shelves this week. Thank you very much. Now, coming up, Amazon is coming after Walmart in rural America. We'll discuss why. That conversation's next. This is Bloomberg Tech.
At Par Physical Therapy, our goal is to get you back into activity faster. Whether you're recovering from surgery, dealing with a sports injury, or managing chronic pain, we're here to help. With personalized care and hands-on treatment, we work directly with you to reach your goals. Whether that's getting you back to your favorite activity or keeping up with your family. And now with a new location in Roseland, expert care is closer than ever. Call today to get your complimentary screening at Par Physical Therapy. Par Physical Therapy, getting you back into the swing of things.
Today, business happens virtually everywhere. That's why you need Supermobile from T-Mobile. In moments of high demand, T-Mobile's network adapts to put your business connection first. Supermobile, the best business plan, best network.
Discover Alaska's untamed beauty with Azamara Cruises. For longer stays.
Okay. Just sit tight. Looking for more upside. Looking for the bounce to continue, or we just sit here and do nothing.
Hi, my name is Wally, and this is my wife, Vicky. We are standing in our new remodeled showroom at Sunspace in Myrtle Beach.
We're a veteran-owned company, and we've been building custom sunrooms for over a decade.
Our dedicated team ensures high-quality official work on every project. No subcontractors involved.
With 3 custom designs to on-site project reviews and permit assistance, we make the process stress-free and easy for you.
Our goal is to bring your vision to life. Come see us at our showroom and let us build the perfect sunroom for you.
Satellite internet that's fast, reliable, and installed by professionals. For work, for play, for every day. Available anywhere you call home. Visit viasat.com/internet now or call 833-8-VIASAT to sign up today.
More than what you need to know, it's what you need to think about.
Welcome to Bloomberg This Weekend. I'm David Miller.
I'm Lisa Matei. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Amazon spent decades perfecting urban and suburban delivery. Now Amazon's expanding rapidly in rural America, duking it out.
Very slow day today.
$1 trillion.
Opening up lower.
Bloomberg crunched exclusive data for this big take.
Trying to turn the corner. S&P 500.
Interesting battleground. I mean,
Well, Amazon's always tried to sell to rural America, and the proposition has always been, look, we'll connect you with a broad assortment of goods that it's going to be tough for you to find nearby, but you're going to have to wait for them, you know. Amazon's known for like 1-2 day delivery in most of the country, but in rural areas, it can be 4 days, 6 days. It's always been a bit longer. And so the challenge there is how do we speed that up, given high costs, right? It's so expensive to deliver to dispersed populations. So they're trying to crack that, and they're bringing in small business owners to deliver around their businesses for like $2.50 a pop. So that's really how they're trying to crack this code, is by bringing in a new kind of partner other than the postal service.
Walmart trying to get that back above the 50-day
to do these deliveries, kind of like a
descending pattern.
Is the state of play that Walmart still dominates in rural areas, and I guess Amazon
It's bigger than Amazon. It's bigger than Amazon in rural areas, but rural America's spending is also very fragmented. About 80% of it is going to like a huge.
Looking for Walmart to break higher in the short term.
Chains and things, so it's wide open. Walmart's definitely bigger than Amazon in rural America, and Amazon its new delivery centers are like on top of it in a lot of cases. So there's a fight between those two. And stand to lose some share.
Vivek Spencer Soper with the big take. Thank you very much. One last piece of news, especially if you're planning to spend your weekend playing video games. Sony plans to raise the price for the PlayStation 5 console by $100, citing pressure on the global economy. The hikes take effect on April 2nd, with the cost to consumers going up around the world. Remember, PlayStation, hugely popular console in countries all over the planet. That does it for this edition of Bloomberg Tech. Happy Friday, wishing you a good weekend. But there was a lot in the show to recap. You can do that on the podcast, and you know where to find it. From San Francisco, this is Bloomberg Tech.
Sí, AT&T viene su mejor oferta en el nuevo Samsung Galaxy S26 Ultra. Y necesidad, la más cara. Mira, qué bueno, porque las nuevas son baratas, ¿eh? ¿Por qué lástima que no hubiera mi primo? Llámale. Pero cuando te bajemos, por favor,
Obtén el nuevo Samsung Galaxy S26 Ultra con Super Steady Video por $0 con intercambio elegible. Cualquier colisión y sin necesitar el plan fiscal.
After last month's massive solar flare added a 25th hour to the day, wondering what
Anything can change the world of work. From HR to payroll, ADP designs for the next anything. At Mizuho Americas, we know this course. This one, and this one. Definitely this one. We know them well because we're experts in banking in global markets. Mizuho Americas.
Super excited about is just the opportunity to transform how the U.S. and other countries.
Walmart, S&P. Markets are not moving.
How do you think about your own trajectory? I mean, $1.7 billion valuation. You clearly don't have problems getting financing, fundraising, but how do you think about the company and whether you'll be going public?
Yeah, no, it was really interesting. We're really proud of the work today and the valuation that we've achieved. There's clearly a tremendous amount of demand for investors because this is going to be a space where investors want to play a role. We had tremendous demand with this round coming together. We're going to continue to stay focused on execution, stay focused on delivering the outcomes. We're excited about the growth trajectory that we're on. We do think there's an opportunity to be a public company at some point, but we're not in a hurry to do that. But we're thinking about the maturity required and the operational excellence required to be a public company, and that's something that we're working towards every single day.
Well, thank you for coming on to talk about it. It's really good to hear from you on this. Gary, Shield AI.
S&P.
Market is still kind of down.
Still under pressure. The bond market's calmed a little bit. Yields are about flat, so that's not one of the pressure points. But
Looking for hedge flows to take off to the upside. That won't happen unless we see some buying. Coming off the lows. If you're just joining us, I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's 12 o'clock straight up, midday, March 27th, Friday. Looking for shorts to cover, perhaps.
still uncertain market with the investment committee. Joining me for the hour today, Stephanie Lang, Jim Leventhal, Kevin Simpson, Rob Sechin. We will show you the markets here. S&P and NASDAQ are now on track for their fifth straight negative week. Obviously, oil remains a big story. Bottom of your screen, about $98 for WTI. Yields have been higher too. Now they are back almost flat, but nonetheless, the 10-year yield and that back up there, we were getting kind of close to 450. Let's take a look at yields, guys. If we could throw those up, there it is, 442. So we need to watch that. Steve Leisman says now 50% odds of a rate hike this year. Bank of America suggests we think markets are now anticipating a more hawkish Fed reaction function and possibly a broader commodity shock. Stephanie, the commodity shock already has been rather dramatic. It's the biggest supply disruption ever for the global oil market. There's really been no answer for that yet. And in terms of the Fed, Richmond's bargain this morning, the Fed should pause, he said, to figure out what to do. It's hard to ignore the inflation data, and Philly's Paulson was fairly similar in her commentary as well. What do you make of all that?
I mean, I just don't think anybody can make a case for doing anything right now. There's so much that we don't know. So no cuts, no raises. I'm not thinking about raises. And if we're talking about the fall, a million things can happen between now and the fall. So the headlines are coming fast and furious every single day, back and forth. And that's not inspiring confidence for sure. But there's a lot we still don't know. We don't even know who the U.S. is talking to, number one. Number two, will other countries get involved? Number three, will boots on the ground go on the ground over the weekend especially? So I understand the anxiety. I understand that people want to take risk off. I've taken a little bit of risk off too, but I'm looking for other areas to be buying. We'll talk about that later. I still believe this to be short-lived. Spreads are tame, so that's really good. And I think it's really interesting and noteworthy that what is winning, do you know the Russell 1000 value is up 12% year to date. I'm sorry, it's flat year to date. Growth is down 12% year to date. And the energy sectors, the material sector, even the SMH are still up. Everything that has worked in the past couple of years is not doing well. Tech, comm services, Mag 7 is down 15%.
Nothing's doing well since the war started except for the energy.
No, well,
yes, that's a fact. No, materials are down 9% since the war started.
Some precious metals are doing, are not all.
No, I'm telling you, the material sector is down 9% since the war started.
Oh, since the war.
Just telling you.
Oh, okay, since the war started, but year to date, actually.
Yeah, but the whole premise of this conversation and what the debate is why should we be saying, well, this is up since year to date when
because the rotation started.
Yes, but the rotation has stopped.
Looking for that hedge flow to continue moving higher. Not expecting much. Not expecting much. The markets are just sitting here, not much volume. Not the best risk reward to put money to work right now. If we start moving and it becomes obvious, volumes coming in, I'll let you know. But we'll hear high ticks, extreme high ticks. Do see tick is turning back up, tick cumulative on the 15-minute. So indicators are starting to turn perhaps upward.
The S&P is off more than 8% since its high in early January. So Rob, can't really find much stability because we just don't know much of anything at this point other than the Strait of Hormuz is still closed. Oil prices are still moving higher. Yields have entered the building. And Fed talk is more hawkish. Market expectations of Fed activity has moved more hawkish. So what do you do with all of that? Because I would submit that right now, oil and yields have way more sway over this market than the president backing off a threat.
10-year yield backing off from the high of the day. 10-year yield.
Because this isn't that. Barclays addresses that as well today. They say, quote, headline fatigue is starting to undermine the Trump put efficacy. Trump's apparent willingness to de-escalate the conflict has kept equity markets afloat so far. The risk is that constant flip-flopping and headline fatigue is starting to seriously undermine the efficacy of the Trump put. Now, I don't think anybody believes that the so-called Trump put is dead. I still believe that they think it's alive and well. And for
isn't tariffs, okay? And it's very easy to make, according to Goldman's Tony Coscarella, who published just before we came on the air today, you could make a very tactical bull and you could make a tactical bear case in the same way. It's not like Steph is wrong because you can make a tactical bull case, but you can just as easily, for the first time in a while, make a real easy tactical bear case too.
And there's a lot of asymmetry on that. I think the bull case certainly can be made. There's probably less upside to the bull case. I think the bear case, if it plays out really negatively, could play out much worse. I find that what's kind of most interesting in all of this is that despite the pressure that we're seeing from energy going up and the implications on helium and the implications on semis with helium and all the derivative impacts of
VIX hanging in there, just below 30. VIX.
everywhere. At the same time, you have credit that, while
Crude oil.
tightening as much as Steph said, it's certainly tougher to get from private credit firms who aren't raising the money that they used to raise. So that's kind of a separate issue, right? That is the fuel that has fueled this economy for quite a bit of time. And yet, in the face of all that, markets have re-rated from a 24 PE down to a 19 PE. In technology specifically, where most of the exciting growth comes from and most of the forward growth is coming from, Scott, has re-rated down to a market multiple of 19.
Yeah, that's what would happen when the NASDAQ enters a correction like it did earlier this morning. It's down 10%.
And it's down 10%.
From its high.
And so when I look at where the opportunity is, it is in upgrading the quality of your portfolios, right? And I think cyclicals are going to be a little more dangerous because of the pressure on rates to stay higher, because the economic pressure on the consumer, which is real, okay?
I want to stop you just for 2 seconds, okay? On the notion of quote unquote upgrading your portfolio, because in this current environment, there's been no real way to do that unless you're in cash. There's been nowhere to hide. FT today with a headline, the traditional 60-40 portfolio of global stocks and fixed income having its worst month since 2022. That underscores the fact that there really has been nowhere to hide in this market.
There has been absolutely nowhere to hide except energy, as you said. We're
Sure, but I mean, you know, what is that? 3% of the S&P 500.
We're overweight energy. We're certainly overweight the names that are most attractive in some of these spaces. Yes, some of them are getting hit, but others have held up incredibly, relatively well because we started from a lower base of a valuation standpoint. Most portfolios for clients are flat for the year, which shows you we've had a broadening out. There's been some success. There's been some headline damage. But if I were to talk to clients about what to do, I'd undulate the accelerator right here, see if you can get a little more visibility into what's going to happen.
What do you mean? Like
slow down.
Back a little bit.
Slow down if you have cash to put to work.
Okay.
I'd slow down, and I would be at the ready because we know that the number one bet we've been able to make over the last several years is don't bet against the White House. And that's not a political statement.
I know exactly what it is. It is the idea, as why I suggested that nobody is saying, even in an environment with so-called headline fatigue and maybe the market not paying attention to every word out of Washington over the last 24 to 48 hours, don't discount the ability of a headline or a social media post about a breakthrough regarding anything to dramatically move this market. And I think everybody agrees with you on that. Now, in terms of pulling back a little bit, cautious, taking a look around through the fog and trying to figure out what's up. Citi's global asset allocation today, they cut equities to neutral because most of their negative equity signals are triggered. So they're just taking a step back and saying, you know what, like everybody else, we're not ready to make a call to play offense or not even necessarily to play defense. Just kind of wait and see.
I strongly agree with wait and see. I'm not quite as negative as City is. I will agree, and we're all saying the same thing. There are a ton of cross currents here. Yes, West Texas Intermediate is up. However, Dubai and Omani spreads are down. The spreads are all across the board. Friday, this is the fourth Friday in a row that we've been down. Does that mean that this will be the fourth Monday in a row that we're up? Nobody knows. And the right thing to do is to sit on your hands right now, not make any large moves. Don't get scared and panic right now.
Low ticker at minus 800.
This is a great opportunity.
All right, low ticks.
Military assets, U.S. military assets being moved in theater. This president has a history of not bluffing. I mean, that's just a fact. He has used these assets when they are moved in theater. So I would be cautious, but not to the point of selling anything. And one saving grace here that we haven't talked about is what's going on with earnings estimates for the S&P 500 overall. Those estimates are up 2% over the month since the conflict started. And they show 16% growth year over year if they come to fruition, which versus a 20 times forward multiple, I would say is actually a bargain. Will those come to fruition, those earnings estimates? Part of it's energy. Part of it, energy estimates are rocketed higher. But a lot of it is artificial intelligence build out still, and I don't think that's going to change.
What do you think? Well, everybody in their perspective, how do you see it?
I mean, we came into the year expecting rate cuts, and in the opening, you were talking about us thinking about a 50% chance of a rate hike, and that's what breaks the earnings momentum. If we have inflation that affects the consumer, which we're already seeing with energy, if that trickles into corporate margins and ultimately earnings, then we have a problem. So I like Citi's call of going back and going neutral. I like what Rob said. It doesn't mean trying to time the market. That's a fool's errand. But I think having a little bit of dry powder, being able to buy the dips, but lowering expectations. I can't imagine that earnings aren't going to come down if we're sitting here a month from now and nothing's changed in the Middle East.
I think Kev nails it. I mean,
this is a very good point.
If you were talking about your input costs going up for a broad range of things, not just fuel, but if you're talking about the grain disruptions and a disruption to the food supply, you're talking about a whole bunch of different kinds of companies whose margins could be negatively impacted. So if you have higher inflation, higher rates, margins come down, multiples come down, which means stocks don't deserve to trade at the levels that they're trading at now.
What if you
They
have
need to reset lower too.
What if you have higher productivity? What if that actually comes into play?
You're probably going to have that. You already are.
Crude oil just continues to pound the highs.
Technology because of AI. Companies are telling you that they are seeing massive cost cuts because they are implementing AI. AI gets a bad rap on terms of the labor market and taking jobs, but no one really talks about the growth plus the productivity piece. And if you get more productivity, that will help to mitigate. It is not going to offset every single line item from expenses, but it certainly could be a partial offset. And I just don't buy that companies are going to take the hit on margins. They'll figure out ways to restructuring costs.
They might not have a choice. I mean, they're going to have to potentially. They might have to potentially take it initially. You're suggesting, well, they would just restructure so fast. No, that's not how it's going to work.
With crude oil moving higher, we can look back to previous administrations. The most glaring example is the Obama years, where we spent 45 months above $100 a barrel Brent crude. Biden 5 months, Bush 7 months, and yet the markets are just below all-time highs, 10% off, 8% off, whatever the number is now. So not knowing what the president's going to do next, I guess, has got the markets on edge, but does look pretty good. The probability is that we're eventually going to continue to move higher, obviously. We're looking for that March reversal. Haven't seen it yet.
We've seen it on Mondays where he comes out with a tweet or something changes, and regardless of whether it's real or substantive,
it moves the markets. So you just have to be prepared. If you want to get negative, I'm not on the markets. Okay, I'm not getting negative. If you want to,
What
just
are you
need to be
getting?
prepared.
Are you sanguine?
I'm
What are
hanging in
you?
there. The only thing I can say is I'm hanging in there, Scott. I don't like what's going on with oil. I don't like any of these discussions, nor should I, about rate hikes.
I mean, were you getting? I'm trying to figure out, like, what does that mean? I'm not getting negative on the markets. Were
I'm
you
hanging in
were
there.
you
I'm fully invested, and I'm hanging in there. I don't feel good. I don't feel good. But I'm not. And I wake up every morning. Should I sell something this morning? No, I'm not doing it. I'm not selling.
Hold on real quick. Let me get a news alert, and I'll come back to you for more. But let me go to Dom Chu. He's got something for us on Citi. What do we know here, Dom?
All right, so what we know right now is a Bloomberg report saying that Citigroup's top executives are weighing buying another bank, a move long considered inconceivable as the firm wraps up years of work to address regulator criticisms. This is a Bloomberg report that is now shaking up some stocks around the regional bank level to a lesser degree, but more so for shares of Citigroup, which you can see right now intraday did take a dip on that. Senior leaders, according to this report, of the New York-based firm have held preliminary discussions in recent months about trying to acquire a major U.S. regional lender to ramp up deposits. Conversations, they say, are in early stages for people familiar with the matter. Citigroup does remain under a pair of consent orders that requires them to seek regulatory approval before attempting to make acquisitions.
Commodities.
Did reach out to Citigroup with
Got to get these commodities back under control. That means they need to break down below the 20-day, below 2750 in the next few weeks. This needs to back off. We need to see the 10-year yield back off more. A lot of things need to fall into place. We're going into the weekend with a weak market, and all the indicators pointing to potential for more downside and upside, for that matter. All these media people are talking about. All we need is a tweet.
That they are not planning any kind of a plan to buy a regional bank or wealth brokerage.
All right, the New York Fangs look weak as well. New York Fangs. New York Fangs aren't doing anything except move lower. Broke down below support. It looks pretty ugly.
Jim, so first on the Citi side of things, because you're not a regional bank guy, but Citi certainly you are.
You know,
If you're bearish, if you're positioned bearish, just want to stay with your position, maybe taking some off into weakness. Because any bounce, these puts will evaporate very quickly. New York Fang components.
This is how you want to battle test a brand new CFO. And finally, as Dom pointed out, there are those consent orders. The timing of this is a little surprising.
Why the big banks just got a Basel III idea that is going to be very favorable for them, like they've been arguing forever to do exactly this kind of stuff.
As I said, I warmed to the idea as Dom talking, but I see some impediments. I mean, again, brand new CFO, okay, you're into the fire, buddy. And also those consent orders might make it a little bit difficult, Scott. Just might make it a little
maybe
difficult.
so. Aren't you trust?
Yeah.
Recently, right?
Yeah. Well, for the last couple of months, but I've recently added to it.
Yeah, that's what I remember. How do you take this news?
I mean, I think this is great news for the regional banks because they're all trading at about 9 times book value. I mean, they're cheap. If Citi wants to do it, now is definitely the time. And the excess capital that the big six banks
Sitting on top the 200-day KRE, KBE.
gets implemented, they will have a lot of cash to do a lot of different things: buy back stock, increase dividends, lend, and then also to do M&A. And I do think that there are some really great regionals that actually are in good regions of the country. Truist is in the southeast.
Maybe this is very preliminary.
S&P.
At the end of the year, Banamex should be done. Fine, you've got even more capital from the
Nothing bullish here. If anything, extreme on the downside.
I mean, financials could use any bit of good news.
Yes,
Robert, right? The group just has not traded well. Their worst sector quarter to date, which is year to date, obviously, down 10%.
and really a hugely cyclical expectation on there, and deal activity picking up, trading activity picking up. They were probably doing well, pretty well in the trading business. I do think on the back end of this, to Steph's point, these stocks have gotten cheap. The highest quality names are going to benefit from bringing some of these companies that we all love public. There's no question that M&A activity has started to pick up. You might not like the pricing out there. We're seeing a lot of discounts on some of these bids, and I have a feeling that some of them might get pulling. But you want to be a buyer when you have these types of resets if you're long-term betting on an economic recovery, because the financials are kind of ground zero for participating in that. In addition, given the agita and raising money in private credit from retail investors, the lending landscape is changing for them quite a bit. And they're going to be able to have their pick of the deals that they want to be involved in.
All right, you know what else got cheaper? A lot of your favorite technology stocks. I mean, you can only laugh because it's like impossible to make sense of some of these moves. What Barron's I referenced yesterday has now termed a miserable 7, at least for big tech. Unless the Qs rally 120 basis points today around that, we're looking at the 5th straight week of losses, the longest streak in 4 years, one of the more notable stretches over the last 20. That's for the NAS 100. Mega caps off their recent highs. Microsoft down 35%. Meta down 33%. Amazon down 22. Alphabet down 20. Nvidia down 20. Meta's coming off its lowest close in almost a year. Since April of 2025, I'm guessing that must have been around Liberation Day. Kevin, you got stopped.
Man, look at this market. It's just sitting here, threatening to drop off or pop, squeezing. RSI at 40. MACD is flat. Volume faded off. We're below recent lows from last Friday.
To where it is today. We added at 610. We added at 620. Then we had April of last year. For those of you who may remember the tariff scare, we were able to pick up shares much lower at around $510. So now we've accumulated a full position in Meta. We're covered call writers. We sold a covered call for August. We brought in $25 for a 705 call. Stock gets called away. We're effectively out at 7:30 and annoyed by it because the stock had gone higher. So think about being upset that we sold it at 7:30. Over the course of the past few months, we've been trimming the position. We sold in December at 656. We sold in January at 616.
So 4 weeks below the 50-day moving average. After briefly popping above, we dropped back below the 50-day. It's just been a fade ever since.
Same name at some point, but it's active management versus than just buy and hold.
You know what the most pressing question in America is right now? Why hasn't Stephanie Link been buying more Meta on this pullback?
I might.
I know you might. That's why I'm asking you America's most pressing question. Why haven't you to this point? What are you waiting for?
16 times earnings, Scott. It's not even at a market multiple. And that is so rare for a company that's growing 26% in revenues and 20% in earnings. And I think everyone forgot that they increased their revenue numbers and their targets by $3 billion because of AI last quarter. So stay tuned.
I am in total agreement with this lady that we have a business set that has gone from being cap light to cap heavy. And the market's digesting that because they want to see what's going to be monetized. Steph has just told you that they are starting to monetize it. We haven't changed our position. It's already massively overweight in our portfolios. And so I do think that if you don't own Meta, this is a great time to be looking at this name.
Okay, the other names that we've been talking about all week, Microsoft's worst quarter since 2008. Stock is obviously not traded well, nor is Nvidia, okay? Now you have Nvidia just under 170, which Christina Partsinevelos.
Campbell's Soup up 4.5%, 5.5%. Campbell's Soup coming off the low. Put a stop underneath 20. I wouldn't buy it right now. I'd wait for a little dip. if we get one, but it's been a pretty solid day. RSI started off the day elevated and just stays above 50, indicating the strength of this trend is persistent. Trend change in Campbell's soup. Okay, we get the turn. We get the turn. What is Apple doing? Apple had turned yesterday back down below. All right, so that's stopping people out there. Need to get back above next week. Apple, Microsoft, still trending lower. Microsoft for the past 4 weeks.
Specifically was July, but then shares rallied nearly 20% over the next 6 weeks. The bull case this time around is harder to make. Earnings haven't moved the stock. GTC conference just a few weeks ago didn't move the stock. The catalysts keep coming, and yet the stock keeps stalling.
Look, thank you for that. Christina Partsinevelos, Jimmy.
Yeah, unfortunately, she's exactly right. The technicals look terrible here. I'm not the greatest technical analyst, but I can tell you when the 50-day is sloping down and looking like it's going to cross the 200-day, that could be a problem. And as she pointed out, as much as I think it's very cheap, that is.
Is that what they call that?
Yes.
So I'm no technician either, but you know.
Is that what it is? It is. Are you asking seriously or are you teasing me? It is seriously a little bit. Okay. Okay.
I wasn't really teasing, but then when you mentioned it, I was like, well, maybe a little bit.
God, I want to tease you back on Alphabet, but I know you hate it when I gave you
Too many
a
props on that already.
Okay. Look, the fundamentals are terrific. The stock is, in my opinion, undervalued when you look at the earnings growth rate versus the multiple. But in the short term, there's nothing catalytic, and so the technicals are what's going to matter here.
Jonathan Krinsky, by the way, in terms of the semis, says they look extremely vulnerable. Be careful with that one, because if they pull back of any greater degree, it's going to be a definite net negative for the overall market, in which many of these things are down substantially from their recent highs. Broadcom's down 26.5% from its recent high. Stock you love so much, but that you're trimming here. Why?
Just it was really small, and I wanted to buy something else that we'll talk in the next block.
You love this name. It's just like the kind of thing where I say it's down 27%. You're like, and I'm buying more.
Yeah, it's true, but I've had in the past year up 76%, and the stock is still trading at 29 times forward estimates. I think it might be a little vulnerable here. If the rest of semis pull back, I would buy it all the way. I would buy it back. But when I tell you that Meta is at 16 times, to me, that's so much more compelling than something that's at 29 times. Now, that being said, I think this company has $16 to $18 of earnings power over the next 3 years. So that's why if it were to get kind of caught up in the whole sell-off, and if semis actually see another leg down, then maybe I would buy it back. But I just wanted to risk mitigate and then take the cash and buy something else.
Okay, so we'll take a break. We will get to the stock that Steph added to with some of the proceeds from the Broadcom trim. Also, have you seen shares today of Palo Alto? Have you seen shares of CrowdStrike? They're getting hammered again. We got the story next.
ARTL. SST. UBXG. ARTL.
That's what you can make, $100 with about $400 in risk on it, but that's all the way below the 235 level. It takes your break even down to 239 over the next month, basically, on that. I think one of the keys, Joe,
Campbell's
that was you're selling the 240 put.
looking for the follow through.
4.5% cushion to the downside to get to that 240.
Molson Coors, TAP, similar idea. Molson Coors, TAP. Moving back above the 20-day, the 20 EMA on the 60-minute. volume coming in. Looking for more follow through in those. XLP, Consumer Staples, has pulled back recently. It bounced at the, what was it, 50-day moving average? No, 200-day, right above the 200-day. So we're looking for a bounce in Consumer Staples. Utilities have been doing really well. Okay, American Electric Power, that was active earlier. AEP.
There's Joe's passive neutral to bullish spread. Joe, I looked at this a little bit different where maybe I went a little bit shorter also. I went out to the April 17th monthly options and I looked at buying the 250 put, which is basically at the money. So it's basically a neutral, slightly bearish trade. And then against that, in the April 2nd weekly options that expire in just 6 days, sell that same 250 put. So a 2-week wide 250 put calendar to the downside just are basically at the money. You're going to pay a debit of roughly about $3 on that. It might be just a little bit higher. But that debit you pay on this is going to be your risk, $3 per spread. You can see here from the risk profile, you want it to hover over the next 3 weeks around that 250 level, but you got a range probably be between about 244.
Okay, AEP utilities. Let's go see what utilities look like. Okay, utilities.
Where, hey, even if we gyrate, there's some volatile moves, you still have a few weeks in this to start making adjustments on your short option.
Yeah, I mean, look, the stock has, like I said, it's held up fairly well, kind of given all of the other pressures from the rest of the market. So the chances of it staying within that range are probably pretty decent, and you get a good payout if it does stay within that range. You get a couple rolls in there that lowers the cost of the debit that you're paying for it, and it gives you a little bit of some long volatility, which, you know, as we've seen, the market has continued to expand in terms of its own volatility, but to see Apple implied volatility go up, especially as you're moving towards the earnings event in the next month or so, would not be a surprise at all.
Yeah, even on a weekly basis, those rolls, like for instance, the March 27th that expires today, that roll to the April 2nd weekly option, that's $2.80 just on one adjustment there already. So that would basically negate that. Joe, one of the things that you look at in some of these higher traded names, they've got multiple weekly options now where, hey, you don't have to roll week to week. You can roll from a Friday to a Monday or
Consumer Staples. Let's see what that looks like.
because there's multiple weekly options now that expire
Mo.
every 2 or 3 days in a lot of these names, these highly traded names like Apple on that one.
They got daily options, Tommy. Daily options, so you could roll from a Tuesday to a Thursday if you wanted. So there's plenty to do there. Especially
Altria Group. Archer Daniel Midland, ADM.
So keep that in mind on that. But you got some assignment risk on that short option, but looking for some consolidation on that on the put calendar, Diane, and then Joe's looking for something a little bit more passive. Hey, they could both potentially be profitable if we hang out around here.
Yeah, good stuff, guys. And Joe, thank you so much for being with us all month. I know you pop in.
Clorox. Coca-Cola.
Everything that you bring, your insights, your bull V-Bear example trades, your energy, your smarts. We really appreciate it.
What's PepsiCo doing? I wonder. PepsiCo. Colgate. ConAgra. CAG. Costco, Keurig, Dr. Pepper, Estee Lauder been selling off. General Mills, Hershey's, Hormel, HRL.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Sam Barnes, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab. Whether you're an experienced
Okay, a lot of these consumer staples, XLP components, XLP and XLU utilities, those are showing signs of defensive after already pulling back for the last few weeks. So a good time to look at these. Campbell's Soup, talked about that this morning, seeing some activity off the low. Campbell's Soup, 60-day, 60-minute, 20 MA, changing direction. The fangs are off.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com. Welcome back to Fast Market here on the Schwab Network. I'm Diane King Hall alongside Tom White in our Chicago studio. Time now for our Cash Tag segment. For that, we want to bring in our next guest, and that is Andy Swan, co-founder of Lightfolio. Taking a look at Palantir today. Andy, good to see you. Happy Friday to you. All right, let's get right into it. What does the sentiment trend look like for Palantir now?
Okay, S&P is still sitting here. Don't buy tech right now. Buy consumer staples, it looks like. That's what the message is for now.
Revenue growth. They've got 57% profit margins, and everything that we see at Lightfolio in terms of web traffic tells us that they're only gaining more attention and more institutional caliber traffic to their site, telling us that every corporation in the world, every government in the world is on their list as potential clients, and more importantly than that, those potential customers are coming in the door and they're extremely happy with the product and the services that they receive. And so these are turning into long-term contracts. Lightfolio web traffic data has been highly correlated with stock price with a little bit of lead time. It's strong right now. It's the strongest in all of the AI sector that we track. And so Palantir is just winning in a very big way and winning bigger and bigger every day. We see that continuing all through 2026.
Andy, I think one of the problems that a lot of people have, even though the commercial side of their business is growing, I think in last quarter grew 137%.
All right, well, it looks like we're going to move lower.
The fact that the valuation
Looks like we're moving lower.
Valuation, it's 115 times 2026 earnings. I mean, that's big and that's massive, and especially in a drawdown, it's not immune to moves in the overall market. Can your sentiment
S&P.
reflect that, hey, you know what? This is one of the companies that takes AI and allows other companies and governments to use it, and that's been one of the more difficult things out there for people to understand about AI. It's like, hey, we can throw all this money at it, but here's a company that's already using it, and they don't really have a competitor in this space yet.
Yeah, they bring in these corporate clients into their boot camps, and within days, the client is leaving with something that they can actually deploy in their company that takes advantage of AI. No one else is really doing that at scale. And so when you talk about evaluation, I don't know. The contrary argument to their valuation is that simply it's just too high. The number is too high. But how do you value a company that is one of one in its space with the biggest technology tailwind, in decades at the back, and that's growing 70% year over year, over 100% among commercial clients, and doing it all with a profit margin of above 50%. There's really no math for that. There's no formula for that for investors. So the bottom line is you just have to pay up. If you want to be invested in this company, you're just going to have to pay an expensive ratio because you believe in the future of the company and in the execution of the team. which so far they've given us absolutely no reason to doubt them. In fact, it's just the opposite.
At the same time, though, macro matters, right? When you think about the big picture and the geopolitical turmoil that's been hitting the market broadly speaking. So Palantir is obviously not immune to that. Is that something that comes up when you look at, the sentiment indicators as it relates to Palantir?
Yeah, it does, but I think that can obviously impact valuation as especially investors get a little skittish about paying 100 times earnings in a macro environment like this. But in terms of a business consequence, I actually think it's just the opposite. I think that the more geopolitical turmoil, the more economic turmoil there is, the more corporations and the U.S. government are going to turn to a company like Palantir to help them improve their efficiency and maintain their own profit margins. So I think that the current environment could actually be working very much in Palantir's favor. Like the rest of us, I hope that a lot of this stuff gets resolved very quickly. But from a Palantir investor standpoint, it's really not the worst thing in the world for there to be a little bit of chaos and a little bit of pressure on companies to maintain or improve their margins. And AI being the solution to that, they're going to go to Palantir.
Thank you, Andy. That is Andy Swan, co-founder of Lightfolio, with a look at the latest data on Palantir. So now for the trading perspective on all things Palantir, you got some good insights there from the Lightfolio team. I thought you brought up a good question, though, about valuation, because that's one of the criticisms, even for analysts who like Palantir and, what the growth picture looks like, whether you're talking about the government or the commercial side, you can't ignore that expensive level. Your thoughts before the example trade, Tom?
Yeah, I think that's been, the thorn in the side of a lot of people, coming out, like Dan Ives is very, bullish on Palantir. I think one of the keys is, what I talked about with Andy is that they're one of the companies in AI that's actually monetizing it, right? And whether it's on the government side, they've got the new contract.
Utilities, definitely on the move. Utilities. So people are jumping into utilities and consumer staples after a pullback to the 50-day. This is day 6 off of the bounce back above the 50-day.
That this is going to be the next $1-2 trillion company might come to fruition, but it's run into some problems, right? It's 30% off of its all-time highs. So I looked at this, a little bit more conservatively, and I think Joe hit the same type of strategy where, even if you think Palantir might go up, we've got a lot of volatility in the overall market right now. So anything can happen to a name that might deserve to go higher. It might get dragged down by what's going on in the overall market. So I went a little bit more passive in this example trade. I went out to the April 17th monthly options. You're going to avoid earnings on this trade because they don't report until that first week of May, where I'm going to sell the 140 strike put in April, and then against it.
SST.
SST. So getting closer, less probability of success increases the amount of credit that you collect. You got higher implied volatility. That also expands how much you can collect on these type of strategies. But this is a neutral to bullish strategy where I can still take a directional bias where if the stock was higher, I still profit. I get to keep the credit I collected. But I also profit if the stock stays here or goes lower, but remains above that break even of 137.20 over the next 3 weeks here, Diane.
Good stuff. We have got the breakdown coming out. George Sillis joins us. Take a look at Micron. Well, shares have fallen just shy of 15% this week. Fast market will be back.
Micron trying to turn back up. Maybe next week, back towards the 50-day. A lot of institutional selling. They sold the news. Micron beat. They have to increase CapEx from 20 to 25 billion. I think that's making some institutions nervous. Just take profits while it's up here at the highs. Okay, Apple turning back up. Apple is bouncing. S&P is bouncing. Apple looking for the bounce. It looked pretty good this morning. It hit 255, the call wall area. Got rejected, 250, 260, 255, 260. Not active today again. Markets are too susceptible to a quick pullback. So I'm saving cash. We're extreme oversold. We could still get more oversold, but at extreme oversold, we're looking for opportunities. We'll cover more opportunities in the weekend video, but with stocks oversold, we're looking for a bounce. Number of stocks above the 50 and 200 day. Back in April, these got more oversold. April of last year after the tariff scare. This is the 200 day. This is the 50 day. Both of these have an opportunity to pull back more. 50 days pretty oversold. So anywhere in this green zone, we have to watch for a reversal that sticks. Like over here, back in April, it stuck, started making higher highs and higher lows. There's no hurry to jump back in because we're looking at something like, we're looking at getting back into TRBCX in our investment accounts. Okay, we're off more than 15% from all-time highs, but we took this off over 6, 7, 8 weeks ago. The end of January, early February. Okay.
NASDAQ 100 lower by more than 1%. We'll continue to watch this as we know we've dipped into correction territory today. Russell 2000 also lower by more than 1% at the moment. So again, the pressure remains on the market broadly.
To date, we made up to 176% from the January 23, December 22, this entry area right in here. That some of you got long. Okay, we're still in phase 2. Unless this continues to cascade lower, in which case that would be distribution and then markdown. So nothing to do right now. If you have a day job, you don't have anything to worry about for the next week or two. You're not going to get a buy signal immediately unless we get some resolution to the war in Iran, the conflict in Iran by Monday. I doubt that happens. So what's happening right now is stocks like Campbell's Soup, Halliburton, energy stocks, consumer staples, utilities. Those are the areas where you should be looking to put money to work. If you're going to put anything to work, look at utilities and consumer staple stocks. Many of them look really strong. Like Campbell's Soup coming off the lows, you can put a stop underneath the low. Same thing with Molson Coors, TAP. I imagine Some of the other names in the group look good too. Consumer staples. Let's see. Smuckers. No, nothing there. Smuckers. PepsiCo. Little bounce in PepsiCo. You're buying on a pullback, so that's good. RSI is oversold. That's good. MACD is turning from oversold. You want to buy on pullbacks. You don't want to be buying at the highs. 60-minute changing direction on the 60-minute. This is a buy signal. Put a stop underneath the 10 EMA or the 20 EMA, 152 or 151. Look for this to continue higher. And stay away from tech right now. Tech, eventually we're going to get some buyers, but those could pull back even more. If you look at the New York FANG components, they look really ugly. New York FANG, that's telling you nothing doing right now. We got to see something at least Monday, Tuesday. Some bullish activity Monday, Tuesday off this trend line maybe. Stochastics oversold, MACD's turned down. RSI is oversold. So we could get a bounce. You just have to be patient and wait for it. I mean, because we could move lower again on Monday or into the close. So don't put any money to work at the moment. Let's wait and be patient. Micron up 2.6%. Micron down 10% on the week. It's up 2.5% now. If you look at the S&P, there's really nothing to do here. S&P sitting here chopping around. If you look at Trace, you can see this hedge flow line, a sine wave that's telling you very clearly, look for chop. Up, down volume, confirming what we're seeing. Leaning more to the bearish side right now. 3-to-1 on the NASDAQ composite. 1-to-1 on the New York Stock Exchange. So that looks good. New York Stock Exchange. New York Stock Exchange above the 200-day. Just gave back the gains from earlier in the week, yesterday and today. So we're looking for a bounce next week. It's only 1-to-1 down volume right now. The Dow Industrials are 10-to-1 down right now. Only 30 stocks. Okay, sitting at the low. Dow Industrials. Just feels like they're going to bounce. Everything is oversold. I'm thinking the probabilities of a bounce are greater. Though weakness can persist. All it takes is a tweet. Best way to keep from trading is just push away from your trading desk. Go to lunch. Go play golf. Go swimming. Ride a bike. Do something. Get outside. Enjoy the weather. It's beautiful outside. I took a walk a few minutes ago while I made phone calls. It's gorgeous outside. No reason to sit in front of your computer right now. The markets are going to do what they're going to do. You don't have any control over it. And if you hear me screaming at the markets, you'll know extreme high tech, whatever. We'll have some reasons to pick up shares. Right now is not the time.
Potentially disrupt this type of strategy, but you do need a move to the upside. So we're not to the May monthly options here. So you've got 49 days to expiration in this trade, so you got plenty of trade, plenty of time in this one. going out to the May, buying the 360 call. That's basically at the money here, just slightly in the money. That's going to have that higher delta, react more like the stock. Then against it, sell the 410 strike call. So bullish, $50 wide call vertical. You're paying roughly about a $20 debit for it. $50 wide, you're paying $20. So $2,000 in risk, and it takes your break even all the way up. You add that 20 to the 360. 380 is your break even. So you need the stock to get above that level to start seeing some profitability on that one. But it's a $365 stock. So on a percentage basis, to get it back above that level isn't that much. Remember, the all-time high was 471 just over a week ago in these shares. So directionally aggressive a little bit, but you don't need that big of a percentage movement because you're buying this vertical. It gives you that flexibility as far as trade management. I don't have to wait 49 days to hope that the stock gets above 410, right? If it starts to expand in price, that gives you some optionality as far as trade management goes, closing it early potentially or a portion of your trade. So that might be the way to look at it if you think the stock is going to rebound after the 6-session losing streak.
VSA.
All right, that's going to do it for us today on Fast Market. I'm Diane King Hall alongside Tom White. Our thanks to Joe Mazzola once again for stepping in this month. Download the Schwab Network app. It's available in the App Store and tune in 24/7 on schwabnetwork.com. Stick around. You've got Next in Investing with Alex Coffey and Denny Moore coming up.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your Investor Checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network. Your real-time market coverage with excellent strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
One of the most important things is you're making a play in a risk-defined way. You're going into earnings.
If you're worried about the markets moving lower, I would not be buying puts down here. What I'd be doing is buying consumer staple stocks. I put those in the alerts channel as well as in the trading room. I'd be looking at consumer staples and utilities. Both of those have a bid. It looks like institutions buying, judging by the volume. So that's where I would hedge because there appears to be money coming out of tech, probably going into consumer staples and utilities. Don't buy puts down here because all you need is one big bounce in VIX to drop off and you lose half the value of your puts instantly. Okay, with VIX up here near 30, that's telling you look for a 2% move. More or less about a 2% move, rule of 16. Oh boy. Down volume, still leading. Buy consumer staples, buy utilities. Forget about puts. It's too late for puts. Unless you're buying put flies or something like that, make it cheap.
Yeah, it's not a lot of good streaks going right now. All that being said, though, all-time high close to where we are now for the S&P 500 in real time, 6.51%. So it's like happening in slow motion. But like, I think the market is ready for a weekend, exhausted. It's taken a lot out of us from the headlines, the back and forth, the constant refreshing. But just the relentless nature of a month and a week, basically 5 weeks straight of downwards pressure. Yeah, we haven't gone a whole lot far away from where we had just been. I mean, we were talking about this, a year ago at this time. We had a single day where there was a rally of over 10%. So I'm not saying there's some truth in the Middle East to expect that. It'd probably be extraordinarily unlikely. But it's possible to literally get back to all-time highs in a single day. We've seen it happen. That to be said, it doesn't take away from the emotional impact of 5 straight down weeks.
Yeah, that's very true. You're right. It has felt more gradual. It hasn't felt as, nearly as drastic. It hasn't been as drastic as what we saw last April. But
All right. All right. Apple, no follow through. Microsoft, no follow through. Tesla, obviously lower. New York Bangs look terrible. New York Fang Components Index.
Yeah, and to add to that, you have a VIX that's basically 30. And you have a realized volatility. So what we've seen over the last month, that would coincide to an annualized figure that's around 14%. So those two things cannot be sustained with that much gap for an extended period of time. At some point, the actual movement of the market has to be closer to what options are pricing, or what options are pricing needs to become closer to what's actually happening. Right now, there's a lot of hedging, which is preventing that kind of crescendo moment of downside trajectory. But at some point, you're either going to have to see that, and that will be like your moment of, we're finally oversold, it gets very scary, it's a big move, or gradually, we're going to have to see implied volatility come down, the market stabilize, perhaps even move higher.
Yeah, and again, the timing of that is going
Buy consumer staple stocks, buy utilities. Don't buy puts down here unless you're doing something like a put fly. I would probably use the diamonds rather than the S&P or the Qs. I'd probably use the diamonds at this point. It's only 30 stocks. I was looking at doing put flies on the Dow Industrials. Those are pretty cheap. April 17th. Looking at 450, 440, 430 puts for $1. $1 to make 700. I just keep thinking that we're going to bounce here. So if you don't want to go through put flies or anything complicated like that, just buy some consumer staples, the ones that have been moving mostly. I just posted a bunch of names in the trading room and in the alerts channel about 30 minutes ago. Consumer staples, utilities, and energy.
Looking forward to that conversation later on. But let's get some of our movers, Jenny. Let's talk Alphabet.
So those butterflies, $100 to make $900. So it's one for nine, 9-to-1 odds. But the markets would need to fall out and capitulate.
About 11.4% this month and about 11.7% on the year, another 8% though this week. So that would make it, as well as Meta Platforms, two of our worst in the Mag 7 for a week-to-date performance basis. So continuing to fall despite, I mean, we saw a pretty bullish analyst note today, all things considered, after we saw shares close at actually their lowest level on Thursday since November of 2025. And so this come, of course, as we saw those basically reactions to the various issues, them as well as Meta Platforms, that their apps were designed to be addictive. The jury did order the companies to pay roughly $6 million to the plaintiff, and Meta Platforms also was another name that saw a substantial repricing as a result of that news. And so Wells Fargo did say this morning that they're raising their price target actually to $397 from $387, which represents 41% upside from where we closed on Thursday, and they maintained their overweight rating on the stock, saying that Google right now is leveraging compute capacity advantages to new Anthropic tools, and did highlight that their licensing of their TPUs to Anthropic are also a huge boon, as we do see that that is only continuing to add cash to their overall revenue forecast, saying that this still has all the pieces necessary in place to be an AI winner, and they're more than comfortable with their current competitive position in search, given again progress in AI and with the Gemini adoption overall. So doesn't seem like we're paying much mind to this.
Hi, Tipper plus 800.
Encouraging after again a pretty brutal week for Alphabet shares, that we're at least sending on a more bullish note from one sell side analyst. And why I think this name has been such a stalwart of even just like the Mag 7 specifically is because it's one of our only names that saw actually a favorable earnings reaction this past quarter.
Yeah, there is a little bit of alarm, I think, for some of these mega cap tech names. You're now down 12% over the last 3 months, thereabouts. The high for this stock was nearly $350 a share, so you're now $75 that high. And I like to color coordinate things on my platform here over some different time frames, and it's adjusted for volatility because a name like Alphabet might not move as much as a name like Disney. Well, those colors, which have been firmly bright green for really the last year plus for Alphabet up until 3 months ago, are now shades of red. As you're watching potentially a topping pattern start to unfold for this company, and as important as it is going forward for AI and what that trade means, bulls want to see stabilization here, and they want to see that quickly.
Yeah, I mean, that was absolutely correct. And if you, look at all of these names, which are huge components of the overall market, the only name actually higher on the week still is Apple, which is, impressive, pulling back a bit here, but still up almost 2%, at least on the week, where you've, again, names like Alphabet taking it pretty heavily to the downside on a week-to-day basis, and even seeing some movement lower today, although modestly so, at least in today's session, and it still does remain actually up 76% over the last 52 weeks or so. And so now to move to another name that is Carnival, which is seeing some also pessimism today. We're down about 4%, so it's sort of teetered all over the place. We've lost, though, now about a fifth of the share's value just in the last 3 months, though still does also remain up over the past year. Now, they cut their full-year profit outlook as these higher fuel costs are weighing on their results. Although they did say that record...
Did hear high tech as I was stepped out of the room for a second. Office.
Representing more than $500 million headwind compared to their prior forecast, as the Middle East has naturally disrupted traffic in the Strait of Hormuz, and also that continues to then weigh into their now expectations. They did say this is partially offset by roughly $150 million in expected operational improvements. And they did also note that bookings for 2026 are still up by double digits at historically high
Hughes.
with roughly 85% of sailings already sold. But that is exactly the problem because, again, customer deposits for the first quarter hit a record. Onboarding spend has been strong. But if you already have guaranteed business booked at the rates that are already locked in, now with the rising costs, you have to account for that somewhere because they're obviously incurring a massive, massive cost being fuel expectations, and that's something that is, again, been very difficult to gauge, for the cruise lines as well as, the airlines.
Yeah, most of the analysts, though,
acknowledge that, but still seem to have pretty favorable views, at least the ones that I saw that update. Steeple has a buy rating, $35 price target, called it solid. Said that there's a lot of overnight noise still with what's going on in the Middle East. Jeffries, this was David Katz. He talked about, hey, it should be a slight negative. They guided down for the full year, but the near-term outlook still skews positive with 85% of 2026 already booked, and that they just announced that $2.5 billion buyback. Morgan Stanley, Jamie Rollo, overweight, 31 price target. So all in all, if you're, I guess, bullish on this space and you're seeing this, perhaps there's an opportunity in this pullback if you're willing to look through that noise of what's going on geopolitically.
And if you're willing to look through the noise, that if you look at the total debt loads of these cruise lines, which has, been a pretty central concern, especially post-pandemic, their total debt does stand at approximately $28 billion, and that's the highest among Royal Caribbean, Norwegian Cruise Line, and Carnival. And so Carnival took a significant leverage position during the pandemic that they've been steadily paying down, but they have not been paying down as quickly as Royal Caribbean. That also does remain at least a concern, as of course we do expect some added costs with rising fuel.
This is a really good point, but just to be fair in our comparison, the enterprise value, which is essentially, hey, you combine those two, you net out the cash position. If you were to compare Carnival to American Airlines, Carnival, $60 billion, 34 of that is market cap, wherein American Airlines, I know they're different, but American Airlines is like 3 to 1, 3.5 to 1 debt to equity. It's like 1 to 1, actually slightly better than that for Carnival. So they got a lot of debt, but they got a lot of market cap to offset it and kind of compare it to. They're not as leveraged as some of these companies.
And that is so true, and they've been paying it down at a more substantial rate than like American Airlines. I mean, they've been debt ridden for a decade, I feel like, at this point. So that's a very good point, and also good context of how leveraged some of these companies are right now, as we do assess, again, rising fuel is a major risk for all of these names. But now to shift gears into an entirely different conversation, we're moving into alcohol. So Brown-Forman right now seeing actually some favorability on today's session, up 6.5%, as we know that they are holding potential merger talks with France's Pernod Ricard. And so this is interesting because the company would unite then what could be seen as one of the world's largest spirits makers, actually would technically form the second largest, but the largest producer of American whiskey, as well as, what we're seeing from spirits, it would definitely make a combined portfolio of a pretty diverse company. So spirits companies have battled, this multi-year sales slump amid slowing demand, tariff pressures, and also regularly slides in valuations, as well as CEO exits and asset sales to help aid some of these costs. And so shares of Brown-Forman have, at least seen, again, some nice reaction to this move, but we've seen a substantial overall market cap reduction as multi-year, really global volumes have weighed on the entirety of the space. As we talk a lot about on this show, we're seeing just less and less of an interest for some of these younger consumers to drink alcohol, frankly, at the same rate that the street was frankly pricing in. And so this is interesting because I think that consolidation could be a trend we continue to see in this space. Again, just like looking at some of these companies' earnings over the last several quarters. But Pernod Ricard does have a market value of roughly $18.5 billion and an expensive portfolio of spirits like Irish whiskey, scotches, tequilas, but relatively little exposure to American whiskey. And so both companies have announced recently.
Markets keep testing the lows here. Feels like they're going to snap and just drop off.
These companies trying to join forces and sort of tackle the declining volumes we're seeing, specifically here in the U.S. So I'll be curious to see how this, of course, does seem to work, because it doesn't necessarily eliminate the looming threat that people are not drinking as much.
Yeah, some interesting names in their portfolio. The French company Absolut, Beefeater, Jameson, there's your Irish whiskey, Malibu. So some familiar brands, even though I'll be honest, I don't think that the company, the parent company's name really stuck out to me. It's one I'm unfamiliar with, but certainly some recognizable brands. But Jack Daniels potentially being a European owned, that'd be interesting.
That would be interesting. And yeah, there's, clear overlaps definitely between the two, but many are saying this is just to help them get their entry more and more so into Europe, which could help also deliver cost savings, which is right now where a lot of these beverage makers have been a bit strapped. And again, tariffs
have not been favorable to the entirety of the space either. And so seeing an interesting industry sort of evolution here as companies try to save costs and also continue to cater to consumers. Now, our last name today here is Ulta Beauty, and Ulta Beauty was added to a tactical outperform list at Evercore ISI. Alex, we haven't had one of these funny analyst calls in quite some time, so today was a good day to do it. But Evercore did add Ulta Beauty again to that list, arguing that despite some of the strong same-store sales growth trends that we're actually seeing a lack of SG&A discipline for several quarters, which has been a key driver of an outsized stock pullback. They do think that Ulta has embraced the feedback and has two opportunities in the weeks ahead. That includes a sell-side conference in 2 weeks and a meet and greet in Orlando that occurs in about mid-April to offer some guide rails on more of that SG&A plan. They think that this will go a long way in calming their first quarter earnings fears, and they do have an outperform rating at a $675 price target on Ulta shares. So for that price target, you would think that this note would be a bit more optimistic. I will be very curious to see if these two separate events are enough to really rewrite some of the price, because to me, typically you don't necessarily see these events move the needle overall, but hey, I mean, I think that it's an interesting call nonetheless.
Yeah, the stock had done so well up until sort of the midpoints of 2023, fell off a cliff. It built itself back up again.
The Dow Jones.
2024, and it's been a long road to the new highs, and then a setback again. So
All the defensive names.
probably are both, happy to have been invested in this name they've been for the last decade, but you can't help if you were being frustrated in a $200 pullback as quickly as this one has happened, centered around earnings. Needs something to shift the street sentiment, because I think of this type of a company as a lot more stable than it probably gets credit for.
That is true. I mean, that is like the lipstick index, where it's like you have to continue to spend on these various beauty and self-care products that you're obviously accustomed to that. And typically in times of recessions, you do see some of these more beauty-oriented or skincare-oriented companies do relatively well. Now, Ulta really, has taken on the chin after its earnings, and we've sort of just been stuck now consolidating at this new range. But 14% pullback this year, another 24.4% pullback so far this month, lower for this week by about 2% though. But we'll leave it there for the top of our show. Now, coming up next though, we're looking at two darlings of the Dow. Nike as well as Disney, both are lower on the session following some mixed analyst notes. So we'll talk you through how to trade both of these names, and we'll be right back.
Okay, Apple dropping off. Looked pretty good this morning.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Okay, S&P is pushing lower.
This place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, giant TVs, everything in one place. It's like Schwab. Everything investors need, all in one place. Yeah, Schwab, they can do everything. Invest, trade, get full service wealth management, and anything in between. I think I'm gonna be sick. We have to buy that now. Schwab.
Invest your way with Schwab.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Welcome back to next gen investing. So we're discussing a bit more on two of our Dow darlings today, Nike as well as Disney. Both names are seeing some pressure today, but let's start off with a focus here on Nike, as we are seeing overall some analyst coverage today. Oppenheimer did highlight Nike's strategic turnaround efforts.
Okay, we're starting to move lower now.
Actually likely to reflect this when they report next week. So downbeat market sentiment embedded within the stock, they believe, should also lend to a more favorable re-rating as fundamental trends do regain momentum. Oppenheimer also did say that they're optimistic that the company's earnings are positioned to really inflect this positively in the near term as these repositioning efforts take hold and more transitory pressures decline. Management did also
S&P, S&P moving lower.
Story and the next major project for Nike, but a successful turnaround in China, in their opinion, will take a bit more time. So the firm did maintain its outperform rating on stock, price target of roughly $120 a share. Now, as we know from discussing Nike pretty heavily on this show, we've seen a pullback by about 35% from its 52-week highs. Now, we do remain over 71% off of all-time highs that we have not seen since late 2021. Recent RSI levels have pointed to more oversold territory, which could then raise the odds, of course, of some of these short-term bounces. But obviously, the real tail end of
Let's see what VIX is doing. VIX. Dow Chemical leading the markets, pointed out by Grover. VIX driving higher. So many extremes. We just need some capitulative selling. Doesn't seem like we've seen it yet. New York FANGs are getting thrown away. People are throwing away the New York FANGs. What are the aerospace and defense names? Lockheed Martin. Those have been fading. They've been selling the news there for a while. Northrop Grumman, Raytheon. Those are all lower. General Dynamics, AVAV, AeroVironment. These are all lower. Apple, big reversal. Apple looked really good this morning. Looked like it was going to follow through. Okay, looks like it's going to come back to the 200-day.
Oversold conditions, but not really anything here that suggests technically it's due for a bounce. So perhaps an earnings announcement could shift that, but perhaps an earnings announcement is just the first step in stabilization. So I look at a neutral strategy here. It's a range-bound strategy, selling a really tight iron condor. Right now, the current share price is around 51.5. I looked at selling the 51 put and the 52 call, almost creating like a synthetic 51.5 straddle, trying to get as close to the midpoint of this current stock price as we could. And with that, if you're able to buy wings that are $5 wide, that'd be the 57 call to the upside. That would be the 46 put to the downside. Collect $3. You you create a risk reward where if it were to land in this same window, dollar-wide window, you can make 300. Your break evens are 48 and 55, and you only risk $200. So a little bit of positive asymmetry, looking for a neutral or almost non-reaction through the end of next week. And of course, reminder, next week these options expire on Thursday, so a little bit less time even than normal on this short-dated call and put strategy here, the selling of the iron copper.
Okay, now shift gears into our second name today, which is Disney, seeing a bit more of a pullback today, at least down about 2.3%. But Disney did also receive 2 price target reductions today. Wells Fargo was one trimming its price target to $148 a share from $150 while maintaining its overweight rating. They went on to say that Disney is suffering from a lack of excitement in its narrative, but also did note that this is a pivotal quarter and they remain bullish, especially as growth accelerates into the second half of this year. Now, separately, Deutsche Bank also did trim its price target a bit more neutral here to $132 a share, but did actually keep its buy rating. They went on to highlight attractive risk and reward skew at these current levels, and they believe that Disney's cyclical risks are now priced in. So as we now assess some of the price trends for Disney overall, shares again have pulled back almost 18% this year and remain down about 7% from levels we saw, not almost 8% actually, from levels seen a year ago. Stock does also remain well below its 20, its 50, and 200-day moving averages, thus keeping the intermediate trend a bit more negative. And while momentum indicators suggest the stock is oversold, we've still been trending lower. So obviously, again, bounces are possible, but rallies have been met with some considerable resistance. And as of late, I will say it's just been sort of a drift to the downside, which you can see reflected in its 50-day moving average. So as we now think about this name, Alex, different story. Obviously, also, I think seeing some degree of pessimism with Netflix raising their prices. It's like what happens next for Disney. But the streaming business has been a focus for, the overall street, because it's obviously like it's higher margin sort of business. But then tourism, they have massive exposure to that as well.
Yeah, we should have had the chart up while you were going through that. You basically nailed it. Based on everything I was going to say, short term, medium term, long term, we got a pretty significant bearish trend with this stock. We talked about how the indicator I like to look at being that 1 week EMA versus the 1 month EMA, and then the price. Same setup where it's the price is the lowest, 1 week's next, then the monthly. But that crossover in Disney actually took place back in January. So from a short term trend standpoint, this trend has only strengthened. Full months. Not only is RSI oversold, it's becoming more oversold and making essentially near yearly lows. You have to go back to all the way back in the tariff sell-off to find a level that was lower at this 22.7 mark that we see ourselves in now. Now, granted, comparing it to recent price action, it's now 25.7% off its highs, and it's had 5 straight candles that are red, basically saying we've been down every single day this week. So Jenny, I don't have a lot to sell traders on from an optimistic standpoint, but what you will notice if you look all the way to the far left of our chart, this stock had a massive gap around an earnings event last year in May, and that gap is essentially filled at this price. So some technicians would say, hey, once that gap is filled, that pattern is complete. Perhaps that could be a turning point. That happens around 92. So 92, perhaps a very significant pivot point as well as support level.
Okay, and so as now we assess all of these things and consider how you look at trading the same, obviously for example purposes, very different than obviously everything we just looked at Nike here, but it also is, again, a story that's challenged by right now many things in the macro, has also been very lackluster, frankly, on like a longer term basis.
Yeah, no doubt. But leaning into that idea that maybe if that gap is filled, the stock could stabilize. No earnings to deal with, at least not for a little bit longer. So I went up to the April monthlies. That's April 17th, essentially 3 weeks from today. Neutral to bullish strategy. Selling a put vertical right at that level. 92.90, looking to collect 60 cents. That'd be 30 cents on the dollar. You can make $60 on this. It's risk defined, most importantly. You don't have more than 140 in risk. Then break even at 91.40. Need stabilization and need it in a hurry as we're essentially at that level as we speak.
Yeah, and so we'll continue to keep this one on our radar here. Obviously, earnings not out anytime soon, but we will at least have Nike to look forward to next week. But we'll leave it there for this segment today. Now, coming up next, cyber FOMO, and Netflix is raising its prices for the second time in just over a year. So what does this mean for subscriber retention? We'll walk through it all coming up next. For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Welcome back to Next Gen Investing. It's now time for FOMO, and we are talking Netflix today, once again in focus as it is raising its prices for the second time in just over a year. So joining us to tell us more about this is Marley Caden, host for the Schwab Network. And so I will say that I was curious because I was initially in we're talking 15 years ago, paying for Netflix, $7.99 is what it cost. And they then kept that cost for 8 years. And so we have seen a different trend emerge.
You get the DVDs in the mail at that point?
I was an original adopter of Netflix. The streaming though, like when they solely were just the streaming only, that's when it was $7.99. So I think it was cheaper when it was DVDs only, but yeah, that ages me a bit too much. But we've seen a different trend. We're now, instead of keeping prices more stagnant for 8 years, I mean, they've increased over and over and over again.
Yeah, and I don't think that they hinted at this one in their most recent earnings. So I don't think that it was a surprise, but they didn't say how much it was going to be. So first, let's just sort of walk through those numbers. It's an increase for all three plans. So across the entire product suite, it's an increase of $1 per month for that lowest tier. So Jenny's sadly gone. It's $7.99. It's now $8.99 for that standard plan that comes with ads. For the next plan, the standard plan, no ads, you get up to 2 devices simultaneously. That one's going up by $2 to $19.99 a month. The premium plan, that's no ads streaming on up to 4 devices, is also going up $2. That's $26.99 per month. So across the board, an uptick. It's about an 11% increase on the average there across the entire product suite. But with these new prices, interestingly enough, the sell side has come out really strong this morning with its notes and a lot of optimism around what this could mean for Netflix. TD Cowen estimating that their average revenue per subscriber in the U.S. and Canada will rise about 6% year over year for 2026. They're maintaining their buy rating, $112 price target. Citi also putting out a note this morning that Netflix will likely raise its 2026 outlook on these higher prices, and it's lessened acquisition expenses because, of course, in the same time period, they've now walked away from this Warner Brothers Discovery deal. They expect Netflix to have a modest beat and raise quarter when they report on April 16th due to help from currency moves. And they also have a buy rating for them at $115 price target. Netflix right now trading completely unchanged. They're totally flat at $93.32. But then we also got a price target adjustment from Oppenheimer up to $135. That's a $10 hike from them. They're raising their price target with an outperform rating, citing the revenue increase from these price upticks. They say that Netflix is, quote, showcasing why it remains a top internet platform, raising the U.S. price 15 months after its last increase. The company's ability to retain customers drives its industry low churn, and it builds its competitive moat. The firm only sees more upside opportunity for Netflix to lean into content post exiting the Warner Brothers Discovery merger. But JP Morgan had a note that I thought was interesting, positive but interesting. They said the price increase announced yesterday by Netflix could translate into an additional $1.7 billion in annualized revenue off of the 2025 base. But they did say they were expecting it. It came a little bit earlier than they expected it to come. But they feel that that increase is already really factored into Netflix 2026 guidance. So that was a note just that I thought was a bit interesting, that they feel like it's already priced in where some of the other firms did not think it was priced in. JP Morgan also saying that they do not expect the increase to result in any kind of material headwinds to engagement, conversion, or retention.
Guys, this is almost like a textbook land and expand, is what they would kind of call it in the sales world. Netflix, in the times that Jenny was describing, they were very, forward thinking. It was cheap. It was a loss leading company. It allowed you to share your accounts. It became a social phenomenon. Then they executed their strategy that Jenny and I all along were saying this is not going to be net negative for Netflix, which is, hey, we're not going to let you crack down those passes anymore. It became a need for consumers to subscribe to this. And now they got us. And now it's just, hey, $2 here, $2 there. And all of a sudden, it went from what, $7.99 you said, Jenny, to where are we at now? $20-some if you don't want to have ads?
I know. See, that's the thing is like you do hear because you did mention, of course, that their baseline is actually not that much more expensive, but it's like we're right now paying for it to not have ads because that's the whole reason we're into streaming, right? It's like we've gone to now more like paying for basically a cable bundle on a monthly basis.
We're paying for the original product, I think, is really what the issue is. Because there weren't ads when we signed up for Netflix, so we got used to watching it that way, and now we want to keep it how it's always been. So I think that's why you see a lot of people in that upper tier plan. We don't want to be disrupted in our streaming. That's the whole point of having streaming, like Jenny just said. And we know what it's like to not have it disrupted. So you will pay the premium to not be disrupted. But as Alex pointed out, they do have us. There really no concerns I could find anywhere about anyone having concerns about their pricing power relative to the other streamers or if this would cost them anyone to be transitioning away. It doesn't appear that's it. I mean, they are the biggest subscription streaming provider in the world. They've got more than 325 million customers as of the end of 2025. And obviously, they've calculated whatever the potential increased revenue per sub would be that would offset any resulting churn when they make the determination on how much to raise.
Well, they become the king. They were chasing for all those years. They are the king of content now. They're buying NFL games and other sports and putting on these giant live events. Oh, and then also, they used to just give us the shows and, hey, you watch it when you want to. Now they time gate them, so you got to buy 2 or 3 months to watch the show. They're taking the playbook of legacy cable.
Oh boy, what a boring day. What a boring week, really. Just more downside. Can't really put anything to work unless you're short, except for consumer staples and utilities and energy. These are doing okay. These will probably continue to move higher next week as well. Utilities having a big bounce. These have pulled back recently. Energy, of course, continues. So those 3 sectors look really good. Halliburton, XOM. Wow. ExxonMobil. I didn't think it would get to 170 this fast. I reduced my exposure into ExxonMobil because I had calls, spreads that were going to expire today. I had planned right around Wednesday or Thursday, yesterday, I planned on rolling some of these up. But almost feels like we're getting a little extended. That said, I've been thinking that way for the last week or so. So just holding on to energy. I don't see these pulling back too much. What's Baker Hughes doing? Baker Hughes. I wanted to add to Baker Hughes. Okay, we're getting a bounce at the 9 EMA. Baker Hughes.
But appreciate it to Marley Caden for all of that breakdown. Now, next, we will discuss the AI trade, which is entering a new phase, and some of the biggest signals are coming from some unexpected places. Shifts beneath the surface are starting to matter, perhaps more than the headlines. So we'll outline what to keep on your radar in tech coming up next.
Oh, she's got your smile, Carl. Yes.
Just added to Baker Hughes. Just added to Baker Hughes. I had the 50, 55 call vertical. I'm sorry, it's a 6570. 6570. I'm looking at the wrong thing. 6570 for July. Baker Hughes. It's into more than oil and gas. It's selling large generators to these data centers as well. The dip a few weeks ago didn't make any sense on Baker Hughes. Dropped back down below the 50-day, regained the 50-day. Volume came in. Looked like a hedge fund or somebody taking profits. RSI is rising. 6570s for July. I added 2. Got 10 total now. 6570 for Baker Hughes for July 17th. Okay, looking for this to retest the highs next week. Entergy having a really good day today. ETR, that's the #1 stock on the S&P 500. Big move today. Entergy up 8.5%. Constellation Energy also looking really good. Constellation coming back, getting back above the 50-day. Looking for this to get back to the 200-day. Cisco, that's one that Tony was buying recently. That pulled back. Cisco and Honeywell.
What it looks like from this story is Meta essentially is going to foot the bill for this. They're building out the hyperscale data center. Entergy is going to provide the electricity and build out the infrastructure, so the power plants, transmission lines, battery storage. That's among this agreement. So it's powering AI at massive scale here. Again, the big industrial players can plug into the grid. So, and the costs essentially, in theory, had been the worry was that it would be passed on to the consumer, but under this agreement, that is not the case. So you're seeing shares of Entergy rally more than 8% right now. And I mean, again, top performer in the S&P 500 is seeing some nice strength today that really hasn't even waned throughout some of the pressure we've seen on the overall market. So appreciate that, Dan King Hall, for all of that breakdown. But now we are stepping back to look at some of the more subtle but important changes emerging in the AI trade and what they could signal for investors now going forward. So joining us now is Austin Lyons, Senior Analyst at Creative Strategies, with a closer look at some of the latest tech developments. And so, Austin, thank you so much for joining us on this Friday. Always appreciate your time and all of your thoughts. And you have said that the GPUs for everything era is maybe over. And so what does that mean for, say, like NVIDIA's mode as more and more of these AI ASIC players like Grok and Cerebras try to slot into inference?
Sure. Yes. So historically, NVIDIA was the first, and they were the best, and they were the only. We saw AMD come and try to play in the GPU space, but now at NVIDIA's GTC, and the narrative was always just like, buy GPUs, they're the best for everything, they're the most flexible. Last week at GTC, NVIDIA and Jensen Huang showed that if you take LLM inference, which is the defining workload of our era, you can actually break it down into subtasks, if you want to think about it. For example, prefill and decode is what they call them. And you can run some of these workloads on GPUs, but actually to get really fast, like what they call ultra low latency and high interactivity for the user, so like really fast cloud coding, for example, you can actually slot in Grok chips and unlock this new performance level. And so, that sort of changes the dynamics, because if you can slot in Grok or Cerebras, it starts to say like, oh, who else could slot in here, and why should it be NVIDIA? Now, NVIDIA, for their mode, they're trying to take it up a level higher and say, hey, it's not about the individual components, it's about the whole system, all of the racks put together, who can give you the best optimized inference across the whole system. So NVIDIA will continue to try to say, once you put it all together, it's our data center, everything branded NVIDIA that matters. Even if you slot in other people, we believe that we can optimize every little piece and still unlock the best inference.
All right, Austin, one of the companies that's trying to slot themselves in there is ARM. They're shifting from like licensing IP purely to actually selling these full racks for this AI.
Markets are wrecking people.
Is it meaningful to earnings power?
A gorgeous day to play golf.
In the data center that Jensen showed, Jensen and NVIDIA actually had racks of CPUs that were ARM licensed CPUs that NVIDIA makes. And Jensen's rationale was, hey, actually CPUs are becoming the bottleneck for GPUs because there's still a lot of work that needs to be done on the CPU to keep the GPUs fed. ARM saw this as an opportunity for them to also not just license their intellectual property to people like NVIDIA for those CPUs, but to actually make silicon themselves. And this is a big opportunity, huge opportunity. Historically, ARM for the last 35 years has only licensed their intellectual property. And then within the last handful of years, they took it a step further and they, instead of just licensing the CPU design, they said, hey, we've got this thing called the compute subsystem. So we can give you more. So the CPU and some of the system IP around it. And those have, they make 5% royalties or 10% royalties if they do more for you. But they use silicon, now they can sell the chip, they can make the money. Of course, the gross margins on a chip might only be 50%, whereas on that IP that they were licensing, the gross margins were like 97%. So their blended margins will come down, but it'll be a lot of incremental margin dollars that are at play. And that's what investors are excited about for ARM. It's obviously a huge market to be able to sell into the data center. To sell silicon gives them an opportunity to drive a lot of top line and bottom line revenue.
Yeah, and I mean, the market definitely agrees with you because we saw a huge move in ARM following that news, of course. But we have to discuss now, to shift a bit, the TurboQuad announcement, which hit Micron pretty hard on fears of reduced high bandwidth memory demand. And so we've seen this not just to impact Micron, also SanDisk, a lot of these memory exposed names that have been a huge boon for the overall AI trade. So what did you make of some of the developments that we've seen just in the last several sessions with the memory names?
Yeah, Jenny, memory's been super hot, memory and storage over the past 6 months. These companies, their stock just skyrocketed. And obviously there's always questions around memory. Is this the top? And so I think
Markets just continue to slide lower.
Said, hey, all of this
hedge flows. Got a lot of support down in here. I don't know if it's going to last. That's non-zero day. 0 day, most of this is gone now. Longer dated positions further out in time. We still got a lot of support in this area, 6,400, 6,390. We're trading 6,390 right now. There's nothing below that, though. Not much below that.
NVIDIA or AMD or anyone's going to start buying less memory. I think it just means they're going to continue to design their chips with
5,900. There's nothing there. 6,170.
Seem to be accelerating in the other direction.
Yes, it's a great question, Alex.
6,500, 6,400, 6,305, 6,200. So you have to understand, as the markets are here, as we continue to move lower, negative gamma, that means dealers are selling futures, which are exacerbating downward movements. We just continue to slide down here. So S&P. Interesting, because we got puts being sold down here, calls being bought at the moment, yet the markets are not reacting.
I totally agree, and I think it's the fine line between, like investing in these companies and understanding what these companies do. And it does feel like there's a bit of a disconnect right now, because I agree. Like, you see the turbo quant news, and I was a bit confused by the market's reaction. I mean, huge reaction, and I think there's still a lot of like proof of concept that we need to see play out in real time to obviously see maybe more favorability come into the space. But we so appreciate your time today. Austin Lyons, always great conversation. Senior analyst at Creative Strategies. Now, coming up next, it's time for Under 30, and we're looking at a winner today, Unity Software. The share is rising as the company did unveil its first quarter revenue and plans to consolidate its overall business. So we'll dive into this more coming up next.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Nicole Pedalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp
Markets just grinding lower.
innovation and companies leading the next wave of growth.
Wouldn't be buying puts down here. It might make you feel good by the time you, when you think about it. But once you take the puts, if the markets drop off, great, that works for you. But if we get any kind of bounce, your puts are going to evaporate very quickly. I would be more interested, and have been interested, in XLP and XLU, utilities and consumer staples. Campbell's Soup, Molson Coors. Let's see, CPB today. Pretty decent move off the low. CPB. That's up, what, 10%? 5%, sorry. Molson Coors, TAP, that one's off the low. That one's up 3%. These are turning the corner. Stochastic, MACD, everything's turning up after a pullback over the last several weeks. Utilities like American Electric Power, those are getting a bounce. Con Ed. AWK, American Water, Utilities, Duke Energy, Constellation Energy, all these stocks bouncing. Puts are really risky right now because VIX is so high. Any drop in VIX and your puts are going to evaporate. So be careful. Or you could do nothing and just sit back and hold your cash. I'm doing a lot of that too.
Spinning off some of their non-productive ad business, consolidating operations. But essentially, when I look at these ratios, that's meaningful. I mean, 22% increase in adjusted earnings and only 3% adjusted sales. really focusing on managing their business operations, improving profitability. And I think this is interesting in the context of what's going on in the market, but also how the stock has really been in a trading range now. If you look at the stock around $22 high and around $60 low, so it's somewhere in the middle of that range right now.
George, I can't get the ties to the metaverse and all the investment there that this company has. And it took $80 billion, but Meta Platforms has essentially scrapped that whole project. I know they're going to rebrand and try something else, but like Unity seems pretty exposed to that space, does it not?
Well, that's the thing. So, interactive game publishing, content creation, animation, and design. Again, Unity has a very specific ecosystem that is developed. They've also, again, improved their ad monetization business, which, again, is another form of revenue. The challenge is I think this business itself is spending a lot of money to keep up. That's what I see here, just my take. With that said, that's creating opportunities when things are going well, but also volatility when things are getting disrupted. I think the disruption now from outside competition, especially from Anthropic's Cowork, which again allows animation design technologies to compete with Unity, that's creating a threat. But again, look at the price. Like I said, the price has been down significantly. I guess it was $48 not too long ago. So now it comes down to how much sales growth does this business have relative to earnings growth? And earnings growth is improving faster than sales growth, but at the same time, the company itself is not GAAP profitable. In other words, they don't have net income that's positive. So that's going to weigh on the stock. So I think this is an interesting company in the context of what's happening, plus the price reduction that we've seen. Because from what I see now, earnings estimates between this year and next are expected to increase by 24%. From $1.01 to $1.25 on very small increases in sales around 11%.
All right, we continue to move lower.
Around 14 times. So it's trading at less than 1 times next year's growth. And so one would say that it's growing at a reasonable price considering these earnings multiples and the price reduction, which has actually been quite significant since early this year.
Yeah, and I mean, to your point, this is a name that has fallen about 58% and some change, at least so far this year, but it's actually amazingly now positive on a month-to-date basis and slightly lower this week. So a volatile player at that. But appreciate it, George Tillis, for all that rundown on Unity Software today. That will also do it for Alex and myself for Next Gen Investing for today, as well as this week. We have the watch list coming up next.
Nothing's working except for consumer staples, utilities, energy stocks for now. Bank stocks are lower. S&P is lower.
For 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe.
Watch the cues.
Investor Checking account is linked to your Schwab One brokerage account. You can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Cues.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years. Through purchasing of houses, opening up our business, having children, they've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Stay connected to what
Feels like people are throwing in the towel.
Network app and stream live coverage wherever you are.
No opportunities now. Looking for buying, looking for opportunities. One thing I see is consumer staples, utilities, and energy for now. Let's go see what's working, if anything. All right. Banks are down. Boeing's down. Disney's down. Everything is down. People are just selling the crap out of everything. Datadog, Coinbase. Yikes. Everything is getting sold.
Good afternoon. Welcome to the Watch List. I'm Nicole Petalides. It's 2 p.m. Eastern Time. We're coming to you live from the floor of the New York
Halliburton's still going. Halliburton.
corner of Wall and Broad. So as energy has moved higher today, we're at around $98 a barrel on West Texas. You're around 110 on Brent crude today. It's really pressuring markets. You're seeing global weakness. We're going to talk about the inflation threats that could be appearing and reemerging, putting the Fed policy and second quarter momentum in question. And investors, AI hype, energy security bets, double-digit dividend plays. We'll take a look at that. In the meantime, the tough talk continues between the different countries. The U.S. has told Iran they have postponed and now moved it back to April 6th. Iran is waiting for a response from the U.S. on peace proposals, according to one source. You have Pakistan in direct contact with Iran's security establishment, controlling the nation. So it does seem that there are some constructive talks that are happening according to Washington. So they said they are making progress, according to sources that are familiar. It's not enough to give the stock market any sort of reprieve, though, because you have the VIX above 30 and everything's selling off. Here are the numbers. The S&P 500 down 1.4% at 63.86. The Nasdaq 100 down 1.7%. By the way, Nasdaq's in correction territory today. Dow Jones Industrial Average is down 658 points, and the Russell losing ground 1.7% lower. Oil and gold are both higher because oil's up over $4 today. As you take a look at crude oil, right now it's at 98.67. And I'm going to just pull up Brent on my computer at 105.08. That's where it is. The high today on Brent has been around 105. So we'll continue to watch that. And in the meantime, the 10-year bond yield 443, getting closer to 4.5, isn't it? US dollar 99.99, and Bitcoin pulls back 4%, 65,000 and change. So as the markets have to digest all the geopolitical uncertainty, the sticky inflation that we could be seeing because of energy, just raises new questions about your portfolio. And Russell Hackman, president of Hackman Wealth Partners and author of Wall Street is Not Your Friend, is back with us here on set. It's great to see you again. Thank you for being here.
Great to see you, Nicole.
Well, it's a tricky time, isn't it? In fact, we were saying how this sell-off down 5 weeks in a row, the longest sell-off we've seen since 2022. Some of your thoughts.
Well, you got to cope with as you're saying. Hey, this is now we're near the end of the first quarter, and it's going to be down. The major indices down 5, 6, 7, 8%, right? And I think that hopes of a rapid end to the war are diminishing. You're seeing that regardless of what DC is saying, oil's spiking, markets down, vol is spiking, right? So, pretty concerning that we may be in for a more protracted war. And even if you were to have peace, I think there's, the energy prices are not dropping, in an instant, far from it. So there's, the other thing I think you were alluding to is, the possibility of even Fed hikes is on the table.
I mean, I don't know about that. Do you think that's a possibility?
The futures markets are saying there's a 40% chance of a hike or so.
Why would they hike? And when would that be?
Inflation, right? I mean, you're looking at even before the war started, you were getting inflation numbers, PCE, CPI, et cetera. You were getting inflation numbers that were around 3%. That's still definitely higher than we want it to be. And now you have basically an energy shock that impacts the price of oil and gas, et cetera, impacts the price of almost everything else, right? So that's why they're talking about it.
Yeah, I mean, the likelihood, the probability of a Fed rate hike by year end now up to 52% on the CME Fed Watch tool. Yeah, this is, we talk about inflation, the Dow also is in correction territory. You know, I hadn't really thought a lot about a hike, but
We just continue to drop off.
worried about inflation. It's going to be very hard though because it's energy inflation. It's not quite inflation on food or inflation. I mean, does maybe the higher energy costs get passed on to the customer and then it, sort of snowballs like that.
Yeah.
In the meantime here, what do you tell folks about investing at this point? I mean, you have people that are retirees. They probably have a plan, a diversified portfolio. But what do you tell them now?
Well, there's sort of the long term, and then there's sort of the short to intermediate term. I think in the short to intermediate term, we've gone from sort of wind at our back with the Fed having been forecasted to cut rates this year, which is almost always a good thing for the markets, to prices up. To your point about why would the Fed raise rates, or why would inflation be staying high, even regardless of energy? The government deficits are still very high, and that in and of itself is inflationary. That's printing money, right?
I mean, it's pretty incredible. I mean, I'm not making any predictions. You had, one firm say, I think it was Goldman Sachs saying 2-3 cuts this year, and JP Morgan was saying none.
Right.
So the concern here is that you have energy inflation, which then brings down GDP,
right,
which then slows the economy. Then you have no job creation. We're already at very slim job creation anyway. We're getting that jobs report next Friday, even though we were talking about it upstairs with our team. It's Good Friday. We're closed here on Wall Street, but the Bureau of Labor Statistics will release that number. But that's what happens. That's the ABCD, right? High energy, higher inflation, GDP down, job creation down. So then you need, then you would need a cut. Maybe they should cut now.
Well, certainly what the Fed doesn't want to see is the possibility of inflation, jumping substantially above 3%.
Right.
And you can't say it can't happen because it happened in 2022, right?
The OECD yesterday had warning of inflation above 4%.
Yeah.
So that was important too. So is there certain areas that you invest in that you think are sort of inflation hedges or good for the long term for whatever reason? What do you advise to folks?
One thing that's just been interesting this year, and I'm sure you've been commenting on it here, has been the transition in leadership of the market from the Magnificent Seven stocks. Those stocks now underperforming, right?
Mm-hmm.
And so therefore, if you start looking at the sort of more traditional dividend-paying stocks, those can be places to hide out, areas where there's some principal protection. We like that for folks. I mean, going into this year, everyone was sitting on 70% S&P gains from the last 3 years. I mean, I think for a lot of folks,
We just continue to drop off. Similar to yesterday's price action where we just kept dropping.
I want to bring some breaking news here to you. I was waiting on the House leaders to move along with the TSA approval.
Right.
Well, they didn't. The House GOP leaders reject the bill. This is breaking news. This is just coming off prompter. I haven't heard this yet. Have you heard this yet? They reject the bill, right?
Yeah.
They are not. They are likely to extend this standoff. They want immigration to be part of this immigration funding.
Yeah.
The Senate had passed that yesterday evening, right? And so, or they had agreed it was fine, and so now it was going to the House. And they didn't even have a roll call, but they had agreed for the pay for the TSA, and they put the immigration
enforcement aside, but now but the president has put an executive order to get the TSA workers funded. So I guess that will move forward.
Well, certainly.
What do you
Listen, I'm at an airport almost every week, and it's definitely been getting messier. That's not a great thing that they can't sort that out. And any kind of pressure as it pertains to air travel gets everyone, concerned, right?
Right, and one representative, and just sort of wrapping this part of it, saying from Texas, Representative Chip Roy, the Republican from Texas, absolutely offensive to the people that they're sending this bill over and it doesn't fund Border Patrol and the core components of ICE. So that's where the disconnect is, and so that's where you still have a standoff. Pretty incredible. I mean, what do you think about some of those stocks that have to do with travel or the consumer? And we've got the consumer Michigan sentiment, and that declined a little bit.
Yeah, and I think the airfares are going up already, right? And price of obviously jet fuel is way up. That's going to impact the cost of travel. That will impact the summer travel season. That will, as you talk about all these connections, one thing after another, that's not super for the economy either, right? Even if you look at, and it's already coming through, not just in the price of filling up your gas tank, but home energy as well.
Qs continue to fade.
For many Americans.
What have been some of your favorite plays over the years? And can they still work? Is it a name? Is it a strategy? Is it an index?
They taught me, back when I had a lot of hair, that
Micron off the best level of the session. Oracle. Yeah, everything looks ugly. ARM.
Very, very tough. But, right now, if you had to pick some, you're picking some of the more defensive names. Some of the names where if the economy does have a downturn, they're going to be hanging in there.
Defensive names.
Yeah.
Yeah. All right. Well, Russell Hackman, President Hackman Wealth Partners, author of Wall Street Is Not Your Friend, here with us today. Thank you so much, and I'm glad you were able to go through this news, extending the standoff with the TSA. I can't believe it. I sort of really thought it was going through today. Okay. Thank you, Russell. I appreciate it. Okay, folks, we're going to keep you right here. Tom White will join us and highlight the unusual options activity throughout the day. And we're looking to trade and get here with us on American Airlines and Amazon. And we'll be right back.
It's 2:13 on the East Coast. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is a pretty boring day, really. We just keep grinding lower, no relief. Like yesterday, we kept looking for a relief rally. Didn't happen. Markets just keep moving lower. Crude oil and VIX, the 10-year yield, all at extremes. Let's see. Crude oil, the VIX, of course, at highs. VIX is headed towards 32, highs of the week. And the 10-year yield did fade earlier. Now it's trying to hold near 4.47%, 4.425%. Junk bonds lower. Markets are just telling you to chill. Keep your cash ready. If you're going to buy anything, I would be looking at consumer staples, XLP, and XLU. Forget everything else for now. Energy is what it is. Energy's been running since January. Still going. Doesn't look like it's going to stop anytime soon with crude oil where it is. And the need for crude oil products around the world being stifled, deliveries being stifled. XES, Oil and Gas Equipment Services. All right, Baker Hughes, some of the bigger names, Baker Hughes added to that one out in July. ExxonMobil, I got out of that one too soon. ExxonMobil, Chevron continues from the original entry near 155, 160. This has done very well. If you're still in it, ConocoPhillips, I believe Brother Bill's in that one. ConocoPhillips, Devon Energy, Diamondback Energy, all of these are doing fine. So you don't need to go out and buy something different. Just work what's working. Our Diamondback is starting to see some profit taking. Okay. Oh boy. So we've got about 1 hour and 43 minutes to go. 1 hour and 43 minutes to go. Just watching the markets. Energy, crude oil. What's LNG doing? LNG, that's higher. Natural gas, gasoline, XLP, XLU, okay, CPB.
Questions later, you might have a chance to get back in, but you know, anything can happen because we're still basing a lot of these moves on headline risks that might be coming out over the weekend, maybe early next week, because the timeline is getting longer, and that's going to hurt the economy more.
Yeah, and look, oil's right around $100 a barrel. It's at 99.71 right now, and Brent, I read it was up above 110. Right now, I'm seeing it at 105, but certainly still seeing that elevated oil print. Let's get to American.
I can't believe Brent was so elevated. We had wars in Libya, Syria, Afghanistan, all during the Obama years. 45 months above $100 a barrel. Trump's first term never got above $100 a barrel. Biden, 5 months. And here we are 13 days above the 100-day, and the markets are not liking what they're seeing. But of course, the markets are overdue for a pullback. Have been, I should say, overdue for a pullback. Went right through. I didn't think that was going to happen. I didn't think we'd be back down at this level. Just shows you markets can get oversold. Well, one thing's for sure, we're closer to a bottom now than we are to a top. That should be obvious. We're closer to a bottom now. Okay, so much for support.
Trader bought 5,000 of the April 2nd weekly, the 11 strike calls. Paid an average debit. There's not a lot of premium here, so they only paid about 17 cents. But the break even for this trader over the next week.
There's a pivot down here.
17 over the next 6 days. That's about 8% above the current share price in American Airlines. So this looks like just a speculator.
There's a pivot down here now, this area.
And if we do get a resolution and crude oil pops back to, or, you know, falls back to
5,300.
wouldn't be much in a low price stock like this.
9% off the high, all-time high.
The executive order, and he said he would sign that so that the TSA workers could be paid. But I don't really understand the timeline when that is going to actually happen. And to
Yeah, we had some positive commentary earlier this week on Amazon. JP Morgan raising the price target to 280 from 265. Citi raised their price to 285 from 265. They both have buy ratings on the stock.
Okay.
Now you're looking at bear market territory for Amazon. It's down over 22% from those all-time highs that we saw in November, down about 3% today, and off 13% this year. So
All right, we're starting to see some stocks shorts covering. Seeing some short covering now.
they did highlight in those price target hikes for Amazon this week. It was about AWS growth rate. Remember last quarter they grew 24%.
Let's see how many stocks are advancing now. 131. We got up to 180, 185, and we tapered off as we pushed lower after lunch. Starting to pick up a few more stocks now. 130 stocks on the S&P 500 advancing. 370 are declining. The Qs only 19 advancing out of 100. 81 stocks declining. Oracle resuming the bounce. Oracle. Micron bouncing.
All right, and next up you have Microsoft, which was seeing its worst quarter in 17 years, and you found a bullish trade. There's plenty of people who still love Microsoft, but it's had a hard run for the shareholders, and as I noted, this quarter particularly tough. Let's see the bullish trade trend.
Yeah, I mean, if you look at it, those all-time highs that we saw in July of last year, we're down 35% from those levels. We're back to levels that we haven't seen for about a year now in Microsoft, off about 25% so far in 2026. There's two issues that are hurting this stock. If you look at it, Nicole, is that they're doubling down on CapEx spend as Wall Street's basically asking, hey, what are these investments in AI infrastructure? What are they going to do? Produce more, dramatic and concrete payoffs in revenue growth, and they've got caught up in the SaaS apocalypse where traders are selling software stocks over fears that AI startups like Anthropic and OpenAI are creating agents that are going to replace maybe the products that Microsoft sells. So a couple things to focus on there, why the stock is probably under pressure. And you've seen some resets and price target cuts in the stock recently also. Although Bank of America earlier this week did come out, reinstated coverage with a buy.
Little bounce there. New York Bang's a little bit of short covering. That's all I'm seeing.
Did see some love on the option side because you saw a big call vertical buyer in here. And this was out in the May 1st weekly option series. So 35 days to expiration. And why is that key? Because they report earnings on the 29th of April. So maybe somebody's setting up for a surprise to the upside in Microsoft on that earnings event. They bought 35,000 May 1st weekly, the 405, 445 call verticals. Paid an average debit of only $2.34 on these call spreads. So that takes a break even where this trader starts to profit.
Yeah, 100% there, Paticus.
The next month, or basically 5 weeks. That's about 13% above the current share price in there, but well within what the option market's priced in for that option series on this one. So really good risk reward. You can see here from the risk profile, really good risk reward setup. But the problem is you need a 13% move to get above that break even on this call vertical. But 35,000 times they're buying it and probably trying to take advantage, maybe a surprise on earnings.
All right, Tom White, thank you for that option quarter every single day here on the watch list. Really appreciate it. Looking at American Airlines, Amazon, Microsoft, and I know you're going to watch Presidio next. Tom, coming up, Presidio Presidio bets on AI-driven oil field scale as dividend promises and $15 billion pipeline facing market reality. Let me tell you something. This is a company that debuted here on the New York Stock Exchange on the 9th of March. Think oil and gas, but no drilling. We'll be right back. Kick off the morning with the data and the decisions moving markets. Morning Trade Live that breaks down the macro moves driving the price action from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network and schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to the watch list. I'm Nicole Petalides. We're live on the floor of the New York Stock Exchange. Presidio is pushing to maximize U.S. oil and gas output.
S&P
Driven operations.
just grinding lower. A little short covering. That's about it.
Let's generate really great returns from oil and gas. Let's give investors exposure to commodity prices. But let's not drill wells. Let's go acquire existing producing wells. Let's improve their operations. And let's use technology to really drive operational change and to drive increased margins, increased cash flow, and increased value ultimately to our investors.
Overnight success in 10 years. I like that. That's cute. Let's talk about AI and the operations and how it's really streamlined. I mean, for real. What is the difference that you see right off the bat when using AI? What is the explanation why AI is the way?
Yeah, so we have a target this year, and a lot of people want to use AI in the oil and gas space to just make some processes in the back office more efficient, and that's one of the bigger use cases that third parties are developing.
Right.
What we're doing is we're trying to drive production growth. So we have a target this year of driving 3 to 5% production growth from our assets that already exist, that are already producing, but using AI to generate that growth. And we've already developed a proprietary system. We're deploying it. We're collecting a lot of data from the guys actually out in the field who are going and tending and pumping these wells every day. And we're uncovering some interesting things. Like, for example, we found through our modeling that
New York Bang's a little bit of short covering. The top 10 stocks on the S&P 500 remain right where they are. Entergy, Brown and Foreman, Campbell's Soup, LyondellBasell, Halliburton, Dow Chemical, Apache, ExxonMobil, and Sienna. with Molson Coors, number 11, Altria, number 12, McKesson, number 13, Newmont Mining, Valero, ConAgra, Target. Well, Target's on the list. Target, Bunge, and Constellation Energy. Those round out the top 20. Still need breadth to improve. Most stocks are declining. The majority of stocks are declining.
Another one of our initiatives is we have a proprietary data lake that has all of our data in it, but we're also trying to increase the amount of knowledge that that system has. And so as our guys who are operating those oil and gas wells go out to the field, they have a pumper app that they use that we developed for them that gives them access to financial information and other things. But one of the new features on it is they can record their interactions with the well. So they go to the well site, they turn on record, they talk to it, and they tell it what they're observing and what they're going to do. And then we create a transcript of that that gets fed into our AI system to increase the amount of knowledge that it has. And so now we have, in the last 30 days, 2,500 contributions into that system.
Looking for shorts to cover.
The knowledge of the oil field being digitized. And so now a guy who's maybe in a different area of our operations can query our LLM and then find out what he should be doing in a certain situation because a guy in a different area has already encountered that problem.
It's pretty obviously advanced AI technology is helping your business greatly, and it's very evident. And that was the original story, how AI wasn't just going to be tech anymore. It was going to be everywhere. It was going to be in medical offices and out in the oil fields.
Right.
And you're not really doing the drilling, right? I mean, and you're growing through acquisition. Tell me about that. We talked about $15 billion acquisition pipeline.
Yeah. So the interesting thing that we observed was that by not drilling wells, you can actually go and acquire existing producing
Hedge flow still meandering at the lows. No
cash flow base that we already have.
activity to the upside yet. Shorts covering. With an hour and a half to go, we're looking for some sort of activity that indicates more heavy shorts covering. I would imagine going into the weekend, they're going to want to cover.
Good at it. We haven't been able to generate necessarily returns associated from doing that, and that's been a part of the industry that's been challenging. But yes, we've been at all-time highs. We are able to produce oil from Texas, natural gas from East Texas, Louisiana, Appalachia in ways that have never been done before, driving down power prices, emissions, having access to a large amount.
We still have to replenish our strategic petroleum reserves. The president was very methodical in going to Venezuela first.
Yes.
Make sure to have that access to that oil. We have
Campbell's Soup just off the high. Molson Coors. The fertilizer companies, LXU, Inside Day, CF Industries, higher. Mosaic had pulled back. Baker Hughes, Energy. Baker Hughes looking for the follow through at highs right now. Baker Hughes.
As people start to understand and digest that these supply interruptions are going to be structural and are going to take months, if not years, to return to those pre-war levels. You would expect the curve to start to rise in the out years, and we haven't really seen that yet. It's only recently started to come up.
Would you make a lot more money if we're at $100 or $150 oil?
So if you think about our business, like we have these very long-lived, which means that our production declines a very little bit each year, and that
Q's still trying to bounce.
There's a lot of our asset base left, whereas most of the industry is declining at 30 to 40%.
S&P futures. S&P futures. A little bit of short covering, but didn't follow through. I see the same thing on the New York Fangs. I don't see any reason to do anything. Unless we get some sort of movement in the next hour and 25 minutes. We're done.
Still ahead, why AI won't replace investors as defense spending and data center demand reshapes markets.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardas and connect with me on LinkedIn or Instagram.
Okay. S&P.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus.
9%.
With robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization.
This reminds me of 2018. The midterms. Except it's happened a little earlier. You got this over here, February, March. You see this move in February, March 2018? That was when Trump put tariffs on washing machines and solar panels. Remember that? Midterms were later that year in November. We dropped 12% and then 16% after a quick bounce. Total was 20% from top to bottom at the end of the first year of Trump's first term. So we're already seeing the volatility that we had back in 2018, similar during a midterm election. Not forecasting, but the things we're seeing, not too unusual, especially as it relates to oil and gas. People are all bent out of shape about oil and gas, but yet we've had plenty of both presidents, Republican and Democrat, with oil and gas well over $100 a barrel for extended periods of time, and yet the markets moved higher during many of these years. During the end of the Bush term, the markets moved lower, higher than Obama's year and Biden and Trump's first term. And now we're pulling back in just shy of 10% on the S&P 500. Still looking for this bounce that we usually see in the month of March.
Been through so many different times when they've talked about some disruptive new technology was going to be increasing productivity, destroying jobs. But this is a productivity tool, and used correctly is going to be very important for so many people, but doesn't replace judgment. We kind of think about it like an autopilot on an airplane. 50 years ago, obviously, they didn't have any pilots. You just had to go by stick the whole time, even if they went across the world. But it can be used for a significant part of it
has to be applying this AI, this knowledge, this speed of knowledge, which is really a great benefit. And as your previous guest showed, you know, you can use it and you can use it to increase the productivity and get return from your investments, which we think is really going to be important. You know, the thoughts, your previous Tom was talking about how people were so upset about in the SaaS space because they thought that AI was going to basically eliminate things. It doesn't eliminate things. It creates more opportunities.
And I think about, you know, what AI does is you noted, look,
S&P just sitting here doing nothing.
think it may help with expediting supply chains and things like that, but it doesn't replace all human, you know, thoughts and analyses and all that, right? I wanted to also get to your thoughts on energy names as we're seeing oil here just below $100 a barrel on WTI.
Well, you know, certainly the conflicts that we've been seeing have made it very, very important that energy independence, energy capability of having it when you need it is going to be very important. But Hank Plum and I have over the years realized that it's very, very difficult to go predicting commodity prices and events that might come through. This last week has been a great example where you had even a hint that things might calm down in Iran, and all of a sudden the market went up dramatically. And then when people are concerned that it's not going to happen as fast as they thought, well, then the price of oil goes up and the stock market goes down. So we look at companies to see who is really going to benefit from this trend, but not necessarily depend on us predicting what the price of oil is going to be next week or next month. You know, a company like Phillips 66, for example, why not look at a company with capacity utilization is the key variable? Find the best domestic refiner out there, pays a 3% dividend, and they basically grow that dividend at least 7% a year. And it looks like the capacity utilization for refining, marketing, distribution, and transport is going to continue to be a big paramount importance in the United States and around the world.
Yeah, understood. There's Phillips 66.
Understood.
Great chart that is, up 2% today. Looks like it's hitting a 52-week high without a doubt. 24 Asset Management has been noting that, look, this volatility can persist for months, and they've actually sold some of the higher beta parts of the portfolio, put it into cash-like products. Are you doing some of the same?
Well, you know, I think one of the things that happens is when the market is challenged, and it is going to be challenged here until we get through some of this stuff. But if you look at
Netflix at the low at the evening session, Microsoft trying to turn. Markets are just susceptible to anything. We could see some short covering here with an hour and 17 minutes to go. We could see a dump further. Seems like we're a bit extended to the downside, but off 9% on the S&P from all-time highs.
So this company was about 4 or 5 years ago had 3 different entities. They decided that they wanted to focus on the growth company, which was the airline afterparts. So they distributed and sold segments. So for a number of years, you saw no earnings grow. Then they started making some acquisitions and expanding the businesses once they got it. For example, Pratt & Whitney Canada, they are now exclusive supplier for many different parts of those companies. So this company, every time that they make an acquisition, the stock starts to look like it's pretty attractive. And then they announce that they have to do some financing and you get a chance to buy it at a correction. Right now, the stock is down from its highs, still up dramatically for the last year and the last 4 years. But we think that you still have this trend going forward, and they're going to continue to take this trend, which we love, is organic growth, revenue growth, increasing margins. That means your earnings are growing faster than your revenues. And then because of that, you get PE expansion because the market appreciates companies that are growing both their revenue and their profit margins.
Yeah. Tom, thank you. I know you had Modine Manufacturing in there too, MOD, and we already talked about VSEC and of course Phillips 66. Tom Plum, great to see you, portfolio manager of the Plum Funds. Thank you. Coming up, who's feeling the squeeze as energy costs surge and consumer sentiment slides, putting growth and rate cuts at risk? Well, we'll discuss that. Our panel is standing by. Watch list, we'll be right back. The final 90 minutes of the trading day, that's when markets make headlines and traders make decisions.
From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings.
Live coverage of the close every single day. This is Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
Meeting may resume in less than a minute.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Hey, investors, you know the market moves. Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Sam Barnes, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
No relief. Nvidia still looks weak. So does Microsoft, Apple, Amazon, all pulling back now. Netflix pulling back. Doesn't feel. I don't know. It doesn't feel like capitulation, does it?
Understands the path that the House Republicans are pursuing, saying now the House will vote on temporary DHS funding as soon as possible. So we'll wait to see any headlines on that. Of course, the president also had plans to sign an executive order on refunding the TSA. So we'll wait and give you any headlines there. But it does say here that he spoke to the president a few moments ago. Rebecca Walter, how are you feeling about this market and what it means for some of the prints that we're about to see, whether it's inflation or GDP or jobs?
Yeah, Nicole, I think we have something that's in common. So when we saw the consumer sentiment Michigan survey, obviously going down, our worst read since December 2025. But what's really interesting, we saw both middle income and upper income really participating in the downward sentiment. Unlike this K economy where the lower income has felt this hard go of it for a while. But now with stocks. Households that actually have stocks are actually.
It appears people are just throwing away shares. I just can't believe some of these stocks that are moving lower. Netflix looked like that was going to follow through. No follow through. I don't know, folks. Nvidia just feels like people are throwing shares away. Nvidia's at new lows. Nvidia below the 20 EMA. Apple looked like it was going to go. That reversed back down. Now it's coming back down to the lows from last week. Amazon, new lows for the week. Broadcom, chip stocks, off. SMH, off. I mean, what usually follows extremes in one direction is a move back in the opposite direction, like over here, when semiconductors dropped off March the 9th and then reversed back up. Everybody's been talking about the S&P needed to pull back. We finally get the pullback. Okay. That was what, a 20% pullback right there? The April pullback from 1147, 21%, roughly 20%, right? So something like 20%.
For Economic Cooperation and Development, they said that for this year, they're expecting that inflation is going to be like 4.2%. Most of that, though, is because of food and energy prices. The core is unlikely to be affected. In fact, I'm more concerned about the growth effects of high oil prices than I am about the inflationary effects. The inflationary effects tend to reverse rather quickly once there is some sort of resolution, which I expect that we will see one before the end of April. But of course, I could be wrong. That's more up to President Trump than it is to me. But it's more, what are those longer lasting growth effects? Because consumers now, they have to reallocate their budgets. They either have to dip into the savings that they would put into their accounts, or they have to increase their credit card debt, reallocate away from discretionary spending. So the longer this lasts, the worse the growth effect than the inflation effect.
All right. So you did say here in your notes that now for investors and policymakers, patience, diversification, risk awareness seem to be some of the best bets at this moment. Rebecca Walter, are there do's and don'ts for investors today? Yeah, I mean, I would say to his point as well, behavioral finance don'ts, like don't panic sell. Take a breath, take a pause. Patience is a very key concept. That's not to say that perhaps a lot of people think, Nicole, that they have high risk tolerance when everything is going to the green and upside, up and to the right. Everyone's got super bullish sentiment and very high risk tolerance. Once these things start to go down and their confidence gets shaken, maybe their risk tolerance isn't as high as they thought, and they might need to reassess their risk allocations to something that's a little less risky. That's a little bit difficult in a market where precious metals, which would be a normal safe haven, are going down as well because of liquidity concerns.
5 weeks lower.
Profits. Anytime you have an energy related economic event, it does become more difficult for the average Joe because they don't understand how long is it going to last and all the sectors that it's going to influence. Obviously, it's not just gas at the pump, it's your airline prices, it's all transportation costs, it's shipping, it's everything. Your deliveries to Amazon could get more expensive. So I would just say behavioral finance 101, take a deep breath, assess your risk, but then make sure you stay in the game at least somewhat, or otherwise you'll miss the upside and you'll get out when it's the wrong time. We were were talking about it earlier today when we were saying how in the Gulf War afterwards, Gulf War 1 and 2, one of our guests was noting from the beginning of the war to the end, afterwards we were up 30%, but you had to sort of play it out throughout the war. Do you have an ETF or a specific play, Brian, that works, whether it's bonds or a certain ETF or sector that you do like that you could recommend?
Yeah, so I can talk about what we've done here on our investment committee, which is in terms of we have liked energy and free cash flow generating stocks up until this point. Now that energy prices, oil price is up to 99, maybe it's at that point where President Trump is going to take notice and say he has to do something, say something in order to maybe get that price a little bit lower. Maybe this is kind of that line in the sand. And if that's the case, what we've done is actually tried to lighten up on our energy overweight, move it more back towards neutral or slight underweight, and then favor banks. So, there are a number of ETFs that are out there. We do really like some of those areas in which the financial sector, some of the deregulation that's taking place. Also, likely when we get through this, which we will, is that we're going to see that pickup in merger and acquisition activity. Plus, a lot of the banks, they actually thrive on some of the volatility from their trading desks. So it would not be too surprising if we see actually financials do well coming out of this. And maybe we're getting closer to the end than we are towards the middle or even definitely the beginning.
All right. Well, thank you both very much. We're really right around these session lows. Excuse me. With oil at $100, Brian Jacobson, Rebecca Walzer, thank you both. Stocks are down 5 weeks in a row. The Dow Jones Industrial averaged down 726 points as oil moves higher, and right now the S&P is down 1.5%. So keep it right here. The sell-off continues 5 weeks in a row. That's the longest streak since 2022, folks. And now it's weekend. We'll see what we have on Monday morning for you, but don't go away.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash.
All right, S&P just sitting here, just watching.
And enhanced security features to keep your money
Back down to low.
Because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Higher rate of change in sales based on the guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would be on?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years. We're opening up houses, opening up our business, having children. They've always been there for us.
I want to invest in the company that can help me give my family a happy.
Stay connected to what moves the market. Download the Schwab Network app and stream anytime wherever you are.
Was a little bit of short covering there for a few minutes. We just resumed this fade.
Happy Friday. It's 3 p.m. on Wall Street, and this is Market on Close. I'm Marley Caton, coming to you live from our Chicago headquarters. TGIF. I'm Sam Bottoms, coming to you live from the floor of the New York Stock Exchange. Let's take a look at what is coming up on today's show. We'll look into the world of stock picking and break down what you should be looking for in the fundamentals of a company before adding it to your portfolio. Later, we'll check in on energy as oil prices are hovering around $100 a barrel once again, and it's showing no signs of slowing down. And today's overlooked stocks is Argos as shares
Bitcoin at the lows.
30% on the day off the back of strong earnings.
Yep.
You need to know about that coming up later in the show. But for now, Marley, walk us through what you've been watching today.
Well, first, Sam, Netflix in focus after announcing it's raising prices for the second time in just a little bit over a year. It's raising prices for all three of its plans in the U.S. and Canada. It does affect any new members and also existing members with an average increase of about 11% across the product suite. Now, analysts do seem very optimistic about the impact of these changes. We'll break down the notes that came out today shortly. But I've also been watching Carnival today as shares are falling despite posting record first quarter revenue and it being the top bottom lines. The cruise liner said that bookings for 2026 are up double digits, reporting a record booked position at what they're also saying are historically high prices. But the company was forced to lower its full year EPS guidance as it estimates about a $500 million impact from fuel price increases. And lastly, Brown-Forman moving higher today after confirming it is in talks to combine businesses with Pernod Ricard. Now, the Kentucky whiskey maker says it could be merging with the French wine and spirits company, adding that any resulting partnership would be, quote, akin to a merger of equals and draw from the talent and expertise of both companies. Lots to cover there and more, but first let's check in with the markets as we're nearing the end of the trading day here. On the S&P 500, we're down about 1.5%, 63.77. On the Nasdaq, we're trading down almost 2% for this Friday, 23,153. On the Dow Jones, trading down more than 1.5% there as well, 45,229. And on the Russell 2K, down about 1.5% at 2454.73. As we take a look at the 10-year continuing to tick higher, we're now at 444. On the dollar, we are right at $1 there. On gold, we are at 45.30. That's up 3%. For crude oil, getting closer and closer as we head into the end of this Friday to $100 a barrel. We're up to 99.17 right now.
Low tech alert minus 800.
Low tech alert.
Moving lower, 65,975. That's 4% lower. I do want to send things back to Sam in New York, though, to find out what stories or themes or moves caught her eye today. Sam?
Well, Molly, if you're not watching oil, those yields, what are you doing in this market? Because they are very much driving the market at the moment, and everybody is just on it. So President Trump's decision to extend the Iran deadline is not doing much to bring down those oil prices, nor help stocks today. So markets continue to remain on edge, particularly with more headlines like Iran blocking 2 Chinese ships from Hormuz. Those yields have been pushing higher. The U.S. 10-year has been up in the high 440s today, the highest level since last July. As Colin Martin over at Charles Schwab has been saying, inflation concerns should keep yields elevated for now. According to weekly fund flows data, long-term bonds have their biggest ever outflows since March 2020. We continue to see this weakness in the Mag 7, and the technicals aren't looking that pretty. People are starting to call the group the miserable 7. Nvidia falling through 170 today and trading at its lowest forward PE ratio in the last 5 years. Alphabet has been on track for one of its worst months as well. The memory trade, though, is seeing some buyers stepping in after a tough few sessions. Micron trying to snap this 6-day losing streak here. The group has been pulling back since the company's earnings, turbocharged by Google's Turbo Quant update, but Wall Street analysts have defended that. So a lot to keep tabs on in this final hour of trade for the week, Marley, but I'll send things back over to you and Jenny for now in Chicago with some of today's top movers.
Thanks so much, Sam. Yes, Jenny going to talk about several of the stocks I was talking about at the top of the show. Of course, we have to start with Netflix. That affects pretty much everybody, I think, has a Netflix account at this point. And if they don't, they're likely getting one soon, but they're going to pay more for it.
They are, and I think showing you right now the power behind premium pricing. And frankly, when you have your premium products, you can command more and more of these price increases. So this does, of course, really that follow the news. They're raising their prices yet again for multiple of their subscription tiers, which is another sign, again, that consumers will continue to pay more for streaming overall. So updated their plans page late Thursday. Their standard tier with ads will now cost roughly $8.99 a month.
Low ticker at minus 800.
Standard ad-free.
Okay, we're moving lower.
They cost now roughly $19.99 and $26.99 a month, respectively. And they continue to offer this wide range of price points to then address this variety of needs. But this also does follow the price increases we saw back in January of 2025. But the company has, at least so far, been able to maintain a prominent position in these overall streaming wars. And according to the research firm Nielsen, Netflix was the second most viewed streaming service last month, only behind YouTube. And so other streamers have been also raising their prices. It's not just Netflix, of course. Paramount Plus did increase in January of this year. Apple TV was back in August of 2025. And both HBO Max as well as Disney Plus were October of 2025. But I do like to look at, like, historically where we've gone. We discussed this a bit on Next Gen, but I do think it's interesting where $7.99 for what Netflix knew for their only model for 8 years, from early 2011 through then 2019. And then since January of 2019, we've seen then roughly 8 price increases. So the thing that does feel like is definitely felt by us as consumers, but also, like, the market likes this, is the fact that they went from not really raising prices for almost a decade to then raising prices
S&P
12 to 24 months. So
making new lows.
Well, it certainly shows their power in the space as well, and just how big their moat is at this point when they're Netflix. I mean, they're the behemoth now. They've become the queen of streaming, or the king of streaming, however you want to look at it. And as far as any response from the sell side, are we looking favorably on this? Obviously, in the markets performing better overall than the markets today.
I mean, I would definitely say that I've seen nothing but analyst praise, and that's the disconnect of, like, me as a consumer, I don't want to pay more each month for basically what is now a glorified cable bundle wrapped into streaming. But I mean, the street seemingly likes paying more for, again, this premium product. And for a while, they were really shelling out substantial crap.
Low ticker at minus 800.
For obviously increased
More low ticks.
proof of content is definitely there. There's the dominant force of streaming, and it does not, again, bode well for us as consumers, but it bodes well to flex these premium pricing powers.
It doesn't help our wallets unless you're an investor in Netflix. But let's talk about Carnival Cruise Lines. These were pretty awaited earnings, one of the major companies this week that was left to report. They beat on the top and bottom line. They have record revenue, but we're still 6+% lower on the day.
Yeah, this, I think, was an overhang related to everything in regards to fuel costs. And so they did actually trim their full year outlook, as, again, these higher fuel costs did weigh on their results. Although, like you mentioned, there was still some record numbers in this report, like record demand bookings, and also just overall, like, they're able to boast now that they have bookings for 2026 up by double digits at these historically high prices, with roughly 85% of all of their voyages already sold. But that also then creates a bit of a problem, because obviously when you have booked capacity, you're locked into a certain rate, and then they have to figure out how to offset now these rising costs. And so higher fuel costs representing more than $500 million headwind compared to prior forecasts from the, of course, escalating conflict in the Middle East. The increased fuel costs will be partially offset by roughly $150 million recession. Like, if we use the early 1990s as a corollary, for example, the market was down 20% from peak to trough over a 3-month period, well before, the economy actually went into a recession, to the point on what the market's going to do in terms of discounting before what actually happens. And so it was down 20% peak to trough in the early 1990s. The U.S. is way less oil intensive than it was back then. And so that's where we kind of come to around, 15 to 17% drawdown. And if this is extended for 100,
Hedge flows continue to drop off.
If I could just add some color to that. Stocks were down when Saddam invaded Kuwait. So it wasn't as if nothing was going on. There was clearly an invasion. Oil prices, I don't remember exactly. They certainly were up more. Maybe they doubled.
150%.
150%. There you go. Thank you. So there was something going on that engendered.
Well, there's also negative earnings revisions, which you do not have.
That is the wild card.
Yeah.
In the whole thing,
You don't yet, which is why people are allowing themselves to try and look past this and believe in the bull case still, because you haven't had that yet.
And it's creating, when you think about that dynamic, you're getting these pullbacks and you're getting positive earnings revisions. So the valuation compression is just astronomical for a lot of these, sectors, names, whatever you want to call it, or look at. And I think that's very compelling think about tech. It went from a 25% premium to the market at the beginning of the year, now it's 4% premium. The tech sector.
The market as a whole, valuation is down, call it 10, 12.
It's at 19.5 times.
Yeah, we're call it a 14% correction in valuations. That's not the worst valuation.
No, but is it
pretty good.
Is it a false hope that earnings are going to remain solid, that you're not going to get lower revisions, that you're not going to get yourself into a scenario where oil remains so elevated that all of these input costs just continue to go up, margins get compressed, multiples get compressed, stocks get compressed?
Yeah, and again, that's
the fear.
Well, that's why we're watching oil so closely, because if gasoline goes up, retail price at the pump goes to 4. I mean, listen, I have it going to 4.25 in pretty short order, but let's say it goes to 4.25 and stays there, or even 5. I mean, listen, if this goes on, you're going to get the $5 gasoline. That has a worsening effect on consumer sentiment, by extension, consumer spending, input costs, et cetera, because of it's as I think my friends at Barclays called it, it's the persistence, not the peak.
Yeah.
And I think that's more than anything, obviously, what you have to keep an eye on. So yes, of course, if this drags on, but that's the risk. Everyone just assumes, and why I've been a little more negative of late than other people, is because I'm assuming that this is not, thank you very much, let's go home.
The proof will be in the earnings pudding.
Yeah.
Right? And we get earnings a couple of weeks.
Yeah.
The banks are going to start reporting. It's going to be, the numbers are probably going to be good because the numbers are going to precede, most of this. The commentary is going to be negative. Like, if this persists for much longer, it's going to be hard. You're not going to be able to give a great guide.
Yeah.
So I don't know what that's going to do.
There'd be no reason to give a good
I don't know. We were a little bit surprised last year at this time after Liberation Day that we didn't have companies completely pulling guidance, right?
That's
Like,
fair.
I think that was actually a really telltale sign of just corporate America generally right now. And I think on the earnings front, yes, we're a feel from the banks. We did just hear from them at a conference a few weeks ago, and everything was relatively positive. I think their commentary around what's happening with capital markets would be very interesting, just given the uncertainty overhang. But on earnings and on oil, from a direct impact standpoint,
A little bit of short covering.
oil prices really equates to like a negative 50 basis points hit directly.
Got 47 minutes to go. 47 minutes to go.
Digestible for the market, but it's really, to Dan's point, around the sentiment that it then has on just consumers and CEOs generally.
The other problem, you can point to so many different things that have people on edge. What's happened with tech, especially this week, has just been downright unsettling.
Yeah.
NASDAQ's in correction territory. Will it close there? Christina Partsinevelos is on closing correction watch for us, and it's been a tough week for some of the biggest names.
Oh, no doubt. And correction watch just means a 10% drop from the Nasdaq's most recent 52-week high. We're there right now. The Nasdaq 100 in particular hasn't touched an all-time high in 102 sessions. Its longest stretch since 2023. The biggest drag, to your point, Scott, is big tech. Microsoft, Meta, Amazon, Nvidia. Names that once seemed to stop on
Yeah, tell us all the obvious things. Tell us what is working, though. Be nice to tell us what's working. Focus on what's working, like consumer staples. Consumer staples is working. We all know that tech is down. Consumer staples is working. Utilities are working. Energy. The saving grace. Energy continues to ramp higher.
Semi stocks are now a new point of weakness for the NASDAQ. As Christina was just telling us, BTIG's chief market technician, Jonathan Srinsky, joins us now with more. And your note got us thinking when you suggested now those are vulnerable too. Well, we can't have that.
Hey, Scott. So semis, really are kind of the last man standing outside of, what you mentioned, the war-related stocks like energy and chemicals and things like that. But, and semis are really important because they're the biggest industry 500. We have the biggest name in the world as a semiconductor, NVIDIA. And I think what you had happen is, even within the semi space, so NVIDIA really stopped going up in July of last year. It did make a new high in the fall, but for all intents and purposes, it had gone sideways since July of last year. And then as NVIDIA and Avago peaked out, you had the memory names kind of take the baton, and they kind of went parabolic. And so you had this rotation within semis that kept the semis as a whole as that kind of last man standing. But now, since the Micron reporting, that was the key tell. Micron had blowout earnings, a little over a week ago, and it's been down up until today every single day, around 20% decline following those blowout earnings. And I think one of the biggest tells in the market is when a stock can't go up on good news. That's a pretty important tell. So we have semis that we think are vulnerable broadly. NVIDIA, $170 is a massive, massive support level. Basically, anything above 170 over the last 9 months, any buyer is now underwater. So there's a lot of distribution going on within NVIDIA, and that's the biggest stock in the whole world. So we just think there's a lot of vulnerability as kind of these last, the generals, if you will, are starting to get shot here.
And something to keep an eye on. There's no question about that. Jonathan, thanks for jumping on with us. Appreciate it. And reacting to the note that got a lot of people talking. Jonathan Krinsky, so I come back to our here, having tech. I mean, the market just can't afford to have a sharper move lower in tech at a time where the broadening market's not going to do anything as long as oil prices are elevated. And now we're talking about recession and inflation again.
Yeah, I mean, we talked about this probably a month or so ago, thinking the talk when semis were still leading the market. And I think usually this is what you tend to see, though, right? Like as these market corrections tend to unfold, what tends to be the last thing that's sold is those highest quality outperformers that had been.
Okay, Netflix is catching a bid here. Netflix is catching a bid off the low, a little bit of short covering. Wouldn't get too excited. It's still inside of this consolidation zone, above the pivot, above the gap. So we're looking for Netflix to eventually break to the upside. Netflix catching a bid. Looks like short covering.
Sector as a whole, the XLE, for instance, I think is making new lows. The action is not good in the market.
That's why I suggested you can't lose the semis. If you're going to lose semis while you've already lost some.
Walmart.
Microsoft and Meta and Nvidia trading like garbage.
Terrible charts. I mean, Meta, I know you spent some time about it. These charts do not look good. And those of us that sit on desks, the action in the market doesn't feel good. It doesn't look good. There's a lot of again, I keep coming back to this. I get it. There's fundamentals and technicals, and Krinsky's great about this stuff. But at the end of the day, there's a lot of nervousness about what's going on over there.
Are there things out there that you do like? Like there was a contrarian call today, I think, from Bank of America and their flow show. It's like their contrarian long is consumer. Because again, if you believe that, then you don't believe this is going to last that long, and you don't believe that gas prices are going to remain so elevated. And we're going to look past this sooner rather than later, and we'll be right back to telling that good story about why everybody was all pulled up in the first place.
Yeah, I mean, I think the way that, like, the contrarian that we have would be in financials. We still are recommending that sector. It's the worst performing sector year to date. I mean, the performance differential between the worst and best sector is 50%.
Netflix.
Right? So this is creating, unless you think energy has legs from here, like if you think oil is going to stay very elevated, I mean, we would be taking a look at that in terms of that run. But financials really stand out to us. I think, you still have the deregulatory agenda that could benefit for these companies. And as it stands right now, we haven't seen that pullback in CapEx. Now, that remains to be seen as it relates to what happens with the board and CEO confidence. But we feel pretty good about that.
Last point to you. You agree with that? Financials, the contrarian.
Yeah, I think the question is when this ends, what should you be long?
I know, but the thing is, though, people like to think about the market is going to move when it senses that this may end. The market's going to move ahead of a declaration of over.
But so you're going to miss the first. You're not going to buy the bottom, and I don't think the viewers of this show actively trading should worry about hitting the bottom. And if I told you, by the time we bounce, the market's going to be off 13%, and it's going to go back to the highs in 4 months. But at the bottom, you're going to miss the first 2% up day, but you can catch the next 10%. That's fine. Don't worry about catching the bottom. Don't be a hero. Nobody needs a hero. Buy when the market's up 2 or 3%, and you've got the open year. You'll be fine. Believe me.
All right. We'll leave it there. Be fine. Believe it. Believe it. And you need to reach him if we're not. You'll just find him here probably coming up.
I can give out an email address, but I won't.
Happy thanks, Dan. Thank you. We'll see both of you soon. We're going to go down to D.C. now. We are on shutdown watch in hopes for any positive news to end those maddening TSA lines at the nation's airports. Emily Wilkins has more for us.
All right, Scott, we got good news and bad news. Good news for those TSA lines is that President Trump has gone ahead and signed an executive order that will allow TSA agents to be paid. This is not using anything that Congress has done, just current funding that the White House has. So that should be implemented. Hopefully start seeing the impacts of that soon, which is good, because bad news is that Congress does not seem any closer to ending this shutdown and fully funding the Department of Homeland Security, which, remember, that includes FEMA, that includes the Coast Guard, that includes cybersecurity. All of those could remain unfunded now for potentially weeks, and that's because the House has rejected the plan that the Senate passed earlier today. Instead, they are going to put forward, and likely before the end of today, vote on a stopgap measure that will keep the Department of Homeland Security fully funded through May 22nd to give them more time to work on a deal. However, while that might be able to get through in the House, Senator Chuck Schumer has said it is dead on arrival in the Senate. Remember, senators are gone. They have left Washington, D.C. They could be called back, but even if they are, there's not the votes needed to actually pass this plan that Republicans have come up with. So at this point, it's just not clear exactly what the solution is to this shutdown. There was a lot of optimism this morning that the Senate had a breakthrough, but at this point, the House has said that they cannot go forward on it. Listen to what Speaker Mike Johnson said about the Senate proposal just a few minutes ago.
The Republicans are not going to be a party to this. They've taken hostage the funding processes of government so that they can impose their radical agenda on the American people. We can't have any part of it. This gambit that was done last night is a joke.
Scott, we'll keep following this issue. We'll see if lawmakers are going to be going on their scheduled 2-week recess, or if all of them wind up back in D.C. continuing to work on finding a solution here.
All right. Sad and sorry beat goes on. I guess that's the bottom line. Emily, thank you very much for your reporting. Emily Wilkins. We're just getting started. Coming up next, debating the odds of a rate cut.
We got 37 minutes to go. 37 minutes.
Dallas Fed President Richard Fisher tells us what he thinks the Fed's next move could actually be. We'll join us after this break.
Saying, here I have all these tools that are available to me, and ideally picking the one that best expresses the view that you want to.
And you also cited some really interesting data from BofA watching their flows research. We've seen ag likened to the trading of like to a roller coaster ride. The rallies are short-lived, or just hold on to your lap bar. But BofA highlighting that we are seeing a record amount of capital move into technology.
I had to refresh my screen.
I actually reread it twice, and then not that I didn't trust you, but I did do a confirmatory search to make sure that it was correct before I started writing my questions to talk to you about. How do you square that with the markets when we are on this roller coaster ride and we can take hold today?
So I did the very same thing, and I don't have the same journalism background that you did, but I was skeptical. Then I looked at how much de-risking specific to tech occurred in the second half of 2025 and early 2026. This data is coming from one big bank, so you've got to take it for what that's worth. But I do believe, and there was another sort of visual I shared that augmented this with respect to insider buying specific in technology names. So how do I square that? And we have that up for the viewers here. Now, just to be clear, this is not the BofA data that you're looking at. This is insiders in companies that are part of the XLK, that's
I got to get this, folks. All right. Sorry about that. I had to catch the phone. All right. We got a little bit more than 30 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Friday, March the 27th. A little more than 30 minutes to go.
By the way, he's a serious economist. He's not just.
All right. Netflix is trying to bounce a bit. S&P is still drifting a bit lower. Tesla is showing a little bit of short covering. Tesla.
Says and votes for. He's obviously way out on a limb. But yeah, they're a tough spot. And I think the fog of war, the uncertainty that surrounds him, is calling for a pause. I don't think they'll raise rates. I don't think they'll cut rates.
I mean, part of the problem is as I suggested earlier, is their mandate is in tension significantly. Again, they thought they had the ability to start moving away from the great worries about inflation and only fixate on the labor market and acting as such if that started to unravel even further. And here we are back worrying about inflation again.
Yeah, and this is an awesome job. It's a difficult thing to do. They're taking it very seriously and trying to be non-political.
Netflix off the low.
You're on the horns of a dilemma here, but clearly there is uncertainty, and I've said 100 times with you, Scott, and others, you cannot. It's an enemy of decision making. Is uncertainty. They just have to wait and see, try to navigate through the fog, see what's going to happen, do their best. But right now, it's almost impossible to make a decision.
You think the market's over at skis on the idea, albeit small still, that there could actually be a hike next?
Yeah, I do. And it's still the 24% probability, as you mentioned, but I think they must be a little bit over their skis on it. They're just worried. Market participants are quite worried. And I think the Fed needs to be a steady hand here. And the best way to do it is to express your take on the situation, your understanding that it is uncertain, and just to be true to the values of the Fed, and that is to be a steady hand. Let the markets be volatile. You're a steady hand.
What if I came back at you and I said, okay, I hear you on all that. It makes perfect sense, but I'll raise you, so to speak, productivity, which could allow the Fed to run things hot and at the same time give them the ability to cut rates because of this surge in productivity, which we already know is here and is only going to get greater. Does that not make sense?
Yeah, I think, well, first of all, productivity is an offset to cost increases. Tariffs are a cost increase. The price of oil, of fertilizer.
Snowflake coming off the low.
And I'm glad we have this productivity surge. Otherwise, we'd have a greater.
Tesla coming off the low.
But I think it's a bit of an offset.
Tesla.
And you make a good point.
Apple still pushing lower.
To the pressures that are now leading to higher.
At the 200-day moving average, Tesla. Apple.
Powell says he's not going anywhere until this investigation's over. It's going to be really interesting. I mean, it has implications for Kevin Warsh and the whole thing. Can you tell me quickly how you see that, given this new development from the Fed chair? Pretty definitive. I'm not going anywhere as long as this investigation's open.
Well, you have to protect the integrity of the institution and its independence. And as I said elsewhere, the problem with what Ms. Bureau has done is she's opened a can of worms, and you should never do that unless you kind of go fishing with those worms. And right now, she's just delaying what's happening to Kevin Warsh, which is unfortunate. I think Tillis will work the committee, start the hearings earlier than one would have expected. He'll be ready to go, but this thing has to be resolved. And even Tillis agrees with that, and other members do too. He said they have at least 8 Republicans that support him on this. Unless this is resolved, it's finished, and as Powell said, it's totally transparent. He's going to be here for a while, and he will also be the head of the FOMC. Remember, the Federal Reserve Chairman is not necessarily the head of the FOMC, which does the interest rate decisions. That's elected by the members of the FOMC, and he could stay on as long as he wishes in that position, in my opinion.
Sure. The Senate's preoccupied, too, by this war that we have been talking about impacting the markets. Richard, we'll talk to you soon. Good weekend.
Just remember, Washington is Hollywood for ugly people. And you can see it right now.
We'll see you soon.
Bye.
That's Richard Fisher, the former Dallas Fed president. Quick programming note, by the way. We've got BlackRock's Monday at 3 o'clock right here on the closing bell. He made the case this week to cut rates. We'll drill down on that more on Monday with Mr. Reader. Still ahead, Cyberstocks, as Christina was telling us about earlier, getting slammed today. We'll tell you more about what continues to weigh on that space. And is it justified or not? The bell will be right back.
ANNA.
the perspective of a guy who's also
Oh boy, this is so boring. Markets that don't move. S&P.
okay, great. So you're a Barron's Investor Circle member. You decided to invest X amount of money. How much money are you investing? What percentage of your overall portfolio is?
I want to put money to work. I just don't want to do it until we see a nice reversal. Similar to what we saw back in February, March, April. On the April reversal, great time to buy rally, where we moved that big white candle, 13% move in a week. This looks like it could keep going. What we did the week of the April rally, we had this big red candle, and then we opened the week, dropped to a new low, and then reversed right back up to end the week much higher than the previous week. So that's what I'm looking for. Right now, we haven't put in, we don't see that capitulation low, which is what that was right there. That white candle there, when we hit 48.35, that opened up the week and we dropped and then reversed.
But the fact is that this shock may only last another few weeks. We don't really know. So the real issue is it going to be structural or is it going to be temporary? In the case of Vita Coco, what I liked about them was last year, in the midst of the initial tariff, well, it wasn't a scare, it was a real thing, they managed to mitigate $14 million of tariff costs by very cleverly rerouting their supply chain so that the coconuts that were arriving in the U.S. were coming from countries who actually were subject to much lower tariff regime than other countries. So as far as oil costs, fuel costs and tariffs and so on, I think it remains to be seen. Certainly, unfortunately, Vita Coco is down about 4 or 5% year to date, and Coca-Cola, not to be confused with Vita Coco, is up about 9%. I think Pepsi is up 11%. Why? Well, first of all, there's basically it's a consumer staple, it's a beloved household name, and they are mostly immune from tariffs.
Interesting. The consumer staples trade, I want to talk about that because that felt largely like a catch-up trade at the start of the year. I'm wondering if, as you look across stocks and you pick them, whether the pre-Iran war playbook is the same as how you're looking at stocks right now. I mean, can we go back to that?
So again, it goes back to what I was saying earlier. So I like to look at companies from the perspective of free cash flow, revenue growth. There's something else I didn't mention, which is valuation. That is what the forward price earnings ratio might be. Now, I think it's pretty clear to anybody watching us today that valuations are going to be a lot lower than they were 4 or 5 weeks ago. And so I think that you could probably pretty much, I think pretty much take hit a dartboard and come up with 4 or 5 stocks as valuation.
All righty. So, yeah, that's what we're looking for. We're looking for that reversal week. Maybe next week we open up down another 1 or 2% and reverse. I think that's probably something near what might happen.
Discipline, there's patience, and right now, yes, it's definitely a stock picker's market, but it's also, there's a lot to pick from because there's lots of valuations that are very, very attractive.
That's right. A lot is on sale at the moment with that multiple question we've seen. It's just picking the right one. When a lot of it looks attractive.
Everything is oversold, extreme oversold.
Coming up next, we're going to turn our attention to the Mag 7, more specifically to Meta, which is continuing its free fall. Lower shares now down 11% this week. That's next on Market on Close. decisions moving markets. Morning Trade Live breaks down the macro moves from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Low tick alert minus 800.
Experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Okay, making new lows here. S&P is making new lows. Okay. More downside.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Hedge flows continue to drop off.
He had an emerging tech and consumer choice center. James, great to have you back on the show here. You know, Meta down 11% this week. They're about 32% off of their all-time highs. This week's move, much of it tied to these back-to-back verdicts that they got. You know, I want to focus on these legal developments here to start, because particularly the second verdict that involves the product design being able to be used as an argument for personal injury. How important and potentially fundamentally transformative could this be for the entire social media space?
Thanks for having me, Marley. I think you cannot understate enough just how important these lawsuits are for impacting how companies like Meta, YouTube, TikTok, etc. are designing their products. Because now, whereas in the past they might have had Section 230 to cover them because, again, people are bringing lawsuits over the kinds of content that was there. Now this
We got 16 minutes to go. 16 minutes. I'm your host, Cousin Vinny, coming to you from thecloverleanprint.com. Friday, March the 27th, 3:43 p.m. Markets are drifting lower, taking out the lows here.
which means that users are going to ultimately change how they're interacting with them. And that just impacts the entire ecosystem. Even shows like yours, you're promoting it through things like YouTube and Facebook, right? And Instagram.
Campbell's Soup turning back up. Campbell's Soup turning back up. Molson Coors also turning back up after a little dip. ABCD pattern.
That's going to have a negative impact. That's going to be felt not just for the platforms themselves, but for all the other products and services that go and actually overlay and interact with these things.
And James, when you look at this stock, I mean, I know that you're not a sell-side guy or a technical guy, but when you look at Meta's performance, I mean, it's the second most oversold level since it IPO'd, and a lot of that has been based on the narrative and the story behind it. So where do you see this going now for this company? Because a lot of that obviously factors into the performance of the share price here.
Yeah, I think that what's happened here isn't certainly going to help matters. It's going to certainly, I think, make investors skittish around what the future prospects of Meta look like should this kind of legal theory go lawsuits were certainly, I think, like a shock event. But let's not forget, too, a lot of investors have also been increasingly skeptical of the sheer amount of capital that Meta is putting into its investments in artificial intelligence. And they're not
Low ticker at minus 800.
More low ticks, more low ticks. Dropping off more.
Artificial intelligence. And while the company has developed good AI products, the adoption and its relative place within that AI race ecosystem with its other competitors, it's kind of, lagging, if you will, right? So I think it's a fair question from investors when they're looking at this and trying to figure out for a company that's been historically profitable, well, what's the actual move here? Where's the payoff, right? So I think that that's going to drive a little bit of skepticism, and they want to go and see the results. And if they see some turnaround from Meta, then I think we'll go and see this kind of straighten itself out and the company rebound.
And James, I'm glad you brought that up because the AI spend concern has certainly been a focus here as well as their number came in so meteoric. I remember when it came across, I actually double checked it to make sure that the number was right. And they're not considered really the leader in AI. So as they have that CapEx concern here, they're also announcing layoffs across some of their other business units, particularly the metaverse. They're
IWM.
now in conjunction with this potential legal risks that are mounting here, could we potentially start to see a slowdown?
Small caps back to the 200-day. The Qs below the 200-day obviously continue to ramp down. Dow Chemical. Looking for a follow through next week. Dow Chemical. This one, Grover mentioned that one earlier.
Social media oriented companies that might be trying to play in this space like Meta or TikTok or Google, for example, that have products that do leverage AI but are also social media platforms in their own right that are now being exposed to increased liability if this kind of legal theory does prevail. Now, again, like I said, when it comes to artificial intelligence, I think it is important for people to remember that while AI certainly did go and play a role in some components of social media, AI is vastly more things than just social media, right? It is going to be the things that are transforming healthcare, transportation, the way that we're communicating with one another, in our workforce, more broadly speaking, right? So there are many more use cases for AI here that I think will not go and lead to any kind of downturn in how people are investing in that particular space.
So if the street is freaked out right now about some of these high
Baker Hughes at the highs. ExxonMobil. ExxonMobil, Chevron, all of these energy stocks are just going straight up. Conoco, Phillips, Devon Energy, Apache. Man, look at that Apache chart for the last 15 trading days, 14 trading days. Just every single candle is bullish.
Deliver value to commercial kind of users and the government more broadly speaking. We've seen Grok, we've seen OpenAI, Anthropic, although not before its recent legal troubles of its own, having also notable contracts with the federal government and state governments, etc. Right? So I think if Meta is able to go and figure out how to develop these products further so that they can penetrate those markets better, then I think that'll go and I think deal with some of the concerns that investors might be having here with the spend levels.
Got it. James, thanks so much for your time today. Happy Friday. Have a wonderful weekend. Always good to chat. Tech with you, James Janowski, who's the head of Emerging Tech Consumer Choices Center. Coming up, it's time for Overlooked Stocks. And George Lewis has his eye on Arden as shares rally to a new record high today. So he'll break this down the news you need to know about that coming up next on Market on Close. I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
Enter
Enterprises. Right up. It's where I get all your office supplies. Your golf balls, your fancy coffee, giant TV, everything in one place.
All right. Energy is good. Consumer staples is good. Utilities are good.
Trade, get full service wealth management, and anything in between. I think I'm going to be sick. We have to buy that now.
Invest your way.
American Electric Power. Okay. Dominion. All these energy stocks look okay. AWK, American Water Works, off the highs.
Welcome back to the Market on Close. Let's have from the floor of the New York Stock Exchange. It's time now for Overlook Stocks. Shares that are going to soaring today after two new record high after the company's latest earnings report. So let's get more on this with George Ellis, Senior Markets Correspondent. Just walk us through the details, what this company does, what the earnings said, and the reaction we're seeing today, George.
Well, this is a good one. I think this is an interesting company, Argonne, in the context of what's happening with electricity. It's an engineering and construction firm. They primarily focus on power generation projects in the U.S., UK, and Ireland. So they do everything from planning, construction, commissioning, as well as large installation of power contracts, as well as connecting communication centers with the power grid. So one of the things I noticed about Argonne is they compete with some of the bigger players out there like AECOM, ACM, as well as Fluor. But this name has actually performed exceptionally well over the last year. It's up about 400%. And I think it has to do with the fact that it's not an engineering construction firm that is really broad-based. It's very narrow, and it's very specific to power generation, which, as we know, based on hyperscale and AI demand, has been a tremendous mover in the last year. And that's the case with Argonne. But they're justifying it too, by the way, irrespective of the price move. They continue to move the needle when it comes down to earnings, sales, and backlog. They did post EPS numbers on a GAAP basis of $3.47. So the estimates were $1.98. So they beat the estimates by about 75%, which is quite meaningful. And that number was also higher by 56% compared to the same quarter last year. And sales increased to 13% year-over-year increase to 262 versus 255 million. So they seem to be generating not only an increase in sales, which I would say is modest, around 13-14% based on year-over-year comps for the quarter, but the EPS numbers were a blowout. And I suggest that they've got a lot of pricing power in their model structure. And at the same time, I think one of the other primary catalysts for this just continuation of a nice move is the backlog.
S&P, Netflix. All right, a little bounce, but not much to look at. We got 6 minutes to go. 6 minutes to go.
Sachs did raise their price target to $5.18 as well.
Okay, so the analysts do like this stock. I mean, it's been very much rewarded over the last 12 months or so. I can see it's at what, like 360% or something like that. But I'm also just looking at it sort of compared to its peers too. I mean, it trades at 66 times forward PE. I mean, what does that tell you versus some of the other competitors in this space?
Well, I think the other competitors, like I mentioned, like Fluor and AECOM, their stocks haven't performed as well because their businesses aren't just concentrated in power commission or commission power centers. So I think that's what's specific about Argonne, which makes it very unique. In other words, it doesn't have again, in times where their electricity markets aren't doing well, that would be a concentration risk that they wouldn't necessarily generate a lot of return on investment of. But right now, the case is electricity demand is huge, and this company is very narrow focused on electricity generation projects. So they're in the right place at the right time on a secular basis. Again,
All right, a little short covering here at the end of the day.
The earnings estimates, they're continuing to rise. The earnings for this year, $9.56, $11 for next year, $14 in 2027. That increase is a manifestation of that backlog. So again, on a trailing
High tick alert plus 800.
High tick alert, shorts covering. High tick alert, just shorts covering.
It reported good news and a bad tape, especially with a company that has a market cap that is, in this case, around $5.7 billion and a float of around 13.7 million shares. So low market cap also, I suggest, is exacerbating this move for AGX.
Yeah, and I mean the insatiable need for power, particularly coming from the data centers. I see that it's supplying the PJM.
Got a little bit more than 3 minutes to go.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smartly with Schwab.
A little short covering there in the day. Not much of a rally. We got 2 minutes to go. 2 minutes to go. So hopefully we'll get this capitulation over with soon, because I realize some of you are stressed out. Market's doing its thing. A lot of people are not used to these kind of pullbacks.
So far year to date, Apple is down 8%, Nvidia is down 11%, Amazon is down 12%, Alphabet 30%, and Microsoft 25%. So the S&P 500 has outperformed every single one of the big five companies. Those big five companies are a sizable portion. We're talking 20-25% of the index. On a good day, just from those companies, and you've been able to see them.
Okay, got a nice little rally off the low right now. Netflix popping up a little bit more. Netflix. All right, trying to get back above VWAP. 30 seconds, 30 seconds.
Certainly got areas of the market like energy that have done well, and the overall realized volatility is still not that high, Marley. Because the mega cap tech names have disappointed, just pull down everything.
Yeah, and Alex, I was looking at the S&P there, but the Dow is now we're down almost 800 points. The Nasdaq into correction territory. I think it went into correction territory yesterday. Still there, obviously today worse, pulling back even more. What levels are you looking at there as we get closer to the close here, about 40 seconds out?
Yeah, when I look at the S&P 500, really going down to
300, which is where we're closing in on, seems to be a pretty critical level. This would be a point that was pretty significant going back to May of last year. And it's also an area where we're starting to get into recovery zone.
All right, folks, I'm out of here. Have a great evening. Take care. We'll see you on Sunday for the weekend video. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Friday, March the 27th, 4 p.m. straight up, the closing bell. Have a good one. A little bit of a disaster for the Bulls this week. The Bears did well. Have a good one. Take care. We'll see you on Sunday. Ciao.